So, how are you all doing? Doing great? Excellent. So, all of you are ready for a long day? Yes? Excellent. So, you all are pretty much aware of the purpose. So, today we are going to give a entire revision of strategic management. So, we'll try to cover most of the concepts of the entire strategic management, and we will try to brush up our basics that we have learned. So you have to cautiously keep that thing in your mind that it is not that entirely we are going to discuss the subject. We have to be very careful that we are going to have a quick revision of a thing, right? So when we are discussing the concepts, you people also try to travel along with me. So it will be wonderful if you are trying to give some replies and responses for the questions, or when we are revising the things, then the session will definitely go well. So hope all of you are ready. All of you are active. Excellent. So we are going to follow the same pattern about the chapters that we have, right? All the 8 chapters from first chapter to 8, we will follow the same series of chapters that we have, and we will try to understand some of the key elements of those chapters. So kindly keep this thing in your mind. Understanding the concept is very important for strategic management, because I think most of you are pretty aware that most of the questions of strategic management are going to be case study based questions. So hope you are aware of that. So when a question has been asked in the case study format, it's very important for you to understand what the concept is trying to convey. And moreover, even in the MCQs also, you have been asked with case study scenarios. So if you have to answer case study scenario, it's very important to know what the concept is trying to convey. It's not like question and answer. Like a question has been given, you have studied and you are going to answer with that. So if it is a case study, you should understand what the case is all about, what concept is referring with respect to the subject, and you should come up to find the answer for that question. So this thing, you have to be very careful to understand the concepts. And with respect to the examination orientation, try to go through as many case studies as possible with respect to the concepts. Then only you could comfortably answer. So to begin with, the first chapter that we have is Introduction to Strategic Management. If we have to simplify this particular chapter, I could tell you the title itself says we have been introduced to some of the concepts of strategic management. So in this chapter, majorly we will be focusing upon definition of strategic management, objectives of SM, and then we could discuss importance of strategic management, limitations of SM, and application of SM. 5 concepts. With respect to this chapter, these 5 concepts we are going to pay attention on. Okay, definition, objectives, importance, limitation, and application. To begin with, we'll start with the definition of this term, strategic management. Whenever we understand any of the concepts, try to simplify it as much as possible. Instead of complicating it to understand whatever has been given over there, we have to understand it conceptually and simplify. I'll help you out to simplify the concept throughout these sessions. So whenever the term come, definition, or wherever in the exam, if you have to explain about the meaning of the term strategic management, so the first thing that you have to understand is that strategic management is nothing but a process. Imagine you have to write this term, definition strategic management, in the exam. So the moment the term comes, the moment you have to explain about strategic management, just remember one thing, one term should come in your mind. That is nothing but process. Process. While you are defining the term strategic management, what has to come in your mind? Strategic management is a process. When we are saying something as a process, obviously process consists of what? Any idea what process consists of? Obviously steps. Process stands for sequential arrangement of activities to get a desired outcome. So we are saying strategic management is also as a process, which means that even strategic management also consists of certain steps. When we understand the steps, we are done with the definition. So for that, 5 steps have to be kept in your mind. So the entire journey of strategic management consists of 5 steps. Let's see what are those steps, then we are done with the definition. The steps goes like this. The first step in the strategic management process, where what companies have to do is that they have to develop vision and mission. Yes. The first step in the strategic management process is to develop vision and mission. And sir, what is vision? What is mission? Again, we will be understanding that in the 3rd chapter, SM process. So as of now, it's enough to know the first step in the SM process is to develop vision and mission. After developing vision and mission, the next thing what company have to do is that setting objectives. Setting objectives. Now again, what are objectives? We have that in the SM process chapter. There we'll come to know what our objectives are all about. So first vision and mission, then setting objectives. After that, the company have to go for any idea what the step is? What, crafting a strategy? Good. So after it has been done, the 3rd step is crafting a strategy. Strategy has been created now. By creating strategy, purpose is not going to be served. Whatever the strategy that has created, what has to be done? Yes, that's going to be the next step. Evaluation. Yes. Evaluation and implementation. Evaluation and implementation of the strategy. Okay, after implementation, can the company relax? Like they are going to achieve whatever they want to achieve? No. What has to be done after implementation? What is the last step in the SM process is? Yes, taking corrective adjustments. Taking corrective adjustments. So did we get the 5 steps here? So look, simplify the content. In the exam, the situation has come where you have to define the term strategic management. The first thing that has to come in your mind, SM is nothing but a process. If it is a process, it consists of certain steps. 5 steps. Step 1 is vision and mission. Then after that, and then, and finally, even in this also you can more simplify it. You have to only remember vision, mission and objectives. Then you are creating a strategy. Whatever the strategy that you have created, you are going for implementation and then corrective adjustments. So why to take corrective adjustments? Because controls are very important. When we say corrective adjustments, we can call this with controls. When the strategy has been implemented, it's very important to assign controls. Now, to finish this definition, one more question we have to raise. Sir, where the corrective adjustments have to be taken? Where the corrective adjustments have to be taken in this entire journey? It is enough to take corrective adjustments in the first step, second step, then which step? Wherever. Very good. So corrective adjustments have to be taken in all the stages. Definition is done. 5 steps. Finally, you will say corrective adjustments have to be taken in all the steps. So like this, if you simplify, the things are going to be simple for you. For every concept, you have to understand, okay, what it is trying to convey and how well I can simplify it. So that is what it says when we check with the definition. As you can see here, this is the meaning. It refers to the managerial process of the steps that I have said. Can you see the steps here? Vision and mission, objectives, crafting a strategy, implementing and evaluating the strategy, and then you have to take necessary adjustments. Deemed appropriate over a period of time, which means that wherever needed, on time being, corrective adjustments have to be taken. So we are done with the definition of the term strategic management. And one more thing, when you are writing definitions in the exam, better write it in a paragraph format. Meanings, definitions have to be written in a paragraph format. Importance, limitations, characteristics, these things you have to write in a bullet forms. Have to be careful with that, because at the end of the day, for theory presentation also very important. When you are writing a theory exam, presentation carries a lot of value. So while you are presenting the things, keep these things in your mind. Okay, here in this material, it has been given in the form of points just for your easy grasping. So you don't need to write the definitions in the way that has been given like this. So you better write it in a definition have to be written in a paragraph format. So we are done with the definition of the term strategic management. Then after this, after the definition, the next thing that we have to know with respect to this is objectives of SM. After the definition, we have to know objectives of SM. So when it comes to objectives, only remember strategic management will be having with two objectives for the business, which is nothing but objective stands for like when strategic management is implemented in the organization, how it is going to create benefit for the company. It's called as objectives. We can simplify even in this also. Two objectives. First one, strategic management helps the company to gain competitive advantage. Very good. Generally, competitive advantage is gained on whom? Over the competitors. When the company gains the competitive advantage, can they dominate the market? Imagine your company is gaining competitive advantage over the competitor. Can you dominate the entire market now? Yes. So this is the first objective of SM. Strategic management is helping the company to gain competitive advantage. Over whom? So that company can gain, dominate the entire market. That's the first objective of SM. Then the second objective of SM says that strategic management is going to guide the company. Strategic management will guide the company. Successfully, SM will guide the company. Against what? Changes in the environment. So you are aware that business has to deal with a lot of environmental factors. Our environmental factors are static or they'll be changing. Changing. Whenever there is a change, business has to change or not. What happens if a business does not respond to environmental changes? It cannot survive. So for that reason, who is helping the company now to change according to the environmental changes? Strategic management. So the fundamental objective of applying SM in the company is it is protecting the company. Protecting the company against what? The changes happens in the environment. Two key terms. Objectives of SM, two key terms have to come in your mind. One is competitive advantage. Second, guiding the company. When it comes to competitive advantage, immediately you have to understand, okay, company is gaining competitive advantage. On whom? So that the company can dominate the market. Second thing is, it is guiding our company. Against what? Changes in the environment. If it does not guide it effectively, then company cannot survive. Done. Objectives are over. Simplified. Don't complicate the things. Can you see these two objectives here? First one, creating. Over the whom? So that what company can do? Yes. Second one, what it is doing? Helping? Against what? Yes. Guiding the company against the changes in the environment. So we are done with definition of SM and objectives of SM. So clear? Good. After this, let's understand. When company is adopting strategic management or successfully implementing strategic management, this will help the company to create certain advantages. Successful implementation of strategic management will help the company to create some advantages. So that's going to be the concept benefits of strategic management. And one more thing, when you are writing in the exam, make sure you are not over generalizing the content. It's very important to come up with key terms. When you are writing definition of strategic management, straight away go to the definition. Don't add additional points over there. It's very important for the business. Without that, there is no business. Following is the definition of strategic management. But nowhere you are writing the definition, you have given all these points. It won't serve the purpose I am telling you. Sir, are you asking us to copy paste the entire thing which is there in the material? No. You are not supposed to deviate the core concept. Key terms have to be there. So after that, whatever the content that you are explaining, you generalize it. But when a definition comes, you have to write it like the definition. Don't generalize it. So keep this thing in your mind. Don't overgeneralize the content in the exam. It's very important to mention the key terms, particularly theory for any of the subject or any of the paper that you write in your CA. Key terms are important. Okay, let's go with the benefits. Even in benefits also, if you pay attention on the key terms, you can easily come up with all the points. The first advantage of having strategic management is that it is providing direction to the company to move ahead. In the organization, if the strategies are strong, if your strategies are effective, this will help your company to move ahead. Your future will be safe. The company's future will be safe by having strong strategic management. So SM is providing direction for the company to move ahead so that it is helping the company to reach the goals. If your goals have to be reached effectively, then strategic management has to be there. So at least when I am highlighting some key terms, you also try to do that in your materials. When you are revising, you could able to straight away go to the point and it may save your time. So keep on doing that. If you have a highlighter, better highlight with the key terms that I am saying, so that when you are revising well before the exam, it will help you to straight away grab that key term. That's the first advantage. The second advantage, strategic management is helping the company to be proactive instead of being reactive in shaping the future. If you remember, in this chapter we'll discuss something called strategies, proactive and reactive. Remember that? Yes. Proactive is nothing but where the company have to think about the future. Reactive is nothing but whenever sudden changes takes place, it has to immediately react to the situation. It is not good if your strategy is always proactive. It is not good if your strategy is always reactive. How it should be? Partly proactive and partly reactive. Why it should be like that? Because every time it is not possible to be proactive. You can't predict everything about future. Is it possible for the company to predict what exactly going to happen in the future? No. That's why the strategy should consist of reactive measures also. All of a sudden change happened. So your company should be ready to face that particular change. Now, partly proactive, partly reactive. Good. But it is suggestible for the company to be more proactive. You should always think about future, plan for future. It's not that only you are planning for present. Now, who is helping the company to plan for future? Yes, that's what it says. It is helping the organization to be more proactive rather than being reactive in shaping the future. And moreover, strategic management is helping for what? Decision making. Effective strategic management will help the organization to take major decisions with respect to anything. Next one is it acts as a pathfinder to business to find out opportunities. Environmental factors provide opportunities for the business. If your strategies are strong, then it is acting as a pathfinder to use the opportunities from the environmental factors. What happens if a company don't utilize the opportunities? What happens if a company does not utilize the opportunities? It can't survive. Environmental factors provide opportunity. The company should be in a state to utilize that opportunities. That's about pathfinder to business opportunities. And fifth point, let's understand this. Here the key term is defensive mechanism. But what you have to understand is that strategic management act as a corporate defensive mechanism against mistakes and pitfalls. Defensive mechanism. Nothing but strategic management is protecting the company, defending. Defensive and offensive. Have an idea of this defensive and offensive. Strategic management is defending, protecting the company. Protecting the company against what? Mistakes and pitfalls. When we do business, it happens that we will be committing some mistakes. Pitfalls, ups and downs. When any mistakes and pitfalls happens, who is protecting the company? That's the point says. Serves as a corporate defensive mechanism against what? Mistakes and pitfalls, so that company can avoid some costly mistakes. Next, it is helping the company for the longevity of the business. When any businessman establishes a business, is it so he is establishing only to run it for 1 year and 2 years? Every businessman thinks that his business should run in the long run. If a business have to successfully run in the long run, they need to have strong strategic management. That's what it says that. Long-term survival happens when the company is having strong strategies. The last one, strategic management is helping the company to achieve two things. What are they? You are aware of these two terms. Just now I said, what is competitive advantage? Gaining advantage over the competitors. Now, how the competitive advantage can be gained? By developing core competencies. Now, what are core competencies? We have this in SM process chapter, but just to revise it, what are core competencies? Unique strengths of a company that cannot be shared by others. These both are interconnected, understand? When you develop core competencies, you will gain competitive advantage. Like these two terms, most of the cases will be asked in the case studies. You have to understand, in the case study, if it is saying that the company is trying to do this different than the competitor, which means that the case study is conveying they are trying to develop core competencies. And moreover, it is conveying that when they develop core competencies, ultimately they gain competitive advantage. So strong strategic management is helping the company to gain core competencies and competitive advantages. We are done with the benefits. So hence, all of the questions have been asked for 5 marks. So if this question has been asked, don't end up by writing only the headings. You have to provide some explanation. In the previous scenario, questions used to fluctuate from 2, 3, 4, 5, 7 marks. Then accordingly, we can judge how much content we have to write. But now it is not the situation. Every question has been asked for 5 marks. So if this question has been asked for 5 marks, you're not supposed to write only the headings. You have to provide ample amount of explanation also. So these are the advantages. Again, just it's enough to remember the key terms. Then you can develop the answer. So the first advantage, SM is helping the company to move ahead. Then it is helping to be more proactive than being reactive. Helping for acting as a pathfinder and creating a defensive mechanism against what? Mistakes and pitfalls. Helping for longevity of the business and helping to develop core competencies and competitive advantages. This is about the advantages of strategic management. Sometimes a case study will be asked in a way that to provide, as a strategic management, suggest something to the company. In that case study is asking that as a strategic manager, as a consultant, you should tell the company the advantages of SM. Then you have to establish the interconnectivity in the above case study. As a strategic consultant, I will tell the management what are the advantages. So it's not that every time strategic management is only providing up with some advantages. It is having some hindrances also. It's not that effective strategic management always providing the benefit to the company. It is having some hindrances. Nothing but some limitations. Limitations are not that extensive. In a very simple way, we can understand 4 limitations are there. The first limitation of strategic management says that environment is highly complex and turbulent. You have to think here, we are talking about limitations of SM, but the point is talking about environment. Isn't it? The point says environment is highly complex and turbulent because it talks about environment. But here we are discussing limitation of SM. Can you tell me why? As a limitation of SM, why are we talking about environment here? Very good. Our strategies purely depends upon the environmental factors. Now, just before I said environmental factors are not static. They will be keep on changing. Because of the changes or dynamism in the environmental factors, it is become difficult for the strategic management. Whenever there is a change in the environment, immediately you have to change. That is the first point says. Even in the explanation also the same thing says, the complexity in the environmental factors will make it difficult for the organizations to shape up for the future. That's about complex and turbulence of environmental factors. Next, 2 simple terms. Strategic management is time consuming and costly process. Why? Time consuming. To build up a strong strategy, it will take time. I always refer this small case whenever I explain this point that Reliance have introduced Jio in India. It's not an overnight project. It took more than 7 to 8 years for them to plan to launch Jio, to build up the infrastructure. So strong strategies won't be built overnight. It will take a lot of time. Sir, what if it will take time? How it is limitation for us? When you are spending a lot of time on one particular plan, it may disturb the other operations in your company. That is why it is treated as a limitation. When you are spending so much time on one particular plan, it may disturb the other plans. That's why it is limitation. And moreover, to build a strong plan, it involves some money. Costly process. Strategic planners have to be engaged. You have to spend so many resources. Have you ever thought that after Jio, why the other companies are not operating on that big scale? Because of the capital that is invested in Jio. Any idea how much Reliance have spent to build up the entire Jio infrastructure in India? Any idea? Those who have attended the sessions, I might have said this. Reliance have spent more than 1,50,000 crores to build up the entire infrastructure. So that is the reason why we are not coming up with any other telecommunication company on that big scale. Other companies are not implementing such kind of strategies only because it involves a lot of cost. It doesn't mean that, sir, all the companies have to spend that much amount of money to get success. No. If you're thinking something big, it involves a lot of cost. That's why costly process, it says, a lot of expenses. Strategic planners have to be engaged. If your plan have to be implemented, a lot of infrastructure has to be built. For all these, it involves a lot of cost. That's what it says, costly process. And finally, uncertainty. Now, uncertainty in where? Again, we have to connect this for environmental factors. So, environmental factors are not certain. Environmental factors are uncertain. You don't know what kind of changes happens in the environmental factors. Hence, there is uncertainty in the environmental factors. It is creating drawback for strategic management. So, 4 simple limitations of SM. It talks about the complexity of environment. It says it's a costly process and time consuming process, and it talks about the uncertainty in the environmental factors. Let us understand whatever I have said as a bunch of a concept: definition of SM, objectives of SM, importance and limitation. For definition, what is a key term that has to be there in your mind? Process. Process consists of some steps. Objectives, 2 key terms: competitive advantage, guiding the company. So some of the advantages and limitations. Along with this, there is one more concept which is needed to be understood in this particular chapter, which you are pretty much aware of. Strategic levels in the organization. Remember this? Strategic levels. It will be there as a first concept. For first or second concepts, we'll be having strategic levels. How many strategic levels are there in the organization? 3 strategic levels are there. That is nothing but corporate level. Then we have business level and functional level. Actually, our further chapters in strategic management depends on these levels. Like 4th chapter, corporate level strategies. 5th chapter is business level. 6th chapter is functional level strategies. Sir, what we need to know about these 3 levels? Only 2 things. Who will come in that level? What are the roles and responsibilities and scope of operations? Okay, 3 things we'll say. Who will come at that level? What are their roles and responsibilities? Scope of operations. Enough. Corporate level. First thing, who will come? All the top executives will come. CEO, CFO, board of directors, managing director, chairman, all these people will come into corporate level. First point is over. Second thing, what are their roles and responsibilities? They will set the goals. They will prepare the plans. They will create the policies. They will decide what the company have to do in the future. They will decide what businesses company have to do. These are their roles and responsibilities. Third one, scope of operations. It's important. Whatever that has been done at the corporate level, that is going to be applicable for the whole organization. When a top level people takes any decision, probably the decision policy will be applicable for the entire organization. About corporate level, 3 things are over. Who will come? The roles and responsibilities, scope of operation. Same thing for business level. First, who will come at the business level? General managers will come. We call them as business level general managers. What is their scope? Only for a particular business unit, not for the entire organization. Only for a particular business unit. So his responsibility is to practically implement the plans that has been done by the corporate level. There the point will come. To make corporate level strategies practically feasible to a particular business unit. That is the responsibility of business level managers. Functional level. First, who will come at functional level? Employees will come at functional level. Who will come at functional level? Functional managers will come. Functional managers. HR manager, finance manager, production, R&D, logistics, functional managers will come. That is the first one. Second, sir, what is their role? Will the functional managers will have their own goals in the company? No, they are meant to implement the goals that has been set by the corporate level. That's why their responsibility says to make corporate level strategies practically feasible at the department. For each and every department, they make the strategies practically feasible. Now, what is their scope of operations? Are they working something for the entire organization? Their responsibility is what? HR manager is doing work which is for the entire organization. No, his responsibility is only for that particular department. Done. About these three things, keep this, about these three levels, keep those three things in mind. Who will come? What are their roles? Scope of operations. Whose scope is broader now? Because whatever they are doing, that is going to be applicable for the entire organization. That's how you can understand some key terms. As you can see here, corporate level, the first point talks who will come, right? The second point talks here the scope. Whatever they do, that is applicable for the whole organization. So this point talks about their roles. Like this, you simplify the content. Don't blindly read it what is given over there. Understand what it is trying to convey. Suppose if I have to answer this question about strategic levels, three things has to be there in my mind. First, I should know who will come over there. Then I should know what are their roles. Then I should know scope of operations. Then you can design the answer for that. Instead of having this pattern in your mind, you're reading just to remember. Don't do that. Don't read to remember. Read to understand. First understand it, then read. Then concept becomes so simple. Same thing, business level. Who will come at business level? First one, at business level, you're going to have general managers. Now, what is their scope to a particular business unit? Now, what they're doing, they're not planning something new. Whatever has been done by the corporate level, they're practically implementing it, we can say. Next, functional level managers. At functional level, who will come? Functional heads. Functional managers will come. Now, what are their role? Responsible for specific business functions. Whatever a functional manager do, that is only applicable for that particular business function. HR, production, logistics, R&D, whatever the function that we talk. So, we are done with the strategic levels. Then finally, one thing that we have to focus in this chapter is application of strategic management. Let's understand that. What is this application of strategic management is all about? In which areas we can apply SM? Or is it only for the big organizations strategic management is applicable, like Tata, Reliance, Adani's? Only for these people strategic management is there? Then all the organizations? Yep. Understand one thing here. Application of SM talks about irrespective of a size of a company, irrespective of a type of a company, every company needs SM. When I say irrespective of a size of a company, micro, small, medium and large enterprise, they need strategic management. Irrespective of a type of a company, sir, it can be a public sector, private sector, or it can be a commercial organization, non-commercial organization. You know, commercial and non-commercial. When a business is called as commercial, when it is working for profit. I am saying SM is needed even for non-commercial also, not for the mode of making profits. That is where application of SM, some areas have been given how SM can be applied. In that we have application of SM for not-for-profit organizations, application of SM for educational institutions, application of SM for government institutes, application of SM for medical. Like this, so many areas have given. You better pay attention on two areas. Application of SM for not-for-profit, application of SM for educational institutions. These two you have to pay attention on. Just I'll quickly give you a brief of application of strategic management for not-profit organizations. When this question comes, as a case study also sometimes this question will be asked. First check in the case, what it has been asked. Suppose why strategic management is needed for not-for-profit organization? While answering this question, you have to divide this into two parts. First part, explain about what is a not-for-profit organization is all about. Explain about it first. While explaining this, you have to write business can be run commercial and non-commercial. Non-commercial businesses are running without the intention of making profits. This is how you should explain. In this answer, you see first non-profit organization. What is non-profit organization has been explained here. So which is running not-for-profit organization usually run without a motto of without any commercial objective of making profits. What is the purpose? They are running for social, charitable or educational purposes. If it is for social, charitable, you might have understood why it says educational purposes, because in our country education is not for profit. So when if it is not for profit, yeah, it is actually fact. Let's. But why strategic management is needed for not for profit organization, that we have to know now. So in this question, first you are explaining what is a not for profit organization. Now let's understand how strategic management is applicable for not for profit organizations. When any not for profit organization works, they are doing activities which does not have any measurability and productivity, and moreover they will not have any internal source of income. If they don't have any internal sources of income, how they should run? You generally tell me. Outside funds. If they have to run effectively, they have to get the funds from outside. Now to get the funds from outside, they need strategic management. Like, don't we see advertisement of some of the social organizations in the televisions nowadays? We are seeing that, right? Like UNICEF is giving advertisement, Save the Children advertisement will come. With respect to eye operations nowadays, we are seeing some advertisements. You know, what are these advertisements are? Nothing but those non-profit organizations want to generate some funds, applying some strategies. They are adding some emotional element in there. Only by spending 500 rupees, you are contributing for a life of a child. So you'll be thinking only 500 is going from my pocket. A child is being benefited with that. It's like a strategy, let's say. Let's call it a strategy. That's what applicability of SM for not-profit organizations. So you'll understand here. Whatever these non-profit organizations do, they offer little or no measurability of performance. There is no measurability of performance for not-for-profit organization, and moreover, they totally depend on outside financing. On this point, you should say, as more they are dependent on outside financing, here strategic management will act as an excellent platform for them, so that they can generate the needed funds. Look at the point, says strategic management provides an excellent vehicle for not-for-profit organization to develop needed financial support. In any of the format, the question is conveying about what is the need of SM for not-profit organization. First, you have to explain what is a not-for-profit organization is all about. Then you should keep a heading applicability of SM for non-profit organization. Even in there also remember two terms. Whatever not-for-profit organizations are doing, there is no financial measurability for them, and there is no internal sources of funds. They have to purely depend upon the outside financing. There SM will act as a excellent vehicle for them to generate the needed support. This is enough about strategic first chapter, introduction to SM. Then you will easily understand application of SM for educational institutions. Different strategies will be given over there, like associating with the industry to generate employment, using technologies, adopting modernized teaching methods. All these things will come as strategies for educational institutions that you can easily understand by reading. Are you clear with the major concepts of the first chapter? So what are all the things that we have discussed? Definition of SM, objectives, importance, limitations, strategic levels, and application of SM. What are the three strategic levels? Business level and functional level, whose applicability is very narrow. Yeah. What are the two objectives of SM? Helping for competitive advantage, developing core guiding the company against all changes. That's it. We are done with the first chapter. Hope you are clear. Done. So let's move to the second chapter. So second chapter, we have some good amount of content is here to understand in the second chapter. So what is the title of the second chapter? Yes, dynamics of competitive strategy. Without understanding what is this chapter is all about, whatever the concept that you discuss are meaningless. So first let me help you to know what is the meaning or what is the intention of this chapter is all about. Why this chapter has been given in strategic management. This entire chapter or 90% of the concepts that we discuss in the chapter deals with analysis. The purpose of this chapter is helping the companies to do analysis. Now, what has to be analyzed? It's a question. And to simplify that, I can say this particular chapter talks about analysis of three things. In this chapter, technically, if we observe, we are studying analysis of three things. One, company have to do analysis of competitor analysis. Then companies will be doing some industry analysis and they will go for self-analysis. The entire objective of this chapter is this. So what is analysis is all about, that we have to know. Any idea what is analysis is all about? Analysis is nothing but an in-detailed study. An in-depth study or in-detailed study is analysis. Company is trying to analyze three things here. Competitor, industry and self. As a company, is it needed to analyze the competitors? Yes, if you have to perform better than your competitor, first it's very important to know what your competitor is doing. And then industry. What is industry? Group of similar firms is industry. Group of similar firms. So many industries we have. Imagine as a business, you are operating in automobile industry. Okay, any business which is operating in automobile industry. They are not only supposed to study about the competitors, they have to study about the entire industry. How the automobile industry is working. Whether automobile industry is running towards the profitability or not. What is the future of automobile industry? What new technologies have been introduced in automobile industry? That's why it is not enough to study about only the competitors. It's important to study about the complete industry. Okay, you have studied about your competitors in industry. Good. Now who will study about self? Know about yourself first. What is your position in the market? That's where the third one, self-analysis. So most of the concepts that we discuss in this chapter will be revolving towards these three things. Competitor, industry and self. Only the needed concept we are going to cover up. Okay, to begin with, the first concept in this chapter that we are going to understand is to know about competitive landscape. The name of a concept is competitive landscape. As I have said, three sorts of analysis is going to happen. Competitor, industry and self. The first concept, competitive landscape, is with respect to analysis of the competitors. Competitor analysis. So the moment you are studying something in the case study which is talking about studying about competitors, straight away you should remember this particular case study is relating to competitive landscape topic. You have to carefully study the lines of that case study. If somewhere it says that so and so company is trying to elaborately understand about the competitors, suppose if this kind of term comes in a case study, immediately you should understand this case study is talking about the analysis of the competitors. So the relevant concept of analysis of competitors that we have in our subject is competitive landscape. So now competitive landscape is study of what? Competitors. That's what it says. It is a type of business analysis that, look at the key term it says, it's a business analysis. In this analysis, whom we are analyzing? Yes, two kinds of competitors you should analyze. Who are they? Direct and indirect. Have an idea of this, direct and indirect competitors? Who are direct competitors? Those who are in the same line of business. Now, who are indirect competitors? Let's say, simplify, substitutes. Substitutes will come into indirect. Now, even indirect competitors also will have a good amount of impact on our business, not only direct competitors. The recent study says that due to the momentum of smartphones is growing in the market, the digital camera sales have been reduced more than 80%. Now look at, smartphone is different thing and digital camera is a different thing. But they both are substitutes, isn't it? Nobody is carrying big digital cameras nowadays with them. So simply they are carrying with a smartphone. Everyone who is having a smartphone will feels like a photographer. All the photography skills will come out in him. So he'll be doing all the things. If you might have observed this when you go outside, he will be saying that come this side, go this side. Your head is, he don't know any of the science behind the photography, but he feels like by having a smartphone. That is what happening. Substitutes. Now digital cameras have to consider the substitutes also. So that's why as a business you have to pay attention on direct and indirect competitors. So competitive landscape is what? Business analysis. In this business analysis, you are studying about whom? Direct and indirect competitors. You should know everything about your competitor. Their vision, their mission, their goals, their values, their policies, what they are going next. Rather, some companies, rather than studying about themselves, they more spend time on studying about their competitors. Like some of companies will be having a separate team, a wing for that. That particular team is only working on knowing about the moves of competitors. Now, creating a mechanism in the company which is exclusively studying about the competitors, that mechanism is called as competitive intelligence. So, if you have to effectively run competitive advantage in your company, you need to have an application. What is that application? Competitive intelligence. Look at the term, what it says. Understanding of competitive landscape requires an application of competitive intelligence. Now, what is competitive intelligence? Like, don't try to think it in a very big concept. Simply, competitive intelligence is nothing but a mechanism that you have developed in your company. This mechanism is exclusively studying about whom? Competitors. Because ultimately, competitive landscape is nothing but understanding the competitors. This is the, we could say, the meaning of competitive landscape. When you are trying to have an in-detailed analysis of your competitors, will this help you to gain competitive advantage? Yes or no? Like you are studying everything about your competitor, then you will perform better than your competitor. Ultimately, this will help you to gain competitive advantage. That's the point says. This will help the improve firm's competitive advantage. So this is the meaning of competitive landscape. Understand the key terms. It is a business analysis. Studying about direct and indirect competitors, it requires an application called competitive. Instead of writing these key terms, when the question has come or a case study has come where you have to write about competitive landscape, instead of writing these key terms, you are saying that first point, it is very important for the businesses. Every business should study about the competitor. Without competitor, there is no business. Everything you have written, but none of the key terms are being represented in the paper. Did you get the point what I was saying previously? Don't overgeneralize the content. Like, sometimes when I evaluate some of the papers, I'll be saying they'll write everything about competitor is the term I'll be seeing in the entire answer, but nowhere they'll be writing about what is the key term is trying to say. So pay attention on key terms in the exam. Most of the students say, sir, I have written so much, but why I have failed, I don't know. This is the reason you have failed. You're thinking that you have written so much, but you have not written what it has to be written as a key term. So for any theory paper in your CA, it's important to understand, it's important to write some key terms. Don't over generalize the content. That's what I can suggest. Is it an overnight process that you have studied about your competitors and gain competitive advantage? No, it has to be happen in a systematic way. For that, we have to know some steps. Steps in the process of competitive landscape. So simple steps. We have understood the purpose of competitive landscape. Now the steps become so simple. So the concept is steps to understand competitive landscape. The first step is identify the competitor. First know your competitors. As they say, without knowing the enemy, you can't enter into the battlefield. First know your enemy. Know your competitor. Either they can be direct or indirect, and know how big they are. Like that's what we say, that when we discuss about strategic management in the introductory part, we say that strategy is all about in the war field it has been introduced ways to win over your enemy, isn't it? Remember that? The very introductory classes we say this strategy is a term used in the war field. It's all about technique adopted by the army to defeat the enemy. So if you have to defeat the enemy, first you should know about your enemy. How big is he? How strong is he? What capabilities is he having? So that is the first step. Identify the competitors. Identifying the competitors is nothing but finding an answer for a question. Who are the competitors and how big are they? Okay, you have come to know this many competitors are there. Once you identify the competitors, immediately start understanding about them. What is understanding? Nothing but know about their product or services. When you know the products and services of your competitor, it will help you to plan better than that. Look, the only purpose that I am highlighting these things is just to know the key terms for you people. At least when you are writing the answer, these key terms has to be there. Keep that thing in your mind. So step 1 is identified. Step 2 is understood. Now you should know about the strengths of your competitor. What your competitor is good at. Is it needed to know the strengths of our enemy, right? So that we can plan better than our enemy. When you know the strengths, you will improve strengths more than your competitor. When you determining the strengths, some strengths have given here. No, don't confine that only these strengths are enough to know. What are the strengths that I have said here? Know the financial position of your competitor. Know what gives him cost and price advantage, and try to know what is he doing next. Try to know how strong his distribution network is, and understand how strong his human resource, employees. All these are strengths. Financial positions, cost and price advantage, what they do next, how strong is the distribution facilities. You have an idea of distribution facilities? If stronger the distribution facilities, the product will be more available in the market. So if your competitor is having stronger distribution facility than you, it's an advantage for him. All these are advantage of your competitors. Understand this. Strengths of competitor you are studying. And finally, HR. Like the strength of the manpower that the company is having. So you have come to know the strengths. Immediately you should know about the weaknesses of a competitor. It's not enough to know about only what is he good at. You should know what is he not good at. This is nothing but where are they lacking. You are knowing the strengths to adopt them into your company better than him. You are knowing the weaknesses to adopt it in your company better than him. Is it so? You are adopting weaknesses of your competitor also and better than your competitor. Why you should know the weaknesses of your competitor? So that we can say capitalize the, or else you can we can say you use the weakness of your competitor to convert as your strengths. Capitalizing it, we can say that. So that's why you should know the weaknesses. So strengths have known, weaknesses are known. And then finally, put all information together. Can we say whatever the previous steps that you have studied, are you getting some information? Like who are the competitors, products and services, strengths, weaknesses. This is nothing but some information that you got. About whom? It is not enough to have the information. There is no use of information unless you don't know how to use it. Yes or no? Just to say it as a fun part. You might be skilled enough to take a copy to the exam, but it is of no use if you don't know how to use it. Or I have kept a copy in my pocket, but I don't know how to take it and write it. You have information, but you don't know how to use it. Your friend is giving you answer in the exam, but still you are not able to get that info. What is the use of having that information when you don't know how to use it? That's the last point says. Put all information together and you should know how to use it. That's what it says. What the business do with the information. Along with that, you should make some improvements. And finally, this is important. Exploit the that's what in the above point that I have said. Why, sir? Why we are knowing the weaknesses of competitor? Exploit it. Exploiting is nothing but use it, so that you can convert that as your strength and gain some advantage. Exploiting. That's about competitive landscape. Simplify the content I am telling you. Don't complicate it. So competitive landscape. First meaning you have to write. It is a business analysis where company studies about whom? Done. It requires an application of what? Done. To do it successfully, company needs to follow some steps. Step 1, what has to be done? Here you are getting answer for what question? Second step is, here you are getting answer for what question? Then you should know the, after that, in weaknesses what you should know? What are they lacking at? And finally, put all information together. Done with the concept, competitive landscape. This comes into analysis of what? Good. One thing is over. This chapter talks about competitor analysis, that is over. Second thing I said, this chapter talks about industry analysis. The next concept probably talk about that. As you can see the heading here, industry and competitive analysis. Which means here two things I'm talking. One is industry analysis and competitor analysis. So many students will be confused, sir, what is this particular concept? Is so many internal points are there in this. Every point has been explained what to do. Don't worry. When you do industry and competitive analysis, you have to consider 7 issues. These 7 issues. As a company, if you pay attention on these 7 issues, ultimately either you are doing industry analysis or you are doing competitor analysis. Many students don't understand, sir, what are these issues are all about. These issues are nothing but industry and competitive analysis. If you carefully observe, there you can know which analysis is that. You check whether first one is key industry traits. Now let's say this will come into industry analysis, because you're talking about the traits of industry. Second one, nature and strength of competition. It clearly understood. What kind of analysis is that? Competitors analysis. Third one, triggers of industry change. What are you analyzing here? Yes, you are studying about industry traits, triggers. Next, identifying companies that are strongest and weakest. There itself knows. You are studying about your competitors. Next, moves of rivals. Yes, competitor analysis. Key factors for competitive success or key success factors. This is industry analysis. You might be thinking it is competitors. No, it comes into industry. You are understanding the key success factors so that you can get success in the industry. The last point talks about financial attractiveness of the industry. So it talks about industry. That's why the concept is titled as industry and competitive analysis. Some factors about industry analysis, some are about competitor analysis. Understood the purpose now? Good. One more thing. Among all these 7 points, now tell me, industry and competitive analysis starts by, you can see there, industry and competitive analysis starts by knowing the industry traits. You start your analysis by knowing the traits of industry. Then you will study about competitors, industry, strongest, weak, and everything you will study. Now, industry and competitive analysis ends by knowing financial attractiveness of the industry, which means after careful study of these 6 elements, finally you are making a conclusion. Got the point here? You have studied 6 elements. After studying the 6 elements, you made a final conclusion. What is the final conclusion? Whether industry is financially attractive or not. About industry and competitive analysis, understand this. It starts by knowing the traits, ends by assessing whether industry is financially attractive or not. In this, among all these factors, some factors I will explain now. Okay. First, understood the purpose of the factors? Good. Understanding the purpose is important here. Not traits. We'll talk about identifying the strongest and weakest competitors. Okay. Now the point that I am going to explain you is this, about this one. Identifying the companies that are strongest and weakest in its position, which means you are studying your competitors. You are studying the competitors who are going to be strongest or weakest than you. Understand this very carefully. If you have to know the strongest and weakest competitors, is it needed that you should know about all your competitors? Yeah. If you have to know who is strong, who is weak, first you should study everyone. When you study everyone, again competitive landscape will come here. First know them, know their products, know their strengths, know their weaknesses, put all information together. Now think of it. You have some 100 competitors. About each and every competitor, you are following all the previous steps. How much time it may take? A lot of time. Practically it is not feasible also. If you are spending more time only to find out the answer for the previous questions. But you should know who is strongest and weakest. The problem is so many competitors are there. Practically it is not feasible to study about each and every competitor. Now what to do? For that, a tool is available. And understand the connectivity here. You should know strongest and weakest competitors. Practically it is not feasible to study about each and every competitor to know who is strongest and who is weakest. For that, a tool is available for the company. The name of the tool is good. Strategic group mapping. Now why strategic group mapping technique or tool? Why strategic group mapping technique? To help the company to know the strongest and weakest competitors. Only when you know who is strongest and weakest, you can plan accordingly. Connectivity is important. You should know the purpose why we are discussing. So many students will be thinking, sir, here says identifying the company's strongest and weakest. In the below questions, nowhere we see identifying strongest and weakest as a question. You won't get it as a question because you will get it as a concept. Here you can see strategic group mapping concept. In strategic group mapping concept, first you should know meaning of the term. What is a strategic group? And then we will study about the techniques to do group mapping. So first, let's understand to know what is a strategic group. Simple definition. I said 100 competitors you have. Now you have to study about each and every competitor. Practically not possible to take each and every competitor and analyze. Then divide them into groups. Then to divide them into groups, you should follow a criteria. If you have to divide it as a group, the criteria has to be there. Now what is the criteria that you are following? If any of the competitors who are following same strategies, you divide them as a group. Or else, any of the competitors who are having same market position, divide them as a group. Understanding the concept? The competitors who are following the same strategy, divide them as a group. The competitors who are having same market positions, divide them as a group. Now let's check the definition of strategic group. Strategic group stands for group of companies which are following same strategies or having similar market positions. Got the definition? Now tell me, what is a strategic group? It's a group of companies. What is happening here? They are following the same strategy or they are having same market position. Among the 100 competitors that you have, 25 competitors are following same strategy. Now these 25 competitors, you call them as a strategic group. Other 25 competitors, they have same market share. Just as an example, I am telling you. Other 25 competitors have same market share. The 25 competitors who are having same market share, you are keeping them as a group. Got it? So first criteria, same strategy they follow, keep it as a group. Same market share, keeping it as a group. Imagine some of the competitors, some 25 competitors, let's say whose distribution efficiency is same. Okay, distribution efficiency. That also comes into strategic group. Like some of the other competitors whose sales are same. Now you divide them as a group. Now strategic group is nothing but group of companies which are following similar strategies or same market position. Definition understood about strategic group? Look what it says. It consists of rival firms which have similar competitive approaches and positions in the market. Either their strategy is same or their competitive position is same. If you divide your competitors depending upon this criteria, you call it as a strategic group. Now tell me, under what conditions industry will have only one strategic group? Obviously, when all the competitors follow similar strategy, practically it might not happen. Like all the competitors might not be following the same strategy, not happen. But if it happens, then you say industry consists only one strategy group. Now, what is vice versa for this? Industry will have more strategy groups when companies follow different strategies. Got the logic now? Look at here. Industry contains only one strategy groups if the firm follow identical strategies and have similar market positions. Vice versa. On the other hand, there will be many strategy groups if all the companies follow different strategies. This is a definition of strategy group. Now let's go for strategic group mapping. Only 4 steps are there in strategic group mapping. Now to understand these 4 steps, let us simplify this. To understand these 4 steps, let me help you out. First thing is that, the 4 steps, first thing, you have to identify the competitive characteristics. Identify competitive characteristics, which means depending on which you should divide your competitors. Just now I said sales, distribution, market share. I have said all these terms. Now you divide your competitor depending upon these characteristics. Do I need to take sales? Do I need to take distribution efficiency? Do I need to take vertical? It depends on your requirement. Depends on company requirement. First take any of the characteristics. After taking characteristics, you plot them on 2 variable map. 2 variable map. Okay, then you have to draw a 2 variable map. 2 variable map you have to draw. Like, I'm doing competitive analysis. Like I belongs to automobile company. I have an automobile company. I want to study about all my competitors. So many competitors are there. I'm taking the help of a strategy group mapping. In that I have identified all the characteristics. Among them, I'm drawing 2 variables. When I take 2 variable map, I can only take 2 characteristics now, because only 2 variables I have drawing. So on one axis, I have taken price of the car. On the other axis, I might have taken features. Just as an example, I'm telling you. So draw all these competitive characteristics on a 2 variable map. So price, again we can divide the cars which have a high price or else a medium price or the cheapest cars in the market. And then when it comes to feature, it can be an manual, or it can be an automatic cars, auto transmission we call it as, or manual gears, or else let's say it can be an electric car. Just as an example I'm telling you, electric car. So I have drawn all these variable on a 2 variable map. After drawing this on a 2 variable map, then what I'll try to do, I will divide the competitors into groups. Imagine if here I have said some 5 companies have come here. What does it mean? Among all my competitors, I have drawn 5 companies here, which means all these 5 companies price are medium and they are developing cars which are auto transmission. Like this, here I have drawn some 10 companies, here 7 companies, here 8 companies, like this. So I am dividing them into groups. Once I divide them the groups, the 4th step in strategic group mapping is draw circles. Draw circles for each group. I am drawing circles for each group. So just I'll draw circles. Like this I'll draw circles. One more thing we have to understand here, draw circles for each group, making the size of the circle proportionate to the sales. It's important. You can see different sizes of circles that I have drawn. That is depending upon the sales. Suppose these 8 companies have drawn a very big circle, which means that they have high sales. Now, do I need to study about every company independently now? No, I will study about these groups. Will it save my time now? It's a strategic group mapping technique. Only 4 steps. First, understand the characteristics, plot them on a 2 variable map, divide them into strategic groups, draw circles. That's what the point says. You can see here, first we are identifying the characteristics, then plotting them on a 2 variable map, and then dividing into strategy groups, and finally we draw circles. Done with identifying strongest and weakest competitors. In a case study, suppose if it is asking about so many competitors are there for a company, how you will suggest the company to analyze their competitors? Then you have to say, I will suggest them with a technique called strategic group mapping. Then you will be explaining about what is a strategy group, and then you have to write the steps to implement strategy group mapping. As you need to every time think in a case study scenario, it's very important. So that's about strategic group map and technique. Let's talk about key success factors. There is one more concept called key success factors for competitive success, or we can call them as KSFs also. Just remember like this. You can understand this as a KSFs, stands for key success factors, or you can understand this as a key factors for competitive success, any of the term. So with a simple example, we can understand this entire concept. So I have started a bank. Okay. Now I want my bank to be successful in the market. So I wanted to perform better than my competitors. So for that, what I did is that in my bank, I have laid down some wonderful marble, very shining marble. When a customer comes into my bank, he will be amazed to see the shining marble in my bank. Will it give me success in banking industry? It won't. Okay. Then I have kept a centralized air condition. Like when the customer comes in my bank, he will feel like relaxed, chilled environment. Will this gives me bank success? It won't. Okay. I had kept wonderful cushion chairs for my employees, like agronomically designed chairs. When the employee sit, he feels like comfortable in the chair. Will that gives me success to my bank? No, even not that. Okay, I will give all my employees MacBooks. MacBooks I will give to all my employees to work when they sit in the bank. Will this give me success? No, that also won't give me success. Last but not the least, don't say that this won't give me success. I have recruited some handsome and beautiful employees in my bank. At least tell me this gives success. Someone says yes there. That is their intention of going to bank. Sir, I will deposit money only in that counter. There I am getting more interest rates, sir. Will that give success to bank? Now my question is, what gives a bank success on that case? All these things won't give me success. Then what gives me success? What I have to maintain in my bank so that I can get success in banking industry? What is that? For a bank, what needs to be good is not all the things that I have said. Services. The services that are offered by a bank have to be my bank so good when compared with the competitors. Now understand, what is a key success factor for a bank? Service. Now you might have understood what is key success factor. Banking industry, if any bank have to get success, primarily they should have a success factor called services. Like this, industry to industry key success factors will change. Like I have started a restaurant. If my restaurant have to get success, then what I should maintain in the restaurant? Taste is secondary. Those days are gone where customers are judging the restaurant by taste. First thing is ambience. I should keep something unique there. Ambience they will check first. Like I have recently come to know that one of the restaurant in here serving the food by creating an environment like a jail. I have seen some of my friends have kept some photos. I asked them, where have you been? It's a restaurant. They are serving the food by creating an environment like a cages and jail. Now, a customer will think, forget about taste. I'm getting something unique. Having feeling like sitting in jail and eat. Look at the craziness of the people. You want to sit in jail and eat. Do you say these concepts will be brought up by the restaurants? Like a guy will create an ambience where you feel like sitting in an aquarium. Ambience. That is important. Now can we say for a restaurant ambience is a key success factor? Of course, followed by taste, followed by price, followed by service. They'll come later. Second and third criteria. But the first one is ambience. No, for a bank, service is key success factor. For a restaurant, ambience is key success factor. So key success factors are any factors which are helping your company to get success in the industry. This is called key success factors. Now, when you are entering into the industry, is it necessary that you should know the key success factor well before? It is not that you went into industry, you have started restaurant, you have failed, then you have identified, oh, I am missing key success factors, again let me develop them. Then you are not a good businessman. Now, who is a good businessman? Who knows the key success factors? Well before. That's why the key success factors are called as, yes, there is a term will be given here. Prerequisites term will come here. Yes, they are the prerequisites for industry success. What is prerequisite means? Equip them well before you enter into the industry. And the meaning says this can be any of the factors which is helping the company to ability to prosper in the market. If your company have to prosper, then you should develop key success factors. Will all the industries have same key success factors? No, key success factors will change from industry to industry, and moreover key success factors will change from time to time also. You have to understand that, like time to time these key success factors change. So you know what is the key success factor in the market and immediately adopt it. 30 years back for apparel and garment industry, key success factor is that make the pant wider from the bottom. That's what they call it as bell bottom and boot cut. After 20 and 30 years after, now it is not the key success factor. Sir, previously it is broader, now it has become narrow. What is now? Pencil cut, slim fit, skin tight. These are the trends now, isn't it? Then it is key success factor for apparel and garment industry. Now the key success factors have changed. Is it necessary only one key success factor should be there to the industry? No. At a given point of time, industry may have 2 to 3 key success factors. Primarily, business has to focus on 1 or 2. One more thing. Will key success factors help the company to gain competitive advantage? Yes. Whatever the key success factor that you have developed, it should be better from your competitor. Someone have already kept a jail in restaurant. You don't keep a jail. You think creatively. You keep something else. Anything apart from jail, you keep something else. Then only you will get success. So your key success factors will help you to gain competitive advantage. Look at the point says, the company which can understand key success factors can gain competitive advantage. When your key success factor should be different from the, that's the point says, distinctively better than rivals in one or more key success factors. Whatever the key success factor your rival have created, your key success factor should be different from your rival. Understood the concept of key success factor? Yes. So now how I can identify key success factor? Because I have started a bank, but previously whatever the things, marble, air condition, good chairs, this I have kept. I don't know what is key success factor for a bank. Then I should know. How I should know? That is the next concept. The process of identifying key success factors. How I can know what is key success factor for the industry that I am operating? For that, I should follow some 3 simple steps. First one is, you ask your customer. I have started a bank by keeping all the requirements that I have said before. All the customers are going to other bank than coming to me. Then I have grabbed one of the customer and asked him, what is lagging in my bank? I have kept good marble floor, I have kept air condition, MacBooks are there, and look at how handsome my employees and beautiful are there. You are going to that bank to open an account? I have asked a customer. Then the customer says, you idiot, you have not kept a good process there. First keep it. That's what he said. Now how I have understood my key success factors? By studying whom? On what basis customer is choosing the other product than my product? It has helped me to know my key success factors. That's the first point, is on what basis customer choose between the brands. Second thing, what competitive capabilities that I have to develop to be successful. I have checked the capabilities. What capabilities my company should have so that I can get success. And finally, whatever gives me competitive advantage will act as a key success factor for me. So 3 steps to identify key success factors. First, I should study my customers. why they are going for the other brands. Second, I should know what gives my competitive capabilities. And third one, whatever gives me competitive advantage will act as a key success factor. That's it. So this is about strongest and weakest and key success factors. These two things pay attention of all the factors, right? But you have to know, after studying all the 6 factors, what is the conclusion that we are giving? Financial attractiveness of the industry. Look, that is what it says. The final step of industry and competitive analysis is used to result of the previous 6 issues. Whatever the previous 6 issues that we have studied, after studying that we are giving a conclusion. These are some of the, then these are the factors that will help you to draw the conclusion. That's about industry and competitive analysis. So here, 2 objectives are over. Competitive analysis we did, industry analysis we did. What is the third one? Before we move to the self-analysis, we have 3 independent concepts. Core competencies, competitive advantage, value chain analysis. We have already covered with that. What is competitive advantage? Gaining advantage over the competitors, which is nothing but having a favorable market position when compared to the competitors. So, which is nothing but you have to create some value to your customers. Then only you will gain competitive advantage. One more thing we have to know. There are 2 certain ways to gain competitive advantage. Understand them. This point is needed for the case studies also. If a company have to gain competitive advantage, so many ways are there, but there are 2 certain probable ways by which company can gain competitive advantage. Any idea? Okay, and? Good. 1, offer the product for low cost. 2, try to be unique in the industry. These are the 2 certain ways by which company can gain competitive advantage. Look, competitive advantage may be in the form of low cost relationship in the industry or being unique in the industry. So meaning of competitive advantage and the 2 ways of gaining competitive advantage. I'm trying to focus on those areas where chances are there where this kind of twist may come in the case study. In the case study, the examiner might ask you, after giving a situation, the final answer as a strategic consultant, as a strategic management, how you will suggest the company to gain competitive advantage. Then you have to say that, okay, this is competitive advantage for the company. And I say these are the 2 certain ways for the company to gain competitive advantage. Either they should offer the product for low price or they have to be unique. Look, every concept that you read, always try to correlate to the case study scenarios. Then only you can come up with flying colors in this subject. Case study scenarios, pay more attention on it. Even MCQs also been asked on the case study scenarios. That's about competitive advantage. Now, what are core competencies? This is something unique that you are offering when compared with your competitors. Generally to say, core competencies are nothing but unique factors developed by the company that cannot be shared by others. That's what it says. A unique strength of an organization which may not be shared by others. Now, can you tell me these core competencies will help the company to gain what? Good. That's why it says they act as a source of competitive advantage. Now, you develop core competencies in any of the area that you want. You can have core competency in R&D. You can have your core competency in R&D. Your R&D is so unique from the others. Whenever you launch a product, you are launching it better than the competitors. You can create core competencies in any of the area. Even sometimes your core competency will be of intangible also. Reputation, brand loyalty. Brand loyalty act as a core competency. Your company is having brand loyalty like no other company having in the market. Reputation. Let's say Apple. Apple is one of the company. For them, their core competency is their brand value. Brand value. They say that no iPhone user will talk in an iPhone by covering the entire mobile like this. He will hold only at the bottom. Why? The other people should know I am using an iPhone, or else you will feel like it is another Chinese mobile. The brand is having such value, isn't it? Somewhere I have studied like this. Mirror selfies are only made for iPhone users. You check with this, isn't it? You won't find a guy who is holding a Xiaomi in the hand and taking a mirror selfie. You'll see mirror selfies are only made for iPhone users because the brand is having such a value, intangible, but it acts as a core competency. Core competencies can be in any of the format I'm telling you. That's what the rest of the point says. It can be technological, physical, sometimes it can be intangible, and invisible intellectual assets will also act as core competencies for the company. Now you have to develop these core competencies to perform better than your competitors. Now it's okay to better to remember this name, C.K. Prahalad and Gray Hamel. These are the people who contributed a lot for core competencies, and the one who bought the core competencies in India is C.K. Prahalad. Can you tell me for how long an element will act as a core competency for you? Until it is not copied by your competitors. On that case, how you should develop your core competencies? It should be difficult so that competitor cannot easily, but ultimately they'll copy, don't worry. They will copy in a unique way. Moreover, when this kind of Chinese companies are available in the market, they will do it in a so unique way that you can't even think of. Apple have spent so much of R&D, so much of money they have spent, and they said that we have an innovation called unlocking a mobile with a fingerprint scan. And they say that I will sell this only for 60 to 70,000 rupees. On the other hand, after a short span of time, some others have copied it and they are selling it for 10,000 also. Any of the core competency that you will develop, ultimately it's going to be copied. But it has to be mentioned that it should be difficult to imitate for competitors. These are some of the points with respect to core competencies and competitive advantages. So we have a concept called value chain analysis. This is also important to know. This value chain analysis has been developed by Michael Porter. That's why called as Porter's value chain analysis. So let's try to understand this by simplifying the concept. Value chain analysis, VCA by Michael Porter. First, let me help you out. What is this value chain analysis is all about? What is needed to establish a business? Such a difficult question that I have asked. You are so seriously thinking. What is needed to establish a business? Looking into a marathon of this, by studying the subject throughout this, you are not supposed to think for such questions. What is needed to start a business? Excellent. We need resources. What are they? 5 M's. Resources are 5 M's. What are they? Men, sir, CS first will doubt money only. Men, machine, material, money, methods, 5 M's. Now, you want to start a business and you bought all these resources and kept in a place. Can we call it as a business? Collecting the resources and keeping in a place, can we call it as a business? Then, what to be done with them? Very good. So, finally recollected. Value chain purpose is that. Let me tell you the meaning now. One of the key aspect of value chain analysis says there is no use of resources unless you won't arrange them in a systematic way into systems and routines. That's why they say that organizations are much more than random collection of resources. There is no use of the resources unless you won't arrange them into systems and routines. Understand this as a major key term for value chain analysis. Okay, Michael Porter have given this value chain analysis just to prove a point that organizations are much more than random collection of resources. There is no use of these resources unless you won't keep them into systems and routines. Along with that, value chain analysis talks about the activities that happens in and around of an organization. Let me quickly take you to the key term in the meaning. When this question you are answering, you better first answer the third point in this. Because you see, one of the key aspect of value chain analysis is recognizing that organizations are much more than random collection of the resources. There independently it says machine, money and people. Rather we can say resources. These resources of no value, if they cannot help you to produce the goods and services, you kept all the resources in one place, but the resources are not arranged so that they are creating value. That's what the purpose of value chain analysis, to arrange the resources in a systematic way. And moreover, it talks about the activities within and around an organization. In value chain analysis, we talk about the activities that happens within and around of an organization. Now, within and around of an organization, value chain analysis talks about the activities that happens within and around. All these activities are in value chain analysis is categorized under two heads. Michael Porter have created have divided all the activities that happens in a business into two categories. Now they are nothing but some of the activities, he said, yes, primary activities and not secondary, we can say support activities. That's right. Primary or support activities. All the activities that happens in and around of an organizations are majorly categorized under two heads, primary activities and support activities. Let's see. The primary activities goes like this. Yes, inbound logistics. Next one is yes. After inbound logistics, the next one that we have is yes, there is the draw. Operations, and then we have outbound logistics, then we have marketing and sales, and then services. All these are primary activities. Now, to understand these activities, you just create a scenario in your mind. First, I have to get inputs into my company. These inputs have to be converted into outputs. The final product needs to be marketed. Then the customer will buy my product. After customer have bought the product, I should provide some services. We are done with the primary activities. Inbound logistics stands for collecting, distributing and storing the inputs. Collecting, storing and distributing the inputs. Whatever the resources, collect them, store them and distribute them. Now these inputs need to be converted into outputs. It is called as operations, conversion of inputs into outputs. Final product is ready. Keep that in your godown so that value can be created for your firm. Will it? Once the final product is ready, send this into the market. This stands for collecting, storing and distributing the outputs into the market. Product is available in the market. Okay, in the retail, your product is available. How a customer will come to know such kind of product is there in the market? When you do marketing, marketing stands for creating awareness about your product to customer. Okay, awareness you have created, that's why consumer have bought your product. Is your role done? Consumer bought your product. Can you relax now? No, provide them services. We call them as post-sales services. Installation, repair, training, warranty, guarantee, everything will come into post-sale services. Primary activities. Create a scenario. A company should get the input first. Convert that input into output. Then distribute them. Do marketing. Then sale will happen. Provide post-sales services. If all these primary activities have to happen successfully, then company needs to have some support activities. Now the support activities goes like this. Yes. Procurement. Procurement is nothing but first gather all the resources. Whatever are needed for a primary activities, you first gather them. Collecting the inputs, procurements. After procurement, we should have tech development, nothing but technological development. You think of it, without technology, can we conduct all these primary activities? Technological know-how is very important for all the primary activities if you ask me. After this, we should have HRM, stands for Human Resource Management. Without manpower, can you conduct all these primary activities? Manpower is needed. Final one talks about firm infrastructure. Now here when I say firm infrastructure, don't think about the physical infrastructure. In the firm infrastructure, we talk about planning. If all the primary activities have to be conducted successfully, do we need planning? Yes. Do we need information? Yes. Do we need to have proper controls? Planning, information management, controls will come into firm infrastructure. Create this situation in your mind. Value chain analysis meaning and then activities. You can see the activities here, inbound operations. Let's try to revise it once. Primary activities. First one is what has to be done here? Collecting, storing and distributing the inputs. Operation stands for outputs. Outbound logistics talks about collecting, storing and distributing the, yes. Marketing and sales, creating, yes. Services comes into post sales services. Good. You don't need to draw this diagram. I forgot to tell you, all the diagrammatical representations are not needed in the exam. Some you have to draw. In this one is not needed. Rather, you can draw BCG, G you can draw, PLC you can draw, experience curve you can draw. Like we have ANSOF. This you can draw. Rest of the things you can ignore. Don't pay that much attention and waste your time drawing on these things. Like support activities, procurement, tech development, human resource. Human resource is required for all primary activities. Infrastructure involves what? Planning, finance, quality control and information management, which are must needed for all primary activities. That's about value chain analysis. Now we are entering into the third learning objective of this chapter, to do self-analysis. To understand all the concepts of self-analysis, it's very important for you to know the meaning of a term called portfolio. I'll simplify it. Tata Group of companies, are they into multiple businesses? Reliance, are they into multiple businesses? ITC, are they into multiple businesses? Like, let's take ITC. ITC operates in multiple businesses. Like, they are into FMCG, they are into hospitality, yes, they are into IT. Yeah, hospitality, that's what. Hospitality is nothing but hotels. So, ITC operates in multiple industries. I'm talking about industries here. Stationery, FMCG, IT, hospitality, all these are industries. If any company is operating in multiple industries, each and every diversified unit or industry is called as a portfolio. Okay, every diversified unit or unit of a company is called as a portfolio. Tata Group of companies, are they into diversified industries? Yes. Each and every diversified unit is called as portfolio. Instead of calling it as portfolio, there is a technical term for this. Strategic business unit. Meaning remains the same. So a diversified unit of a company is called as strategic business unit. Who is chairman of Tata Group of companies? Chandrasekaran. Sitting at a top level, Chandrasekaran, will he be studying about each and every product now? Tata Salt, how salty my salt is. Will he be studying about each and every product? No, he don't have time to study about product. Sitting at the top level, he will study about the entire SBU. Tata Group of companies is into multiple SBUs. Now, when they are into multiple strategic business units, what the chairman will do, he will analyze each and every SBU. Now, how to analyze? For that, some methods are there. We call them as portfolio analysis methods. So, we will go for portfolio analysis method. Before that, we have something called PLC and experience curve. I think you are aware of that. Okay. Before I start with the portfolio analysis methods, there are three portfolio analysis methods are there. Standardly understand this. Three methods: BCG, GE, ADL. These three will come into portfolio analysis methods. When Tata Group of companies want to analyze their competitors, analyze the SBUs, they will be using any of these three methods. Before that, we have a concept called experience curve and PLC. Let me quickly just throw you some light on PLC. Product life cycle. We'll understand about PLC. A different stages that a product passes through in its entire lifespan is called as PLC. A product will passes through 4 stages in its entire lifespan: introduction, growth, maturity and decline. And to understand the position of those stages, we have taken two parameters. On one axis time, on the other axis sales. On time being, depending upon the sales, product will passes through 4 stages. We should know the position of a product in all these 4 stages. Just 4 to 5 points, enough. When the product is in introduction stage, only know about 4 things. Sales, price, competition, market, enough. When the product is in the introduction stage, sales will be low, lack of consumer awareness. Prices will be high, competition is almost negligible, availability of product is limited, markets. Can you tell me why sales are low in the introduction stage? Lack of consumer awareness. It's not that company will be, product will be in introduction stage every time. From introduction it will go to growth. In growth, sales have increased. Why? Consumer got awareness. They are showing interest to buy the product. Prices will reduce a bit. Outdated. Product is outdating because it went into the other stage. So not drastic fall down. We can say a bit prices will reduce. In introduction there is no competition. In growth, competition will starts. And markets will expand. Your product will be available in different markets. After growth, the product will go into the maturity stage. In maturity stage, the product will have intense competition. Due to intense competition, the profit margins will come down. There, the company should prefer to maintain a strategy called stability. Whatever the things that I have said, you will see all the key terms when you read over there. Then the product will go into decline. In decline, what happened? There is a sharp fall of sales. As you can see here in the diagram, there is a sharp fall of sales. When the product went to decline stage, can you tell me why there is a sharp fall of sales? The product have become outdated or new products have been introduced into the market. That's it. When you understand the situation, you have to remember these terms. Okay, introduction, growth, maturity and decline. For introduction, as you can see here, competition is almost negligible, prices are high, markets are limited, sales are low. Why sales are low? Yes, that's about PLC. Then we have something called experience curve. One thing strongly keep in your mind, only one point I'll explain in this, just to tell you what is experience curve is all about. If any company wants to reduce their per unit cost, they have to increase their volume of production. That's what the major purpose of experience curve. Look at the term. The concept of experience curve is based on a common experience that average cost per unit declines as the firm accumulates the experience in terms of volume of production. If per unit cost have to be reduced, volume of production have to be increased. If you do that, you will have 2 advantages. Relevance of experience curve. First, it will help you to act as an entry barrier. You know about this concept? Creating entry barriers. What is creating entry barrier means? Restricting the new companies to enter into the market. It's called as creating entry barriers. When you follow experience curve, you can create entry barrier. You are offering the product for such a low price, then new competitor will not come into it. Hence, there is one more thing also, but also it also helps to build market share. When you offer a product for low price, automatically your sales will increase. Hence, you can gain market share. So, experience curve relevance, 2 things. Creating entry barrier, helping to build market share. That's about PLC and experience curve. Now, we are entering into, look, these are the 3 portfolio analysis methods. These 3 are called as portfolio analysis methods. When Tata Group of companies is into diversified industries, Chandrasekharan, to study about each and every SBU, he will follow any of these 3 methods. By following simple tips, you can very effectively remember these 3 methods. Let's start with the first one, BCG. Boston Consulting Group. They act as a consultancy services for so many companies, BCG. Even they provide consulting services for governments also. When like couple of years back, you might have heard this for AP state. Remember when the AP government have decided to go for 3 states concept? Sorry, 3 capitals. Then they have given this work to BCG. You might have seen in the news that the state government has given this work for the BCG to give us a report. It's a consulting service. The company will provide consulting services. So BCG have developed this matrix. Sir, how to find out the answer for this question? You pay attention on this. Yes. While you are answering this question, keep certain things in your first one. This is an effectively used tool to analyze the portfolios developed by Boston Consulting Group. BCG has developed this matrix depending upon 2 parameters. One is market share. The other one is market growth rate. Depending upon 2 parameters, BCG have created this matrix. What are these 2 parameters? Market share talks about present sales. How your present sales are. Market growth rate talks about future, whether this particular business works well in the future or not. Depending upon these 2 requirements, how the sales of the product now and how it is going to be in the future. Depending on that, a company will divide all the SBUs into 4 metaphors. What are the 4 metaphors? Stars, question marks, cash cows and dogs. In the exam, don't show your artistic skills to draw these diagrams. Okay, you draw this outline. Just simply draw this. Write market share and market growth rate. Just write here stars, question marks, cash. Just write the term. Don't draw, sir. More marks I want to get. Let me draw all these things. Will not serve any purpose. It will end up wasting your time. Drawing outline is important. So the 2 parameters are market share and market growth rate. Any company which is using BCG to analyze the portfolios, first they have to divide all the portfolios into these 4 metaphors as per BCG. Tata Group of companies, they are into IT, automobile, FMCG, hospitality, power, lifestyles, whatnot. Plenty are there. Chandrasekharan sitting at top level, he should know which SBU's position is what. Then he will take the help of BCG. Now, when to call a particular business into stars? Purpose understood? Introduction you have written. This particular outline you have drawn. Now you are keeping the heading called stars. Under stars, what information you have to provide? For that, I can provide you a small tip. For these 4 metaphors, while you are answering these 4 metaphors, keep 2 things in your mind. First, you should know its position. What is the position of that particular metaphor? Stars, question marks, dogs and cash cows. After knowing the position, you should know the strategic decision. If you remember these 2 things, you can easily come up with the answer for the 4 metaphors. Okay, for this 4, answer is first know the position, then write the strategic decision. Depending upon these 2 things, let's generate the answer for the 4 metaphors now. What is the first one? Stars. Can you tell me what is the position of stars? Any SBU whose market share is high and the market growth rate is also high, which means they are having good sales for now and this particular business will have a good future also. Any such business, you call it as stars. Can I say for Tata Group, just for the example, can we say for Tata Group of companies, can we keep TCS into stars? IT, TCS, Tata Consultancy Services. Because in Indian IT industry, they have good market share. Yes. Can we say IT will grow in the future? Yes. As of now, sales are good and there is a good future also. Then Tata Group of companies will keep TCS into stars. Position is over. Understood the position? Any SBU whose market share is high and market growth rate is also high, keep that into stars. What is the second point I said? Strategic decision. If you are Chandrasekharan, will you stop investing money in stars? Will you close down the stars? Then what you will do? Will you invest more money in stars? Will you show interest in expanding it? Then position and decision. What is the position of stars? These are the SBUs which have high market share and high growth rate. What is the strategic decision? You will go for more investment. Will you expand them or not? That's what it say. They represent best opportunity for expansion. They grow rapidly and they need heavy investment. Clear with the concept or not? Like this, understand, generalize, create a scenario, then concept becomes simple. Blindly studying it to remember will not serve the purpose. We will follow the same criteria for rest of the three metaphors. Next, let's understand question marks. Can you tell me what is the position of question marks? Market share is low, market growth rate is high. What does it mean? As of now, no sales, but it have a good future. Growth rate is high, but as of now, no sales. Will you invest money in the question marks? Will you invest money in question marks? Why? They have a good future. For any reason you don't have sales now, it doesn't mean that you will close it. When it has a good future, you better invest more money into it, only because it has a good growth rate. Along with this, about question marks, two more things you should know. They have some other names. Question marks, sometimes they are called as problem children or wild cats. Because sometimes these SBUs will be problematic for the company. Even though company should invest money. That's what it says. Need heavy investment but low potential to generate cash. Can you tell me why it says low potential to generate cash? They don't have sales. Good. Suppose if you are not paying attention to them, they may become cash traps. They go into losses. That's about question marks. Next, cash cows. Can you tell me what is the position of cash cows? Market share is high, market growth rate is low. What does it mean? As of now, the business market share is good, enjoying good sales, but the problem is no future. Will you invest money in cash cows now? Why? Because it does not have a good growth rate. Okay, point is not given over there, but I'll tell you to understand the concept. If you are a wise businessman, you know what you should do. Whatever the money that comes from cash cows, you try to invest this in question marks and stars. This is what we call it as utilization of channelization of resources. The term will come. Advantages of portfolio analysis will have channelization of resources. What happens in channelization of resources? Like converting the funds from cash rich businesses to the businesses which have good future. Cash cows are cash rich business. Yes or no? It will give you cash now, but it don't have a future. Then take all the money from here and try to invest in question marks and stars because it has a good future. Got it? Good. That's about cash cows. So let us have a look at the key term for cash cows. What the point says, generate cash but have a low cost. It generate good cash, but you're not supposed to go for much investment into it. So that's about the things about cash cows. Successful, they need less investment. Don't invest money in cash cows because anyways they don't have a good future. That's about cash cows. Look at the last one. Dogs. What is the position of dogs? Market share is low, but whereas market growth rate is also low. Both are low. No market share and no growth rate. So what do? Will you invest more money in this now? Why? First thing, no sales. Second thing, no future. What to do now? Sir, let's expand them. We'll expand this to so many places. What is the strategic decision? Divestment or liquidation because no market share and no growth rate. Look how simple to generate the answer. We unnecessarily make it more complicated. Position, decision, done. Depending upon these two things, write the points if the question comes. Then check why you won't get marks. But what we do, we will sit and we will say stars, question marks. Oh, 3 points are there. So many big lines are there. No, simplify it first. Position, decision. Then if you write in this way, definitely you will get the good amount of marks. You are done with the 4 metaphors? Yes. For these four metaphors, we have something called four strategies: build, hold, harvest, and divest. Stars. Can you build the stars now? Definitely. They're good, doing good. Build them. Hold the question marks. They may go into losses. Hold the question marks. Harvest. Harvesting means we'll use this in farming. Harvesting. Taking the crop. Taking the crop is harvesting. Here, what you have to do, take all the short term cash flows, because cash cows don't have long term cash flows, because they don't have good growth rate. Take all the short term cash flows, irrespective of long term benefit. Docs is divest, close them. That's about strategic BCG matrix. Are you clear with the concept? Position, decision. Simultaneous to this, we'll have a G, something called General Electric. So we'll try to continue with it post break, but we have some time. If you have any quick doubts in the things that we have discussed, I'll start that in a post break session. So in this chapter, we'll talk about G. Okay, ADL will hold, G will discuss, ANSOF. These two will discuss. Those three portfolio analysis methods are important. And then we have to understand the ANSOF also. ANSOF is not related to portfolio analysis, out and out different concept. I'll tell you when it comes what it talks about. So far, got the things? Yes. Any quick doubts if you have so? Conceptual understanding is very important. Keep this thing in your mind. When you understand the concept, then only you can present it well in the exam. Read as many case studies as you can read, so that you can know how the case study formats have been designed and how to get what is the question that has been asked in the case study. And if any MCQ come, how you can develop. Even when you are answering, you have to write all these key terms also. Even as a case study scenario, keep the key terms. Simplify the concepts while you are studying. Don't write simplified answer in the exam. When you are studying, simplified. Like how easily we have simplified BCG now. So introduction you will write, Boston Consulting Group, this is the purpose of analysis. Two parameters have been taken. You will draw the outline. And one more thing, in the exam, you don't need to draw this kind of rows and columns thing and writing it in this way. Again, this is for easy understanding. Now how you have to write? Introduction, draw on the outline, you will keep a heading called stars. Point 1, you will write position. These are the SBUs with high market share and high growth rate. Point 2, we will talk about they grow rapidly. Point 3, they need heavy investment. Point 4, they will have a good opportunity for growth and expansion. In that way, you have to answer. Don't draw these rows and columns. Here, it is just for your easy understanding. Understood? Yes. In the same way, we'll try to cover with G also and ANSOF. With that, we'll be wrapping up with this chapter. Any quick doubts? Getting the things? Yep. Getting the key terms? Yes. Whenever the break time, whenever the last 5 minutes for every session, if you have any kind of quick doubts, you can quickly ask. So take a break, refresh, again come back for the next session. It's going to be a pre-lunch session. First 1 hour will be comfortable. The last 1 hour we have to be a bit careful, because you will be deviating. Sir, we are already hungry and you are asking us to listen to the things. And moreover, from the time we are attending marathon, we'll feel like everything is happening so quickly, sir. We don't know what is happening. We sit here in the 8:30, by 8 the day is over. A lot of inputs we have to process. Yes, you have to be accurate when you come for this kind of sessions. So we're going to take a 30 minutes break now. Yes, we'll come back after the break and we'll continue. come. Thank you. So relaxed and refreshed. So ready for the second session. Active. So I could see all of you are literally in the rest mode. Whenever we have time, that's what we'll be into. So straight away shifting into rest mode. Okay. So we are done with BCG. The next portfolio analysis method that we have is with respect to GE. Stands for General Electric Model. When we are very clear about BCG, understanding G is very simple. There is a company called General Electric. They have developed this matrix with the help of a consulting firm called McKinsey and Company. Concept remains the same. If you carefully observe, concept remains the same. Only the some of the basic things will change. Whatever we did in BCG, we are going to do the same in GE. But the way how we convey that will change. In BCG, we have taken two parameters. They are market share and market growth rate. In GE, we'll take two parameters. Business strength and market attractiveness. But before that, how this matrix is going to be helpful to analyze the portfolios, let's understand. There are some other names for GE that you have to know. In the exam, if those names comes, you have to be careful. It can be called as stoplight strategy model. It can be called as business planning matrix or GE 9-cell matrix or General Electric model, other names of GE. Why this is called as stoplight strategy model? There is one more concept is there for this. Because this concept has been inspired from traffic control lights. So what are the three colors traffic control light we see? Red, green, yellow or amber we call it as. Let's consider as an yellow. Three colors. We know the meaning of those three colors. Depending upon those three colors, this matrix is developed. That's why it is called as stoplight strategy model. You tell me in these three colors, which one is danger one? Which one is safe? Yellow is something cautious. We're done with this matrix. But in these three zones, like all the SBUs in BCG into four metaphors we have divided. Stars, question marks, cash cows and dogs. In the same way, all the SBUs here in GE are categorized under three zones. Green zone, red zone, yellow zone. Now look at the three zones. First, let me explain these zones. I'll tell you how to answer this question. Three zones you can see here. Green zone, yellow zone and red zone. Same example, Tata Group of Companies. Chandrasekharan is doing portfolio analysis. He has taken the help of GE model this time. According to GE model, now what Chandrasekhar will do, all the SBUs, any SBU which is at advantageous position, he will consider that SBU into green zone. Any SBU which is at advantageous position. Now, can you correlate this zone into something to BCG? Stars, good market share and good growth rate. That's what it says. If any SBU comes in this zone, it is in which position? Business is at advantageous position. If you carefully observe, strategic decision remains the same. There we have invested money in BCG into stars. We have expanded them, right? Same thing has said here. The strategic decision is to expand, invest and grow. Now, which kind of SBU you should keep into yellow zone? Any SBU which have to be more cautious. If you are not being cautious, it may become as cash trap. Like the same thing which we have said for question marks in BCG. Now, red zone. There it is dogs. Can we compare with that? Here, anything which eventually leads to losses. That is making the things very difficult for the organization. Strategy. Same strategy we have used in BCG also. Dogs, divestment and liquidation. Same strategy says here, divestment and liquidation. Do you find the similarity in both the concepts? There, four metaphors. Here, three zones. Same concept we are conveying, helping to analyze the portfolios. So now how to answer this? First write the introduction. After that, you draw this outline. Don't do this much of thing for the outline. One of the paper recently I have seen, while drawing this diagram, literally the student got brightened these 3 boxes, wrote stripes on this. Don't do this. How to draw? Right? Just you have to write the zone here. Green zone, yellow zone, yellow zone. Like this, you have to write it. Don't do anything. Just write the parameter. On one axis, business strength. On the other axis, market attractiveness. After that, just write the zones. Don't do anything like filling it up, leaving it empty, stripes. Don't. Write the zones. Okay. Introduction. Draw this outline and then write about these 3 zones. After writing the 3 zones, sir, how to keep the 3 zones? By the diagram. When to consider any SBU is into green zone, its business strength should be strong and average. Market attractiveness should be high and medium. Now you see why it is called as 9-cell matrix. Can you see 9 cells here? All the SBUs are divided into these 9 cells. In BCG, SBUs are divided into 4 metaphors. That's how we can make a similarity between both the concepts. Like this one comes into yellow zone. The position, average or weak, or medium or low. Same with the red zone. Okay, sir, for BCG, in market share, we said that if sales are high, we are calling it as market share. If future is good, we calling it as a market growth rate. Now, what factors will help me? You can see the factors here. In this matrix, it talks about the factors. The factors that will define business strength, the factor that will define market attractiveness. If you can't write all of these factors, at least few you write. 4 factors from this end, 4 factors from that end, at least to let the evaluator know you know about the factors also. This is how you should answer this question. Introduction, drawing the outline, write the 3 zones and write the factors. This is also one of the effective tool that can be used to analyze the portfolios. That's about BCG and GE. So ADL I am skipping it. ADL also have 2 parameters. One is stages of industry maturity. Other one is competitive position. Now this concept talks about all these are the 5 competitive positions of a company. You should check which competitive position you are into. And then after that you should check the industry position. These stages are nothing but we have discussed in PLC. There it is the stages of a product. Here they are the stages of industry. Embroidering is nothing but startup. Industry has just now started. Industry is in growth. Industry is in maturity or industry is in aging. Accordingly, you have to make a comparison. In this, you have to write these competitive positions. When we can say company is in dominant, strong, favorable, tenable, weak, positions will be given here. Right? So let's not get more into that. We'll discuss about ANSOF. Actually, in this chapter, we are done with the self-analysis. Starting from portfolio, SBU, PLC, experience curve, BCG, GE, ADL. All these things will come into self-analysis. So we are done with the self-analysis part. What is this concept is all about? Understand the purpose of this concept. ANSOF's product market growth share matrix. This concept is not with respect to analysis, first thing. This concept is with respect to planning. It's a planning tool, not an analysis tool. So many of the students might be thinking that as it is this in this chapter, this also comes into analysis. No. This one is purely a planning matrix. What is this matrix? Igor and Sof in this matrix have created 4 strategies. If any company adopts these 4 strategies, that will help the company to get growth. That's why these 4 strategies are called as growth strategies. Okay, not analysis. This matrix is for the purpose of planning. I have given you 2 parameters for BCG, right? Position and decision. Now, how to find out the answer for this ANSOF's matrix? 2 tips I'll give. Here also, first you should know the position. This is for BCG. Okay. Position and decision. Here for hands off, first know the position. Hence BCG is analysis. After doing the analysis, we will take strategic decision, right? Now hands off is not analysis. What I have said now, hands off is planning. In hands off, we are discussing 4 strategies. Hence we are studying 4 strategies. Second thing, how to implement the strategy. How to implement. These are the 2 tips. How to implement. This is for hands offs. Position, and in that position, how to implement that particular strategy. Depending upon these 2 things, let us develop the answer. Let's come back. Can you see the 4 strategies prepared by developed by hands off? What are the 4 strategies? Market penetration, product development, market development, diversification. First of all, these are the 4 strategies. Any of the company adopts any one of these strategy that will help the company to achieve growth. And to prepare these 4 strategies, hands off have taken 2 parameters. The parameters are nothing but, on one axis hands off have taken product, on the other axis hands off have taken market. You can see here, on one axis product, the other axis markets. Depending on the products and markets, we have 4 strategies. That's why, you know, the title, if you observe the title that says hands off's product market growth matrix, which means 2 parameters, product and market. In this matrix, 4 strategies are there. If any company adopts that 4 strategies, then the company will get growth. That's why it is titled as hands off's product market growth matrix. Every concept has its meaning. But what we do without knowing the meaning, we will read everything. And surprisingly, we will pass also. After that, if someone asks, what is that? We don't know, sir. We have read and we have completed. Know the purpose. Like if I ask you, there is a concept in strategic management called Porter's 5 forces model. Remember this? The important concepts are, why don't you remember that? Do you remember the 5 forces by chance? Tell me. Threat of new entrants, bargaining power of supplier, bargaining power of buyer, threat of substitutes, and threat of new. Excellent. So you know all the 5 forces. My question is, why the 5 forces are? This is what the difference between studying and understanding. Sir, as it is a very important question, all the 5 headings we have written, so we have read so well. We know the. But if someone asks you why the 5 forces has been created, why the Michael Porter have created the 5 forces? Determining attractiveness, no. Those 5 forces will help the company to analyze the competitive pressures in the industry. Same like I have said, no, the strategy group mapping technique. Company don't need to study about the competitor individually. If you have to know the industry competitive pressures, study them from 5 forces. That's the concept. We know the 5 forces, but we don't know why the 5 forces are. Whenever you read anything, kindly understand what it is trying to convey. Just don't blindly read and write the concepts. That is not the real meaning of learning to be referred as. So now, the 4 strategies, you can check in the meaning also. It says that useful tool that helps the business to decide their product market growth strategy. The 2 parameters are product and market. Now let's understand the 4 strategies and let's check how these 4 strategies are helping the company to achieve growth. What is the first strategy? Market penetration. What are the 2 tips that I have given to generate the answer for this? Position and how to implement it. Suppose if any company is adopting market penetration strategy, what they should do, what is the position? You can see here through the matrix. Existing product, which means any company which is introducing existing product into existing market, we call it as market penetration, which means product is already there in the market. The company is also existed in the market. What is being launching the existing product again? Position is clear. Market penetration talks about introducing existing product into existing market. Okay, strategy position is clear. What is the second tip that I have said? How should a company implement market penetration? This can be implemented by means of increasing sales to existing customers. Already customers are using your product. You increase the sales. This is nothing but asking a toothpaste company, asking its customers to brush teeth twice a day. As simple as that. Already customers are using, but they are doing only once. Some are not even doing that also. So the toothpaste company says that don't do brushing once, do twice. If they do brushing twice, will this help to improve their sales? That's what market penetration. Only 2 points. Position, how to implement. Position is clear. Existing product is introduced into existing market. How this can be implemented? By means of increasing sales to the existing customers. For that, you have to spend money on marketing. You have to ask your customer to use your product repetitively, find out new applications. What is the aim of these 4 strategies? As I have said, these strategies will help to achieve. Now you tell me, if company adopts market penetration, will that help them to achieve growth? Yes. That's how we should develop the answer. Let's check with the rest of the 3 also. Second one, let's talk about product development. What is the position? What a company do here? New product has been taken into existing market. Companies already existed in the market. What they are doing? Launching a new product. Position is clear. How to implement it? Only 2 things company have to do here. Either develop a new product or make modifications in the existing product. Will use it more. But for product development, you have to spend more money on like R&D. Either to modify the product or to launch a new product. That's about product development. Only 2 things will happen. Launching a new product or modifying the existing product. For this, investment is needed on R&D. Now, will this strategy help to achieve growth? If you don't do this, you don't achieve growth. You can't make the product as same every time. You have to keep on modifying it. At the same time, you have to keep on launching the new products also. It's called product development. Position and how to implement it. Next, market development. Position. What's happening here? Existing product has been taken into new market. Existing product is already there. Now take this product into new markets. Here, listen carefully. In market development, new market stands for new geographical area. New geographical area. Your product is in India. Now you want to launch your product in US. Tesla is in US. Now they want to come into India. For Tesla, it is market development. Already existed product. They are taking into new market. Can Elon Musk sell Tesla car in India for dollars? Can he follow same distribution channel that he has followed in US? Which means when market development happens, 2 things are changing. Pricing policy have to be changed and distribution channel have to be changed. Sometimes you have to change packing also. So taking the existing product into new geographical market is called as market development. When market development happens, company have to bring changes in certain areas. What are they? Pricing policy have to be changed. Distribution efficiency have to be changed. Packing changes. Will this strategy gives growth? Geographically you are expanding your business. It's a growth strategy. Last one. Diversification. What's happening here? A new product into new market. One more caution here. For market development, new market is new geographical area. For diversification, new market means new industry. For a company, diversification, new market means new industry. A new product has been launched into new industry. Apple says they are entering into electric cars. Heard about this? Apple wants to launch electric cars. Now can we say for Apple it is diversification? Electric car is new product for them and entering into automobile industry is also a new market for them. This is called diversification. Will this help to give the growth for the company? Yes. Position, how to implement it. So you can check with the key terms. The same thing will be said here. Making more sales to the present customers, you can see. For product development, 2 things. Adding new feature to the product or developing new generation product. Market development, taking into new geographical areas. bring changes in packing, have changes in distribution channel, changes in pricing policies. And then diversification. You are entering into areas where outside to the current products and markets. Can we call these strategies a riskier one? Because you are entering into a market where you have no experience. Industry is completely new, even though growth will come. Even though growth will come if you are entering into the risky areas. It's called as diversification. While you are answering this question, same thing that I have said for BCG. Write introduction. Draw this outline. Don't draw Mr. Ansoff. And don't write this in this way. I have said, for BCG, rows and columns are not needed. What you do first, you will keep the heading market penetration. Point 1, position. It's a growth strategy where the company is selling existing product into existing market. If you observe carefully, I have said a point now. I have covered the key term, but I am not writing as it is given there. This is what I want you to do. You don't need to copy paste it, but at least mention the key term. Second point, this can be achieved by means of increasing sales to existing customers. Then you will write by means of asking the customers to increase the frequency of usage, to increase the quantity of usage. Like this, you have to write the answer. Then second heading, market development. Under that, start writing the points. I see some of the people, they'll keep the heading, immediately they will start writing the point from there. Is board guy charging anything you for papers? He's giving it for free, right? Use it. Charging or what? Of course, exam fees is to build up the infrastructure, not to give you the papers. You are saying that as if entire fees they are giving you papers to write. He has to do so many other things apart from that. So you have ample amount of papers to write. Then give it a good presentation. No sir, we are very much habituated to save everything. Some people I see, they'll start the question. They will write the introduction here. At the corner, they will draw small diagram. Why? Imagine the evaluator can't able to see right properly. Then he will feel like this is not a right diagram. The presentation is very important. Introduction. Under that, outline. Under that, heading. Underline the heading. Under the heading, you will start writing the point. Look how effectively it looks for the evaluator when he is evaluating the paper. He can understand that you are trying to represent the right answer. For theory, presentation is must. Again, I am telling you. So did you get how to answer this now? Yes. So most of the concepts of this chapter is over. SWOT analysis that you are aware of, where you have to understand strengths, weaknesses, opportunities and threats. Simple key terms. Strength, inherent capability, helping to gain strategic advantage. Weakness, inherent limitation, creates strategic disadvantage. Opportunity is a favorable condition, helping to strengthen the position. Threat is an unfavorable condition, causing risk or damage. Only key terms, inherent capability, strategic advantage. Inherent limitation, strategic disadvantage. Favorable condition, strengthening the position to the company. Threat is an unfavorable condition, creating risk or damage. That's about SWOT analysis. Then we'll have some significance, but logical framework will be there. We can make comparisons. Internal strengths and weaknesses are compared with external opportunities and threats. Then we'll make some strategies. And SWOT will help the company to identify the strategy also. After knowing the SWOT, you will come to know the entire picture. Accordingly, you will create strategies for your business. So these are some of the major concepts of this particular chapter. What is globalization? What is globalization? Integration of world into one huge market. That's what we call it as globalization. If any company operates in a global environment, what that company is called as? Global company, right? Global companies are nothing but MNCs and TNCs. When we call a company as a global company, when it operates in more than one country, we call it as a global company. Like that's the things that you can understand when you read. Let's go with the third chapter. Are you clear with the second chapter, the concepts that we have discussed? Just focus on the tips that I am providing you to answer the question. That will help you to effectively develop the answer in the exam and focus on the concept also. If you ask me, the third chapter SM process is an extension of first chapter. If we carefully observe. In first chapter, strategic management definition we have discussed. In the previous session we have checked. What is the first step in the SM definition? Developing vision and mission. Second step is setting objectives. Those two steps are the third chapter. Because in the third chapter, what we learn? Vision, mission, objectives. That's why I say it can be studied as an extension of the first chapter. And moreover, third chapter, most of the concepts surrounding towards the steps of SM, if you would have observed. SM model talks about SM steps. Stages in SM talks about SM steps. These two concepts will talk about stages in SM. That's what we have discussed in the definition. Vision, mission, objectives, crafting, implementing, taking correct evaluation, and taking corrective adjustment. Same thing will come here. We'll pay more attention on vision, mission, objectives in this chapter. Along with that, there is a one concept called strategic decision making. Sounds like a general concept. Yes, it is. Decision making. All of you take decisions in your life? Yes. If I have to ask you that what is decision making for you, what will you say? What we do when we take decisions? What you take when you take decision? Again, when we create some scenarios in our mind, easy to develop the answer. You people go for shopping? Yes, sir. Most of us will go for that. Let us create a scenario. What you do when you go to shopping, from that decision making can be understood. You want to buy jeans. Let's say jeans that you want to purchase. You went to shop. Probably the shop guy will ask, what do you want? He'll listen, I want jeans. Then the next immediate question that he will be asking for measurement. Yes? He will ask you, what is your waist size? Depending on that, what the shop guy will do? From the rack, he will take a jeans and he will give it to you and say that this is the jeans, pay the bill and get lost from my store. Will he do so? Then what he will do? He will keep in front of you different brands, different colors, different shades, designs, like plenty of options he provide you. From that, what you do? You will choose something what your friend like. That's what happened when we go for shopping, right? We'll be asking, shall I take this one or shall I take this one? Which means that your friend has taken decision for you. You haven't taken any decision. Okay. Apart from that, he has provided so many options. From that, you have picked one. Now you have taken decision. Now tell me, what is decision making? When we have different alternatives in front of us, selecting one alternative among them is called as decision making. You can apply this definition everywhere. Went to restaurant, have food. Then he will give you a la carte will be given. In that, what you do? You will choose something what the waiter like. When you go to restaurant, that's what you do. You will asking him, what is best in your restaurant, can you tell? Then he will tell him what is he likes. Then you are eating what he likes. So apart from that, do we take decision there or not? Alternatives are there. Among them we have chosen one alternative. After completion of your +2, you have so many alternatives in front of you. Do you? After completion of +2, so many alternatives in front of you. You have chosen one. Look, I am only talking about decision making. I am not talking about the consequences of decision making. Understand the concept here. Now, what is decision making stands for? When you have different alternatives in front of you, choosing one best alternative is called as decision making for the purpose of achieving a goal. That's what decision making stands for. Now, remember the scenarios. Definition is easy. What are the scenarios that I have said? You remember them? You can easily jot down the definition. What the decision making says: choosing a particular course of action out of several alternative courses for the purpose of accomplishment of goal. Trust me, if you understand like that, you can remember this for life. You don't need to read it 100 times to remember and write in the exam. Some scenarios in mind. What the concept is saying, done. There are two types of decisions are there. Strategic decisions and operational decisions. Operational decisions are with respect to day-to-day operations. What should be the amount of, what should be the quantity of production for today? What should be the quality for this batch? These are day-to-day operations. Strategic decisions are for long term. What kind of business I should start in the next 5 years? Which products I should launch in the market in the future? These decisions are strategic in nature, long term. Now, can you tell me, in the three strategic levels we have discussed, who will take strategic decisions? Good. Who will take operational decisions? We could say functional level people will take operational decisions because that is related to day-to-day functions. Two types of decision making. Clear? Now, when we take decisions, certain dimensions are there for these decisions. Whenever major decisions have been taken in the organization, whose involvement is needed? Because these decisions have to be applicable for the entire organization. That's why decision making involves top management involvement. Whenever we take decision, do we need to allocate resources? Yes. When you go to restaurant, 4 friends you went. You have taken a decision to eat something. Now, for that you should have resources. Yes? But when you go to friends, only one guy will be having the resources. The other people will be enjoying. Yes. That's what. Whenever taken a decision, a company have taken a decision to launch a new product. For that, they should allocate resources. They should money, they should manpower, they should material. All these things are allocated. So, decision making involves allocation of resources. Next, when you take decision, you need to consider environmental factors. As a company, when you are taking major decisions, definitely you have to consider the changes that are happening in environmental factors. So, consider the external environmental factors. Next one. Whenever you take a decision, usually the impact will be on long-term prosperity, not immediate. When you have started foundation, you don't know the impact. The moment you have reached to the inter, you have identified the impact long-term. Isn't it? When a company take a decision, immediately they won't get a result. The impact will be in the long-term. Your competitor have launched a new product. You have also taken a decision to launch a new product. Don't expect immediate result from this. You should work on your product. You should launch the product. It will take some time to decide whether your product is successful or not. So, decision making impact is in the long term, but not immediate. Is it possible for us to take decisions in the past? You can't say your friends, let's go to dinner yesterday. Then your friend will say, have you stopped taking medicines? You can't take decisions for past. Decisions always for. Yes, decision making will always be for future, about the future changes. And moreover, multi-dimensional or multi-business consequences. You have taken decision in finance department, chances are there the impact of this decision might be on R&D department, most of the cases. Because top level have taken decision for the entire organization. Entire organization consists of all the departments. Whatever the decision taken by the top management, it has created good benefit for some departments. It has created losses from our other departments. So, decision making will have multi-business consequences. For one it may help, for the other it may not help. That's why it says multi-business consequences. If you study the explanation, that's what it say. They affected different sections of the organization with varying degree. On one department it may give you good benefit, on the other it may not. That's why it will show impact on different sectors in different ways. That's about decision making and dimensions of decision making. What is decision making? Course of action out of several alternative courses. There is a small concept called SM model. Don't worry that much about this. This is about definition only. One thing that you have to remember, this diagram. Once you are done with this diagram, easily you can write the answer and draw this outline also if this question comes. SM model consists of 3 phases: formation, implementation, evaluation. Okay, SM model consists of 3 phases. Again, these 3 phases have steps. First one, strategic formation. Can you see all the steps that we have discussed in definition? Yes, strategic formation consists of steps such as first one, developing vision, mission and objectives. Then environmental analysis, organizational appraisal. This is nothing but external environment and internal environment. Studying the external and internal environment. After that, generate, select and analyze the strategies. These 4 steps will come into phase 1, formation. Implementation, we have only one step, implement strategies. And then last one, in the definition, last point we have discussed. Yep. Evaluation talks about evaluation and control. SM model, if this question comes, right, it consists of 3 phases. formation, implementation and evaluation. And then explain about these points. Only writing the points is enough. You don't need to go for elaborate explanation. Formation consists of these steps, implementation consists and evaluation consists of these steps. That's enough. And all these steps, is it a one-time process or a continuous basis? That's what it says. All these activities should happen on a continuous basis, which means the process of SM is a continuous process, not a one-time process. That's about SM model. That's what I said. Most of the concepts are related to definition only. Look, again, it said strategic management. Same points will come in this. Let's not put much time on it. Let's intent. Let's talk about the concept called strategic intent. What is the strategic intent is all about? The purpose of what the company ultimately wants to achieve. The purpose for what the organization strives for. We call it as intent. That's a key term we can say. It refers to the purpose what the organization strives for. Intent talks about the desire that the company wants to attain in future. You know, we'll use in general terms, what are your intentions are. Do we ask this? What are your intentions? Your intention is something what you want to do in the future. That's what strategic intent is all about. A desire that the company wants to attain in future. My company, I want to attain number one market position. Can we call this as intention of my company? I want to increase my sales. Can we call this as intention? I want to become number one company in the world. Intention. That's what it says. Market position that the company wants to achieve. Now, intent consists of some elements. Vision, mission, already we'll be discussing it in the further classes. I mean, in the further concept is vision and mission. In elements, these two things you should know. Business definition and business model. What is business definition? The products that are manufactured by a company. What products are manufactured by a company? What target markets it is focusing on? What technologies it is using? These three are called as business definition. What products company manufactures? Who are their customer focused to some extent? And technologies that they use. Put together, these three are called as definition. What is business model? You might have heard this generally, that if you meet any businessman, you can ask, can you tell me about your business model? Then the businessman will be explaining how he do the business to get profits. So what make him to get profits is his business model. Definition talks about what he do, product, services, customer focus, technology or business definition. You are defining the business. But in business model, you will be talking about so what and how you are going to get profits. Look at what his business model says. Strategy, the strategy of a business. And moreover, it includes the financial details. If the business model is strong, the company will get some good profits. This is intent. Intent stands for the purpose what the organization strives for. It talks about the future attainment the company wants to achieve. And the intent consists of some elements. Vision, mission, objectives, business model, business definition. Don't need to draw this outline. It's enough to explain about the points. Now let's enter into this vision, mission and objectives. So let me quickly explain you what is vision, mission and objectives are all about. In general sense, what is vision? Vision talks about, if someone asks you, tell me your vision, they are asking you your ultimate goal. Let me simplify this. Vision talks about ultimate goal. Now for a company, what is vision is all about? Where the company wants to see itself in the future is called as vision. A desired position that a company ultimately wants to achieve in the future is called as vision. If you have to convey it in a definition way, general way I have said, where the company wants to see itself in the future is vision. And mission talks about existence and purpose. Mission talks about existence and purpose. Why the company have existed at present? Like a small situation. I've started a school. Not though, for the example. You ask me, what is your vision? I said that I wanted to see my school as a number one school in India. Now, can I call something the future that I want to see? Ultimate goal? It's my vision. I wanted to see my school as a number one school in India stands for where I want to see myself in the future. Then you ask me, why have you started this school? Then I said, to provide better quality education at affordable prices. Now, can I call this as a purpose now? The purpose that I have started for. Now, this is mission. Got the picture now? Vision talks about where the company wants to be in the future. Mission talks about existence and purpose. These two things in the company will be in the form of statements. Vision statement and mission statement. When you check the websites of a company, you will see the vision statement and mission statement. In vision statement, company is talking about the goal. Mission statement, they will talk about existence and purpose. A question now. What is the first step in the SM process? Developing strategic vision. Now, can you tell me why developing strategic vision should be the first step in the SM process? Because it is given in the definition by the board. Yes? Ultimate? Then why it should be the first step? In the without? Excellent. Excellent. So this is nothing but without knowing where you want to go, can you start your journey? So you are bagging your pack. So you are packing all your bag and someone asks you, where are you going? Said, I don't know. Then immediately they will grab you and a vehicle will come to take you to the safe place. So you can't start your journey without knowing where you want to go. That's why the first step is vision. There I can say vision will facilitate the rest of the steps. Agree? We are creating objectives to reach the vision. We are crafting a strategy to achieve our vision. We are implementing the strategy to achieve our vision. That's why vision is the first step. It will facilitate rest of the steps in the SM process. So here concept we have clear. We have to write a definition now. Suppose if it has been asked, you will write vision is a roadmap of company's future, where the company wants to see itself in the future. For that they are preparing a roadmap. In the roadmap they have to incorporate certain specifics. If your vision is to become a CA, in the journey to become a CA, do you need to have some capabilities, skills, requirements? Same thing. Company have prepared a roadmap. In the roadmap, they need to mention certain specifics. Let's have a look at the specifics. First, technology. What technology company wants to use to reach the goal? Their customer focus. What geographic and product markets to be pursued? You should use some technology to reach your goal. You should have some customer focus to reach your goal. And which geographical areas that you want to be to reach your goal. Whether you want to be only in India to become number one or you want to be number one in the entire world. Depends. Geography. What product markets you want to pursue. All these things will consider as vision. And moreover, the capabilities it plans to develop. To reach the goal, do we need to have some capabilities? And finally, the kind of company management is trying to create. By mentioning all these specifics, a roadmap prepared for the future is called as vision. Meaning is clear? Good. Then some examples I have given here, and these are some tips to develop vision. You have to think creatively. Entrepreneur have to think intelligently. Vision should create enthusiasm among the employees. Whenever the vision has been created, the vision of a company should create enthusiasm among the employees. And moreover, it talks about the direction. Our vision should say which direction our company is going. That's about vision. What mission talks about? Existence and purpose. The key term is, the definition goes like this. Mission statement focus on present business scope, which involves who we are and what we do. If you carefully check, who we are and what we do, answering that question, isn't it about existence and purpose? As a company, who you are. As a company, what you do, which means you are answering about your existence and purpose. For vision, have I said about some specifics just now? Technology, customer focus, geography. In the same way, for mission also certain things have to be there. They are nothing but, it talks about capabilities, it talks about customer focus, the activities that has been done by the company, and business makeup. By incorporating all these things, if you talk about your existence and purpose, it's called as a mission. When you understand the purpose, when you read rest of the things, you'll come to know. That's about mission. And then you can go along with the rest of the points with respect to mission. Examples are there. 1 or 2 examples are needed to be studied. And why organization should have a mission? Then you will come to know, to create a unanimity of purpose, helps to allocate resources. It will motivate your employees. It will create a good climate in the company. It's a very important point to decide how your company is going to work. And some of the things that have to be kept in mind while creating vision and mission. Is it okay that we are copying our visions and missions from other companies? No, your vision mission should be unique. That's what it says, special identity. And it should be unique. And your mission should not be to make profit. Make sure. Just before I said, mission talks about purpose. When we start the business, what is our ultimate purpose when we do business? Being a businessman, what is your ultimate purpose that you are doing business? To get profits. Sir, for any business, ultimate purpose is to earn profit. So can I mention the same as my mission? The purpose of my company is to earn profits. Can I mention that? Why? I said mission is existence and purpose. Then write it in your mission statement, right? The purpose of my company is solely to earn profit. You can't supposed to write. That's what it say. The mission of a company should not be to make profits. Of course, profits are needed for your survival. But don't mention it as a mission. That's the point. That's why the point says, even though profit making is your purpose, don't mention it in your mission statements. And moreover, it should be precise, clear, feasible, distinctive, and motivation. All these factors will contribute for good mission statement. That's about vision and mission. This you can avoid. The business definition not needed. So the next one is objectives. Vision talks about goal. Mission talks about existence and purpose. Now what are these objectives? Are targets. Vision is goal. Mission is existence and purpose, and objectives are targets. As you're sitting in this marathon class, if I ask you what is your vision, what will be your answer? Ultimate goal. Ultimate goal. What is ultimate goal? Writing exam is ultimate goal. Yes? Passing? Good. Rather tell me that your ultimate goal is to become a CA. Don't give me the benefit of doubt looks. Sir, that is not for what we are here. Our goal is something different. Just as you are sitting in this class, let's say your vision is to become a CA. In order to become a CA, do you have any targets in front of you to fulfill? First target? Cleared. Second target? Come on, don't say that. Second target is CA Inter Group 1. Third target? Next target? Articles, orientation, ITT, these targets will go. Last target? Again you are saying it wrong way. Final? This is how your target should be. When you put together all these targets, ultimately you have achieved your. That's why setting objectives is the second step if you see in the definition. First step is setting vision. And to reach that vision, you are setting some targets, objectives. They can be short term and long term. What is your short term target for now? For some people, CA Inter Group 2. For others, it might be CA Inter. Long term target, let's say CA Final. This is how objectives are. Long term and short term can be defined as. Let's have a look at the definition. Objectives are organization's performance targets, that is with respect to the results and outcomes it wants to achieve. These are targets. Objectives are targets. These targets are for what? To achieve some outcome and to achieve some result. To achieve some result. And how they act as? The targets will act as a add stick. You know what is add stick? Yes. Add stick is nothing but a measuring tool. Nothing but the scale that you use. The scale that you use an measuring tool. Of course, for a commerce student, scale is to draw the serial number, particulars, debit, credit. This is how you use. But the actual purpose of scale is measure. So targets are helping as what? Add stick. So that you can, with this add stake, you can measure your performance and progress. Let's say ICAI says that no targets. Okay, this foundation, nothing. You will start your CA. After 5 years, you will complete your CA. In between, no targets. Now, can you measure your progress? As there are targets, you are measuring your progress. After completion of foundation, you say, I have entered into the course. After completion of inter, you will measure that I have traveled half of the path. Once you reach the final, you say, I am at the last phase. Measuring your progress or not? Without targets, can you measure now? Which stage you are in? That's why targets will act as a measure. Add stick, it says. This is a definition. Are you clear with the definition? Yes. Primary focus I am making on definitions here. Because if you are wrong in the definition itself, rest of the points you can't justify. Once you understand the definition, even if you read the rest of the points, it might help you to know. That's about the objectives. And look at this point. Pursuit of objectives is an unending process. Why so? After CA final is over, you have written final exams, you have passed the last target also. It says objectives is unending process. Sir, which means should I go for again foundation? So why it says? One goal is over. For that goal, you will set another goal. For that again you will have some targets. Sir, I got a job. My next target, I don't know. Look, target should help you to grow. Target should not distract you or should stop your growth. So always have targets which will help you to grow. So wisely keep the target. Someone is having a wild target over there. Don't have such kind of targets. So I am talking about after getting a job, you might have a target. Sir, I want to build a good house. Sir, I want to buy a good vehicle. This kind of targets are important. You're taking risky targets. Right. So one goal is set. To reach that goal, you have some targets. Immediately you have set another goal. For that again, you will have some targets. That's why the pursuit of objectives is an unending process. They will act as a benchmark so that you can check your activities. Benchmarking we'll discuss in the last point. So some characteristics have to be there for these objectives. They should be set within the limits of environment. They should help you to achieve your vision and mission. Your goal is to become a CA. Your targets are: first target, I will clear prelims. Second target, I will clear mains. Third target, I will clear at interview. Is there anything wrong in this? Your vision is to become a CA. Your targets are for civil servants. Got the logic here? Your target should help you to achieve your goal. And your target should help you to take decisions. Targets should help you to attain performance appraisal. Next 3 points are put together, we can discuss. Target should be concrete and specific. They should relate to a time frame. They should be measurable and controllable. I will become a CA slowly but surely. This is your target. Is it a good target? Why? Target should always have a time bound. I will become a CA in so and so year. I will become a CA in this many attempts. Measurable. And these 3 requirements are very important. First of all, your target should be more specific. I want to become a CA. Of course, it's a goal. So your target should be concrete and specific. Target should be in a time frame and it should be measurable and controllable. Then you can check within the time frame, have I achieved my target or not? You can cross check. That's why these 3 requirements are must. And your target should be to whom? In the organization, to your employees. Employees should feel challenging because they are the one who are fulfilling these targets. And next one, they should correlate with each other. Make sure all the targets are connected to one another. You can't say that, sir, to become a CA, first I will do articleship. How it is possible? First target is foundation, then intermediate, then articles. Correlation is there to reach the goal. So have your targets correlated to one another, and always they should set within. Every company is having a boundary and limit. When the company sets a target, they have to keep the target abiding by those boundaries and limits. Simple characteristics. In the exam, I suggest you just don't depend on this thing. In the exam, question has been asked characteristics of objectives. You are writing smart. You have to write all these things. This is just to quickly get, like objective should be specific, measurable, just to get that. But you have to write all this. Key terms already I have highlighted. If you pay attention on those key terms, you can easily come up with the things and create some situations. They should help me to achieve my goals. They should help me to take decision. I should consider environmental factors and I should set within a time frame, and it should help me to measure. Like this, create some situations in your mind. Then you can come up with the characteristics. That's about the thing. So this is about SM process. Decision making, one concept, model, intent, vision, mission and objectives. There is a one small concept in this, shared vision and vision shared. Are you aware of these two terms? What is shared vision? When the employees of a company have considered the vision close to their minds and hearts, and they are trying to fulfill the vision wholeheartedly. Employees have liked the vision. They are pretty much motivated with the vision, and they are putting their wholehearted efforts to fulfill the vision. Now this scenario is called as shared vision. Wholeheartedly they are working to fulfill the vision. Vision shared, opposite to shared vision. Only because of the pressure from the top management, employees are fulfilling the vision. Dictatorship. They don't like the vision, but top level says that you have to complete this goal. That's why they are working. This is forceful. Then, can you tell me which one is needed in the company? The conclusion says it's better to have shared vision than vision shared for the effective achievement of goals. So that is one small concept that we can refer in that. I think this is somewhere there in the differences itself we have. Yes, here we have shared vision and vision shared. You can see the key term here. Organization vision is close to its employees' hearts and minds. Then this is called shared vision. The vision shared, you can see here, imposition of vision from top management, imposing. Whereas employees are wholeheartedly not accepting that particular vision. So we are done with the third chapter. Any quick doubts for the third chapter? Understood? So in the first chapter, we have discussed something, strategic levels. 3 strategic levels are there: corporate level, business level and functional level. Our next 3 chapters talks about what kind of strategies that has been prepared at those 3 levels. The strategies at corporate, business and functional level. That is going to be the 3 chapters. If you pay keen attention, all the 8 chapters of SM is SM process. So many a student will never understand that. They'll be thinking simple 8 chapters I've given and I'm writing and answering. It's SM process. First chapter, third chapter is introduction to SM. Keep them aside. Definition of SM, vision, mission and objectives. Second chapter is analysis, right? Second chapter talks about analysis. Fourth, fifth, sixth chapter talks about planning. Okay? Last chapter, what is the title of the last chapter? Implementation and control. You have planned the strategies in this chapter, then implementing and controlling. Sir, in between, why the 7th chapter has come? There, you will discuss 3 concepts which will help for effective implementation of strategies. There 3 concepts will come in the 7th chapter, like organization structures will come, corporate culture and leadership. Those 3 will help the company to achieve the effective implementation of strategies. The 8 chapters are journey of SM. When we observe, in these 3 chapters are talking about how to prepare strategies at 3 levels. So I am going to provide you a briefing now. If you can understand the briefing of, I will provide you the entire outline of the chapter now. Complete chapter in a framework. Then quickly I will take you to the key terms. Okay, let's check. is not allowing to come down. We'll take here. So first, corporate level strategies. First thing about corporate level strategies, what we have to understand, some other names, or else corporate level strategies can be called as Gluck and George generic strategies. Okay, corporate level strategies can be called as Gluck and George generic strategies, because the strategies that we are going to discuss in this have been developed by William F. Gluck and Lawrence R. George. These are the two people. And moreover, we have to know why they are called as generic strategies. It's important. Yes, the reason why we call them as generic strategies is because they can be adopted by any size of a company or any type of a company. Any type of organization can adopt these strategies. That's why they're called as generic strategies. That's what Gluck and George generic strategies. And there are some other names for this corporate level strategies. You have to understand that. Some other names of this corporate level strategies. They can be called as grand strategies. Yes, we can call them as master strategies, or we can call them as directional strategies. So grand strategies, master strategies, or directional strategies. Three names for corporate level. Have to be careful. In the exam, any of these terms are used. Don't think that out of syllabus. Nowhere we have taught directional strategies, the question comes like this. Even in the case studies also, if a term come, suggest the company some directional strategies, which means that case is referring to corporate strategies. So these are the three other names. Now, let's go back to the framework now. Once again, I'll draw a framework. Introduction, you have done corporate strategies. So we have 4 corporate strategies, corporate level strategies, 4 strategies we have. They goes like this. Stability, expansion, retrenchment, combination. These are the 4 corporate level strategies: stability, expansion, retrenchment, and combination. I will give you the briefing of the concepts. You will understand the conceptual clarity. Later on, when you read the points, you will know about it. First, stability. Under what condition we can say company is following stability strategy? When I am explaining, you can check with the key terms in the material. If you come across with any of the term, you can highlight them. Okay. When any company wants to stay in the current markets, dealing up with the current products and services. Okay, I'll help you with that if you are getting difficulty to find out the key terms. So look at the other names for corporate level strategies: grand, directional, or master strategies. The 4 strategies which I have already provided. Look, stability strategy. Under what condition we can say company is following stability strategy? When the firm wants to serve in the same or similar markets and deals in the same or similar products and services, which means company is not thinking of going into something new. They are happy with what they are doing. They are dealing up with the same markets. At the same time, they are dealing up with the current products and services. They don't want to get into something new. In PLC, I have said when the product reaches to maturity stage, they will follow stability strategy. Vice versa, stability strategy is pursued by the firm when the product reaches to the maturity stage. It says here, firms whose products have reached to the maturity stage. And when the company follows stability strategy, which means they are not going into anything new business, they are happy with what they are doing now. Listen some points. Stability does not require redefinition of business. You don't need to redefine your business. Stability does not require fresh investments. As you are not going into anything new, you don't need any fresh investments. No need of redefinition of business. Risk is very less. As a company, when you enter into new businesses, risk element will be there. You are satisfied with the business that you are doing now. You are not entering into anything new. So risk is very less. Hence risk is less. Can I call this as a safety strategy? No risk. You are in a safe zone. So no need of redefinition of business. No need of fresh investments. Safety strategy. Less risky strategy. By considering all these things, can we call stability as a do nothing strategy? No. Stability is not a do nothing strategy. Even the companies which follow stability, they also adopt to some strategic changes. Look, if a company is following stability, does it mean that they don't adopt any strategy? Even to get the growth in the existing business, you should adopt some strategies. You might be doing the same business. You might be dealing the same products and services, but it does not mean that you are not adopting to the strategies. For such a long time, Bata is into footwear. Though it is not stability, but just for the sake of example, they are dealing up with the same business. They are dealing up with the same products and services. But it does not mean that they are not changing according to the time. Previously, there is a one kind of sign in the market that Bata footwear is a kind of outdated. Elderly people wear Bata footwear. This kind of attitude used to be there among the people. Bata identified, I have to adopt the strategy. Now, they have associated with another company and they have launched a segment called Bata Red Label Collection. A new way of footwear. Because nowadays the footwear scenario have changed. Previously, footwear is a footwear. Only one type, chappals. But now, segments. Flip-flops, clogs, loafers. It's a model. Don't think that I'm abusing you. Loafers, formal, semi-formal, training shoes, walking shoes, sports shoes. So many are there. Footwear to wear in home, footwear to wear outside of a home. Footwear for balcony separately. Someone is saying, sir, even for balcony also we have footwear. This many models have come. Now what Bata can do? You remain in the same business, but you have to change according to the changes. This is called stability is not a do nothing strategy. Even they also should adopt to strategic changes. This is about stability key terms. Opposite to stability is referred to as expansion. In stability, I said company wants to stay in the current markets, dealing up with current products and services. Yes or no? But I am saying expansion is opposite to stability, which means go into new markets, deal with new kind of products and services. Expansion is quite a wider strategy. Now for expansion, let's check with the entire framework. And whatever the requirements that I said for stability, it will become opposite for expansion. Stability, no need of redefinition of business. Expansion, redefine your business. No need of fresh invest. Here, investment is needed. Moreover, there you are dealing up with the same products and services. Here you enter into new businesses. Their risk is less, risk is high. That is safety. This is risky strategy. Opposite to each other. One more thing. When the company follows stability, they get only incremental growth. Because you are only in one business. Don't expect a rapid growth now. But if you have to get a rapid growth, what you should do? The point is, the companies which follow stability strategy, they will have modest growth. Okay? Vice versa, the companies which are satisfied with the modest growth, they will follow stability. Don't confuse there. If you follow stability, you will get modest growth. If you want modest growth, follow stability. Opposite. When the company follow expansion strategy, they get a rapid growth. The companies which want rapid growth, they should follow expansion. Every requirement that we say for stability will become opposite for expansion. Now the framework. Expansion could be possible by two major ways. In fact, we can say three. Major two we have to understand. Expansion could be possible by two ways. One is intensification. The other one is diversification. We have one more thing, M&A. mergers and acquisitions. Even that also comes into expansion. Now, what is the outcome of these three strategies? When the company follow expansion, they will get a rapid growth. Whereas, if they follow stability, incremental growth. Let's understand the meanings now. Through intensification, how a company will get a rapid growth? The meaning of intensification stands for the firm wants to pursue growth by working with its current businesses. In intensification, what the company is doing? They are trying to get a growth. But how? By working with its current businesses. Stay in the current business, but try to get a rapid growth. Then how to get rapid growth by staying in the current business? You should follow three strategies. Intensification strategy can be followed by three ways. They are market penetration, market development, and product development. Product development. Three ways. These three ways that will help for intensification. Let me tell you the meaning of diversification. Through diversification, firm wants to pursue growth by working with businesses that are, yes, outside to the current businesses. So we can understand the difference here. Intensification, staying with the current business. Diversification, going out of the current business. These three strategies, did we discuss anywhere before? Where? ANSOF. In ANSOF we have discussed 4. Now my question is, why we haven't discussed diversification as one of the way of intensification? Don't tell me, sir, because you have written separately, we haven't discussed here. Need a technical answer. That's why I have asked you this question after giving the definition of diversification. In ANSOF, what is the position of diversification? New product into new market. There new market means, in ANSOF, new market means entering into new industry, which means you are moving out of your current business. But here intensification says that you should remain in the current business. That's why diversification is not one of the way of intensification. Very clearly, diversification definition says that you have to go outside of your current businesses. Now there are 4 ways by which the company can successfully implement diversification. 4 ways of achieving diversification. That is, yes, vertically integrated diversification, horizontal integrated diversification, concentric diversification, and conglomerate diversification. 4 ways. I'm just giving you this outline to get the entire picture of expansion. Now, expansion picture is clear. Expansion could be possible by 3 ways: intensification, diversification, mergers and acquisition. Meaning of intensification: wants to pursue growth by working with the current business. Diversification: wants to pursue growth by working with the businesses that are outside to the current businesses. 3 ways of intensification and 4 ways of diversification. We don't need to specifically study these 3 because these 3 we have already covered in ANSOF. But we need to understand this 4: vertical, horizontal, concentric and conglomerate. Before we talk about this, one more thing we should know. Vertical, horizontal, concentric, these 3 are called as related diversification. Related diversification. Only this one is and related. So what is this relatedness? We'll come to know when we understand those ways. Outline is clear? Now straight away I will take you through the diversification and we will understand the four ways: vertical, horizontal, concentric and conglomerate. Yes, let's start with vertical. Vertically integrated diversification. First of all, it comes into what? Related diversification. What is happening in vertically integrated diversification? The firm engages in businesses that are related to its existing business. Moreover, the firm remains vertically within the same product or process chain. Vertically remaining in the same product or process chain. What is this? Vertically remaining in the same product or process chain. For this, we have a concept. To start a business, first we need resources, right? Inputs. And then we'll go for manufacturing, converting these inputs into outputs. A product is ready. Let's say production. First you bought the resources, then you did production. Product is ready. Then you'll go for, yes, distribution. Okay. After distribution, you'll go for marketing and sales. And finally, you'll provide the same thing that we have discussed in value chain analysis. Of course, these activities are called as supply chain activities also. SCM, supply chain management. We'll have that concept. Now let's understand. Can we consider this as a vertical line now? Vertical activities that I have drawn, taking inputs, converting them outputs, distributing, marketing, sales and services. Now what is vertically integrated diversification says? Firm vertically remains in the same product or process chain, which means company has only two options. In vertically integrated diversification, consider production. Considering production at the center, either vertically it can move backwards or vertically it can move forward. Backward integration and forward integration. Vertically, if you move backwards, you should associate with input providers. It's called as backward integration. When the company goes for backward integration, it is integrating with whom? Input providers. I'll provide you the ample amount of examples. Don't worry about it. It's backward integration. Forward integration, when the company enters into distribution channels business, we call it as forward. Now, the point is vertically remaining in the same line. Vertically same line, either move backward or move forward. When a company vertically moves backward, you should enter into whose businesses? Input providers business. Vertically when you move forward, you should enter into whose businesses? That's what it says here. Vertically remains with the same product or process chain. Two types are there. Backward integration. In backward integration, whom you are integrating with? Input providers. Look, if you are a bread manufacturer, you should have your own wheat farm. Backward integration. What is the major raw material to manufacture bread? Wheat. You are a bread manufacturer and you have your own wheat farm. Backward integration. You want to manufacture coconut oil. You have your own coconut farm. Backward integration. Pre-lunch, not a right example, but we can discuss. KFC, you know. Oh. Pre-lunch, you should not talk about those things. What is the major resource, raw material that is needed for them? Certainly chicken. Now KFC have their own poultry farms. Backward integration. Whatever the resources that are needed to develop the product, I have them. Will this help me to reduce my cost? I have the raw material. I am developing the product. Help to reduce the cost or not? Backward integration. Like you can understand. Broader picture you have to think. I call vertical as related diversification. KFC guys business is to serve the food, but they have entered into another business called as farming, chicken farming. Have they entered into new business? Diversification. Is it related to the existing business? That's why it is called as related diversification. The relatedness is with respect to your resources. That's backward integration. Forward integration. Whom you should integrate with? Distribution channel. Have your own distribution efficiency. Apollo is a pharma company. They develop some pharmaceuticals. To sell their pharmaceuticals, do they need to go to other shops and say that, can you please sell my medicines? Why? They have their own stores. Distribution efficiency. Forward integration. Entering into the businesses of distribution channel. Patanjali. Imagine. Online business they are not. Online they are not. And retailers haven't said that. Retailers say that I won't sell Patanjali product in my shop. Retailers have said that. Patanjali don't need to worry. Why? If a no retail guy will take Patanjali product, Patanjali company don't need to worry. Why? They have their own stores. They have established their own distribution efficiency. Now this is called as forward integration. Now forward integration also new business, but related to our existing one. That's why related diversification. Forward integration. What a company do here? Entering into businesses of distribution channel. Will forward backward integration help us to save the cost? Case studies, be very careful. In the case study, if it says that the company is trying to have their own supply of inputs, which means they are going into backward integration. In case study, if they say they are entering into distribution channel, it talks about forward integration. These two will come into vertically integrated diversification. Clear with the first one? Next, horizontal. What's happening here? Acquiring one or more similar businesses. Here also you are acquiring one or more similar businesses. But the condition at the same stage of production and marketing chain. Acquire a business. Can be a similar business. But the condition is both should operate at a same stage of production and marketing chain. 4 ways. Beyond the meaning, you should understand the 4 ways. Then you will know what is horizontal. Related or unrelated horizontal? Let's check the relatedness. First one, takeover. Requirement have to be there. When you are taking over competitor product, they should be operating at the same stage of production. Or else, you produce your, what are complementary products? What are complementary products? Which have to be used together to create a benefit. Isn't it? They are complementary products. If this system has to work, it should have software and hardware. What software is there in this? What is the software that is making the system to work? System software. Operating system. Operating system. What is it operating system? What operating system it have? Windows. Software is there. Hardware components. Like I have a chipset, hardware, Intel chipset I have. What should I do with the chipset? I can't do anything. If I have to use it, I should have an hardware setup. So computer is a combination of software and hardware. Can we call these two as complementary now? There is no use of independently having them. Collectively you should have them. Complementary products. Reliance. They are into telecommunication. Now, in order to use the Reliance SIM, they need another company's phone. Rather, what they did? They have their own phones, Jio phone, complementary product. They are having their own, what we call telecommunication. And to use the telecommunication, they have their own phones. Apple do this. They have their own operating system and they have their own mobiles. It's out and out different strategy. Apple wants the customer to be in their ecological system. Apple don't want the customer to go out of their ecological system. They will provide everything. For Apple product, they provide their own insurance also. That's why they say that Apple is a good insurance agent. They provide their own insurance. The concept is different, but you understand complementary product here. They have their own operating system, and to use the own operating system, they have their own mobiles and any hardware components. If any company produces complementary products that come into horizontal integrated, you are very well aware of byproducts. I don't need to talk about it. If I say the example of byproduct, a common example will come. Yes. So if any company sell its own byproducts, it comes into horizontal, or else the company may enter into. These are the 4 ways that is referred to as horizontal. Even in these 4 ways also, if we keenly observe, somewhere business is related to the existing one. That's why even this is also called as related diversification. So vertical and horizontal is over. Vertical 2 types. In backward integrating with, forward integrating with. Let's go with the next one. Whatever I have explained here, you can check with this diagram. These are the raw material. I've said, stages. Taking this as a center. Beyond that is backward. After that will come into forward. That's what I was trying to explain with that outline. Let's go with the next 2 one. Concentric and conglomerate. Now concentric also related or unrelated? General scenario. If any company have to manufacture a new product, general tendency. If a company they have to manufacture a new product, do they need new technology? General scenario, tell me. Don't think exceptional cases. Generally, when we think, if a company wants to develop a new product, probably they might be needing a new technology. And they need new processes so that they can develop a product. But concentric diversification says that use the existing facilities to develop a new product. You already have some facilities, use them in order to develop a new product. It's called as concentric diversification. A new product came out by using the existing facilities. You have good amount of capacity. Use the capacity to develop a new product. Most correlated example, Tata Automobile, they have launched a product called Harrier. You know this model of Tata Harrier? And the Tata say that we have built this Tata Harrier on JLR platform. What is JLR? Jaguar Land Rover. Whose company is this JLR? Tata's. Now Tata says that I have developed a new product called Harrier. And to develop a new product, I haven't used a new process. Rather, I have developed this product on the existing facilities that I have. I have a strong platform called JLR platform. On that platform, I have built this car. Now, this is called as concentric. A new product came out by using existing facilities. Look at the term. This is also relatedness. Related diversification. And it says here, in concentric diversification, new business is linked to the existing business. By what means? By means of process, by means of technology or marketing. Which means there is a connectivity between the new product and the existing product, either by means of process, by means of technology, or by means of marketing. Rather, it says a new product is derivative from the existing facilities. By using the existing facilities, company have come out with a new product. A new product came out by using existing facilities. We call this as concentric diversification. Did you get the concept? Using existing facilities, coming up with a new product. Then why it is called as related? What is relatedness here? Facilities. Product might be new, but the resources that you are using are same. That is what relatedness. What is the 4th one? Conglomerate. Opposite to concentric. Opposite to concentric. What it should be? A new product has been developed by using new process, new technology, new markets. There is no connection between the existing product and the new product. No link at all. That's why it is called as unrelated diversification. Just the previous example that I have said, Apple said that they are going to launch electric cars. Can we call this as conglomerate diversification now? Whatever previously they are doing and whatever they are entering into now, is there any connection between the both? No, by any means. By process, by technology, by markets, no connection. Previously they are into consumer electronics. Now they are entering into automobile, unrelated. Look at the key term here. taking up of the activities which are unrelated to existing business by any means, customer groups, functions, technologies, by any means there is no connection. That's why it is totally called as unrelated diversification. The four ways of diversification: vertical, horizontal, concentric and conglomerate. Hope you are clear with the concept. So we are done with most of the part of expansion. In expansion itself, we have one more thing to cover: mergers and acquisitions. You are aware of that? Merger stands for association of two or more companies. As you can see here, merger stands for when two or more organizations join together to expand their business, and they will try to run the organization in newly created entity. Vodafone and Idea, what they have did is a merger. Two companies have come together. What is acquisition? When one organization takes over the other organization and controls its entire businesses. That is what now Elon Musk is trying to do. What he wants to acquire? Twitter. Now this is acquisition. He wants to buy it entirely. But rather, if two companies will come together, it is a merger. Long back, what Meta did, the so-called Facebook, they have acquired WhatsApp. They have acquired Instagram. Sometimes that's why I say that everything that spoils us is coming from one guy. Spoiling in the sense like take a productive time. He is having Facebook, he is having Instagram, and he is having WhatsApp. Probably whatever that kills are more time are coming from only one guy, isn't it? No. So it's called acquired. He has acquired all these things. So clear with the meaning of merger and acquisition? Why do companies go for mergers or acquisitions? Their basic purpose is urge to grow. They want to grow their business, and moreover they can create a synergy benefit. Nothing but using the resources, they want to generate more benefit. Whatever the resources that they have now, by using them, they are trying to generate more benefits. It's called as synergy benefit. This is about merger and acquisition. In merger, there are different types are there: horizontal, vertical, co-generic and conglomerate. Horizontal merger. Two companies belongs to same industry. Nothing but merging with a direct competitor. Idea and Vodafone will come into horizontal. Two companies belongs to same industry, nothing but merging with a direct competitor. Vertical merger. Here also companies belongs to same industry, but they should operate at different stages of production or distribution system. Their production capacities and distribution system are different. That is vertical. Next, co-generic. What is co-generic merger stands for? It's an interesting merger if you ask me. Two merging companies, they are not belongs to same industry, but they both are connected to one another in one or other way. That is co-generic merger. The companies are from different industries, but you can find a connectivity between these two. If a washing machine manufacturer merges with a detergent powder manufacturer, this is co-generic merger. Both are different industries, right? Washing machine comes into which industry? Don't say washing machine industry. Huh? Home appliances, technical term has been used. Can we call this as electronics? Detergent powder, which industry? Detergent powder industry. FMCG. Two different companies from two different industries, but they both are connected to one another. Definitely we need a detergent powder to wash the clothes in washing machine. Some of the washing machine companies, they give advertisement like this: for a better washing experience, use this detergent powder in this washing machine. As if that if another detergent powder, if you give, the washing machine will reject. Today I am not going to wash the clothes because you have given me another company's detergent powder. But they say like that. That is what co-generic merger. Two merging companies belongs to two different industries, but they both are connected to one another in one or other way. That's co-generic. Conglomerate. Two companies, no connection at all, they have merged. It's called as two merging companies, no connection at all, two different industries. Like now it is different. I will tell you the old example. Tata Sky. Now they are calling it as Tata Play. Previously it was Tata Sky. Sky Technologies and Tata people, they both have come together and they come up with that. Now that's called as a conglomerate merger. Two different companies, no connection at all. They have merged. 4 types. Clear the concept? Yes. Mergers and acquisitions. There is one more concept called strategic alliance. A situation will help you to understand this. There is one automobile manufacturer from Germany. They are very much known. German automobiles are very popular, right? So there is a German automobile manufacturer. He wants to enter into Indian market. But the German company so sure that independently if they enter into Indian market, they can't operate well. They know this. People may not recognize them. They may not create that kind of market value. And moreover, German company don't know the market strategies of India. There is another Indian automobile company which is well reputed in Indian market. Now the German company came to the Indian automobile manufacturer and said that, will you please help me to launch my products in India with your help? They both have come together. Independently, German brand remains the same. But those products have been sold in India under the Indian brand shadow. Now these two companies, whatever they call it as a strategic alliance. Now sir, what is the difference between merger and alliance now? Only difference is that alliances happens in international market. The companies which are operating in two different parts of the globe, when they come together and they try to launch that, is called as alliance. The reason why they go for alliance is they know that independently they can't achieve the goal. That's why they have created alliance with the other company. For the German company, if they independently come to Indian market, they know that they can't achieve growth. And for Indian company, if independently it operates, it also know that it can't achieve growth. That's why they both have come together. Look at the definition. Relationship between two or more businesses that enables each to achieve certain objective which neither would be able to achieve on its own. That's what the last point I said. Independently they can't achieve that objectives. That's why they both have come together. You may get a confusion with the merger. That's why a very clear term says that they are often formed in the global marketplace between the businesses that are based in two regions of the world. This is called as alliance. When companies go for alliance, they will enjoy different benefits. First one, organizational benefits. German company will learn all the skills from Indian company now. How to operate in Indian market, what Indian customer needs, how to develop the product as per taste and preferences of Indian customer. Next one, economic. As both are working together, definitely if any major loss come, they can pool the risk or not. Economic benefit, risk can be distributed among the alliance partners. Strategic. Imagine without alliance, if German company independently comes into Indian market, now will these two companies will be competitors. Instead now they are competing together. Alliances will help the companies to work together instead of competing with each other. Political advantage. There are some political barriers for the German company to enter into Indian market. Now the Indian company with whom they have made an alliance, Indian company is having good, political reputation in Indian market. Then Indian company helped to clear with the political differences. Now easily German company came to Indian market. That's political benefit. So 4 benefits: organizational, economic, strategic and political. But some risks are also there. Indian company, do they need to share all the trade secrets with the German company now? As both are in alliance. When collectively they are doing business, all the trade secrets have to be shared. It is not suggestible that you are sharing your trade secrets with the other businesses. It's a demerit. Imagine the German company have made an alliance with you for a good amount of time. Now after some time they say that they are going to break the alliance. Which means that the Indian company with its own hands created a good competitor. The Indian company have taught the German company strategies, equipped with all the skills. Now German company says that I will independently operate in Indian market. Alliance's risk is creating the potential competitor only when the alliance got separate. That's the demerits. That's what the point says. Alliance may also create a potential competitor in future when they decided to separate out. So this is about mergers and acquisitions. From mergers and acquisitions, we'll discuss about the alliance concept also. Hope you're clear with this. Now, if you check how many corporate level strategies we are clear with, we are done with stability, we are done with expansion. Now, the next one that we have is retrenchment. What is this retrenchment is all about? Sometimes in the news, you will be hearing that many cases IT companies will do this. They will be removing a huge amount of employees at once. Technically, they call it as a layoff. You might have heard about this. Layoff, right? Why they do so? Why they remove all the employees at a stretch? More of the employees, why they remove? Why do any company have to fire its employees? Under what conditions? Some conditions. When they are in losses, good. Probable reason is when they are in losses. As the company is in losses, they are trying to adopt a technique where they are trying to remove their employees. Let's consider this picture as companies following retrenchment. In retrenchment, removing the employees is just one part. There are so many other things company will do in retrenchment. Now tell me, when the company follow retrenchment strategy, under what condition? Through the situation you can answer. Under what condition company will go for retrenchment? When the company is in losses. Just to cover up with the losses, company is going for retrenchment. One term. Remember, but don't write it in the exam to understand the concept. Retrenchment talks about cutoff. Don't write it in the exam. Retrenchment is all about performing some cutoff activities. Why you are performing cutoff activities? Because your company is in losses. Now, how should this cutoff takes place? Systematic way. Capital and revenue expenditure cutoff. Can you pay dividend as a part of retrenchment strategy? When the company follow retrenchment, can they pay dividend? Because they are in losses. So cut off your dividend. Capital and revenue expenditure, dividends, removing of your employees, slow moving products you have stopped manufacturing, branch offices have been closed, production has been suspended, marketing has been stopped. You did everything. Still you are in losses. As part of retrenchment, you perform all these cut-off activities. Still you are in losses. You have two options left. Last but one option, offer yourself for takeover by the other company. You ask any other company to take over. To your fate, no one came for takeover. Last step in retrenchment is liquidation. So this is what the picture of retrenchment. Now tell me, when the company follow retrenchment, when the company is in, let us understand the key terms. And in retrenchment, are we performing cut-off activities? Which means, are we reducing the scope of our activities? Yes, that's why he is running, to reduce. He wants to do cut-off of his fat. No, but a company cut-off happens in different places. Look at the key term. Substantially reducing the scope of its business activities, scope of business activities, starting from capital and revenue expenditure until stopping of production, company is performing different cut-off activities. And moreover, for this, you have to find out the problem areas and take steps to find out those areas. The major key term for retrenchment is reducing the scope of business activity. When we talk about retrenchment, again, retrenchment could be of two types. One is internal retrenchment and external retrenchment. In internal retrenchment, we have a strategy called turn around. For external retrenchment, we have two strategies called divestment and liquidation. This is the picture of retrenchment. First, meaning of retrenchment, two types of retrenchment. Retrenchment talks about reducing the scope of business activities. Two types, internal and external. In internal retrenchment, we have a concept called turn around. Now, our concept is to understand about turnaround. Keep the pictures in your mind, then you will understand the sequence of the concepts that we are reading. Let's understand. These are the reasons why turnaround is retrenchment is adopted. Let's understand turn around. Carefully listen to the key terms now. As a part of internal retrenchment, when the company go for turnaround, what they have to do? First thing, company should try to increase the internal efficiencies. In turnaround, company have to try to increase any kind of internal efficiency you try to improve. Changes in strategy, changes in top management, adopting new technologies, changing employees, do anything internally. But your intention is to increase the internal efficiency. Why the company have to increase the internal efficiency? The aim is to convert a loss-making unit into a profit-making one. Simple term. In the case study, if you observe, the company is trying to convert the loss-making company into a profit-making company, which means they are following which strategy? Turnaround strategy. But if you are writing it as a definition, the key term, don't write as losses to profits. You have to write converting a financially distressed company into its normacy. Look at here. Yes, here we have. The overall goal of turnaround strategy is to return an underperforming or distressed company into its normacy. Generally, to understand, I have said converting loss-making company into a profit-making company. But the real goal of turnaround is to convert an underperforming company into its normacy. For this, what you have to do, here it says, retrenchment is internal or external. For internal retrenchment to take place, where the emphasis should be laid on? Improving internal efficiencies. Why the company is improving internal efficiencies? Because the distressed company, they want to convert that into normacy. Just to understand the concept, simply to remember, turnaround, loss-making unit, they are trying to convert into a profit-making one, which is nothing but from a negative cash flow, convert into positive cash flow. You know about negative cash flow? What is happening when there is negative cash flow? Inflows are less, outflow is more, which means you are in trouble. Then go for turnaround. When I say normacy, turnaround won't help you to achieve profits overnight. At least from negative cash flow to positive cash flow. From insolvency position to solvency position. That's how turnaround will help you. These are some key terms to understand. Moreover, it is needed when the enterprise performance is deteriorating. Just now the point says, highly targeted efforts to return an organization profitability to increase positive cash flow to a sufficient level at least, so that you can have some inflow of cash. That's about turnaround. These are the danger signs for turnaround. There is a continued negative cash flow. Your market share is totally declining. You are selling all your physical facilities. There is a high turnover of employees. You know what is high turnover of employees? Your company is having more employees than required. So it is called as a high turnover of employees. Okay, your company is having more employees than needed. And moreover, employees have low morale. Their level of confidence is very less. Morale stands for level of confidence and courage. Employees are more and their morale is low. Then you will be in losses. And your products have become uncompetitive products and services. And finally, mismanagement. All these are indicators. If a company identify any of these indicators, which means that they have to quickly adopt a turnaround strategy. So that's about turnaround, internal retrenchment. Are you clear with the turnaround now? So a financially distressed company, we are converting that into normacy. When these danger signs are identified, it is a alarm bell that immediately you have to adopt turnaround in your company. Internal retrenchment is over. What is external retrenchment says? And turnaround, we have some steps. This is also very important. Steps. Overnight you can't implement turnaround. There is an action plan for turnaround. Let's understand these steps. First, step 1, what you have to do? It's called 5-stage action plan for turnaround. Previously, in many cases, case studies have been asked on this turnaround action plan. 5-stage action plan for turnaround. Stage 1, assessment of current problems. There might be some problems in your company because of which you went into losses. First, understand them. What are the problems that exist in the company? And moreover, when you are studying the problem, go to the root cause of that problem. Going to the root cause of the problem. What happened when you find a solution to the problem from the root cause? Again, it won't reoccur. If you find a solution to the problem without going to the root cause, chances are there, again the problem may prevail. If you give a solution from the root, then the problem won't come. In turnaround, first step, identify the problem and find the solution to the problem from where? From the root. Next, step 2, analyze the situation and develop a strategic plan. You have understood the problem. You have started to find the solution from the root cause. And when you are finding the solution from the root cause, check what are the chances of business survival. If I find a solution to this problem from the root cause, are there chances that I can survive? That you have to check. Next, ready with implementing an emergency action plan. Is it so that in the organization every problem will invite and come? Problem will send invitation that I am coming and then the problem will come? No, all of sudden situations will arise. When a sudden situation come, you should be ready to deal with that situation. For that, you should have an emergency action plan. This emergency action plan should help you to stop from huge losses. Look, you're doing some household work. There is a deep cut in your hand. First to do first aid. Don't take a needle and start stitching it. That is the second step. First, emergency action plan. Stop the bleed. So that you don't lead with heavy losses. That's the point says. Organization, if it is in a critical team, they must develop a plan to stop the bleed and enable the organization to survive. It's emergency action plan. And then restructuring the business. You have multiple businesses. In that you have one core business. If the health of the core business gets damaged, will it create negative impact to the rest of the businesses? Like you have 10 businesses. In 10 business, one is your core business. Now the health of the core business got damaged so heavily. Will this show impact on the other businesses? In restructuring the business, you should take care of your core business first. That's why the term says the financial state of organization's core business is particularly important. Whatever the core business is there, take care of the financials of that core business. Prepare a proper forecast. Analyze the debts. Review the profits of that your core business. If you do all these steps, finally you can see the signs of normalcy. Stage 5, returning to normalcy. 5 simple steps. These steps are for what? Action plan for turnaround. Step 1, what you have to do first, understand the, and you need to find a solution from where? Root cause. Second one is, good, check whether your plan is going to help you or not. Next, yes, emergency action plan should be ready so that you can stop your company from heavy losses. Then restructure in restructuring the business, you are paying more attention on which business? Core businesses. And finally, what will happen? Returning to normalcy. So, meaning of turnaround, action plan for turnaround. This come into which type of retrenchment? Internal retrenchment. Imagine, your company have adopted turnaround. Is it necessary that every time turnaround should give you the result? At the end of the day, turnaround is also a strategy which may fail. If turnaround fail, then what to do? When internal retrenchment failed, then go for external retrenchment. Sometimes you know what some companies do? They will avoid the turnaround. They don't even try for turnaround also. Straight away they will go for, because they know that even after applying turnaround they don't get into profits, then straight away they will go for divestment and liquidation. So these points will come when you read. The option of turnaround may be ignored when divestment is the only answer. Like whenever you come across with this term, you should understand what the term is trying to convey. So internal retrenchment is over. Chances are that internal retrenchment may fail. Then company is having option of external retrenchment. In external retrenchment, we have two strategies: divestment and liquidation. Understanding them is very important. What is divestment? What is liquidation? Divestment means, yes, closing a portion of business is called as divestment. Like so many businesses are there. Any one particular business is into losses. Closing down that one particular business is referred to as divestment. Whereas liquidation is the entire firm you are trying to close. But we'll discuss that when we come with the after the lunch. But let me give you a sum up here. Whatever the things that we have discussed so far. As you can see here, first we are done with stability. Then I have given you a clear picture of expansion. How many types of expansions are there? Probably three. One, intensification, mergers and acquisition. How many types of intensification? Market penetration, market development and diversification is of vertical, horizontal, concentric, conglomerate. Which one is unrelated? Two types of vertical are backward integrating with, forward integrating with. Good. That's about the entire picture of expansion and mergers and acquisitions. Four types of mergers are there: horizontal, vertical, co-generic and conglomerate. Along with the mergers, we have done with alliances. Companies which depends on international markets, when they are come together, it's called as alliance. Then we have discussed retrenchment. The term for retrenchment I have said is cut off. Systematically, company is reducing the scope of its activities because they are in losses. Again, I have given you the picture of retrenchment, internal and external. In internal, we have turnaround. In turnaround, company should increase internal efficiencies so that they can convert the financially distressed company into normalcy. Danger signs we have discussed. Whenever those danger signs are observed in the company, then they should go for turnaround. Then 5-stage action plan for turnaround. I'll take you through some of the points for external retrenchment when we come back post lunch. Divestment and liquidation, some points are there. I'll highlight some of the key terms for divestment and liquidation. Once we are done with retrenchment, combination is nothing to discuss, a small concept where put together all these three strategies have been discussed. That will be easy to understand. So any quick doubts for now? Clear? Hungry, so forget about doubts. Wrong question that you're asking at a wrong time. Any doubts? So again, we'll be meeting at 3 o'clock. We are going to start the session. Better have a quick lunch and fulfill your post lunch impacts by 3. Whatever the post lunch impacts are there, whatever the things that you have to do it by 3. When you come back, don't come with the drowsy faces, right? And at least for this day, because again the afternoon session is going to be a long session for our session that we have. So better not to have a saturated level lunch, where after coming from the lunch, you're feeling drowsy and sleepy. Any quick doubts for now? Right, we'll see you post lunch. So all of your hope had your lunch. Nice. Yes, I had. Thank you. All the post lunch impact gone, or will you say that it is going to start now? So as most of you are already in the rest mode when I have come. For me, no, nothing. So imagine if I have to have a special meal like you, and thank you very much. Sitting, having a heavy meal like you and come and sitting here. Imagine post lunch impact starts for me. Then what will happen? That's why. So it's better to be cautious, at least on this kind of days where we have to be more active than you. That's the reason. So all of you are active? Ready for the second half of the marathon? Excellent. So in the morning session, we were discussing before we went for the break. In the corporate level strategies, we are done with stability and we are done with expansion and retrenchment also. But in retrenchment, we are done with the internal retrenchment. We need to take care of, understand about external retrenchment. So in internal retrenchment, what was the strategy that we have discussed? Turnaround, right? In external retrenchment, we have two strategies, divestment and liquidation. Before we are going for the break, I have already explained you what happens in divestment and what happens in liquidation. So divestment is all about closing a portion of business, whereas liquidation is the entire operating entity is going to be closed, winding up, or we can call it as a corporate death also. So let's try to get the key terms now. Divestment strategy. What does divestment says? It involves sale or liquidation of portion of business. It's not that the entire business you are going to close. Only a portion of business is going to be closed. Or it can be a major division, a profit center or SBU, anything to be referred to as. Okay, sale a portion of business, we can say a major division or a profit center. Morning, I think I have already said this point. Imagine a company has attempted a turnaround, but they were not successful in that. That's what it says. It is adopted when a turnaround has been attempted but proven to be unsuccessful. In the morning, I have said one more point also. Some companies ignore turnaround. They know that even though they go for turnaround, they're not going to get any benefit. On that case, straight away they will go for. That's what. Sometimes the option of turnaround may be ignored if the divestment is the only answer. Here, why divestment have to be adopted? Some points have been given. Easily you can understand depending upon the points that I have said just now. That's about divestment. Next, liquidation. So what is happening here? Closing down a firm and selling off all its assets and paying off its liabilities. So previous one, divestment, we said portion of business. That's the difference that you have to understand. And moreover, among all the strategies that we have, this one we can consider as the most unattractive strategy, because it leads to serious consequences. You are closing down the entire firm. The company will be in trauma of failure. People will lose employment. So all these extreme things happens. That's why it is referred to as most extreme and unattractive retrenchment strategy, because company is being in a trauma of failure. And moreover, it is the last option. You have tried everything. In retrenchment, you have tried to cut off different activities, but still you could not able to cope up. So this is referred to as a last option that is left. This is about liquidation. So the last one, combination, you better know. What happens in combination? It's a mixture of stability, expansion and retrenchment. Moreover, what kind of companies can adopt combination strategy? It's a question. If any company, if it has to adopt combination, first one, the organization have to be large and it should be facing some complex environment. And moreover, it should be composed of different business. Nothing but company should have different SBUs. If you have only one business, you can't adopt all the strategies in one business. If you have multiple businesses, like morning we have said Tatas and other companies, now they can go for these combination. In one business they can follow stability, in the other they can go for expansion, in other business they will go for retrenchment, like that they can adopt. So that is about the reasons. Under what reasons companies can go for combination. So understood the concept? Done. So we are done with the, let's check whether we have covered all the strategies or not. We are done with stability, expansion, retrenchment and combination. The 4 corporate level strategies. So here you have to understand the frameworks that I have given for expansion and retrenchment. For expansion, this is intensification and diversification. Whereas for retrenchment, internal and external. Internal is turnaround, external is divestment and liquidation. That's it. So we are done with corporate level strategies. So after this, let's move to the 5th chapter. The 5th chapter that we have is, yes, business level strategies. Who stated corporate level strategies? Michael Porter, somebody. Gluck and George. And we are calling them as generic strategies. Can be adopted by any type and any size of organization. Now, who stated business level strategies? Good. Business level strategies have been stated by Michael Porter. Michael Porter have stated business level strategies. There are no other names for this. That's why these strategies also called as generic. Michael Porter, generic strategic alternatives. For corporate and business, both are referred to as generic strategies. The purpose is same as we have discussed in the morning. When we call them as generic strategies, applicable for all the organizations. It's a very simple chapter, I tell you. And now I am going to provide you a framework here like the 4th chapter. Now, if you can understand the framework that I am providing, the entire chapter is clear. Once we understand the framework through the material, I'll just drop you some key terms. 3 business level strategies are there. Whatever the framework that I am providing now, we have 3 business level strategies. One is, yes, cost leadership. Second one is differentiation. And the third one is focus. So, in this framework, we'll be covering up the entire chapter. Once you understand the concepts thoroughly in this chapter, the rest of the thing, when you read, you can easily understand. Like the question says, reasons for adopting cost leadership, advantages and disadvantages. For differentiation, reasons for adopting advantages and disadvantages. For every strategy, advantages and disadvantages are there. When you know the concept, then when you read the points, you'll understand them easily. Let's start with the first one. Simple key terms are there. Under what condition we can say a company is following cost leadership strategy? In order to understand some of the strategies, I have to introduce some terminologies to you. First 2 terminologies are, whenever we take any of the market, all these strategies revolving towards the terms that I am going to tell you now. Any of the market that you take, we will have price sensitive buyers and price insensitive buyers. Now, who are price sensitive buyers? Those who always thinks about price, and moreover, every time they wish to buy the product when prices drop. They want to buy the product, but they don't buy it immediately. They will wait until the price falls. Then they will buy. These are price sensitive buyers. And moreover, these buyers always expect that the product price should be low. Then price insensitive buyers, they don't worry about the price. Until company is satisfying the unique needs of the customers, they will be buying it. If they found a product is unique, and if they feel like the product is satisfying the unique need of the customer, then they don't worry about the price. They will buy it. Now, these customers are called as price insensitive buyers. Every market consists of these 2 types of customers. Depends. Some markets will have more price sensitive, like Indian market we can say. Here customers are more price sensitive. Here customer wants more quantity than quality. So here cost leadership strategy might be working a lot. That is our price sensitive and insensitive. Second thing, markets. Companies will be focusing upon broader markets and narrow markets. These two terminologies are important, broader market and narrow market. Broader market, the product is for everyone in the market, no discrimination. If you have money, company will give you the product and you can buy it. Broader market. Narrow market, not for everyone, only for specific chosen customers. Like you might be hearing a term called niche market, ADL matrix, it will come niche market, particular market, narrow market where customers are very less, the product is not for everyone. So 4 terms I have said now, price sensitive buyers and insensitive buyers, broader market and narrow market. Depending on this, the entire 3 strategies we can understand. Let's check how. If any company is following cost leadership strategy, what they are going to do? First, they will try to standardize the product. Okay, the first thing that they do is that standardization of the product. And one more thing, one more term I forgot to tell you, standardization and customization. This also we should know. Customization means changing the product as per the taste and specifications of a customer, which means we are customizing the product. We are asking what is the customer need, accordingly we are developing and modifying the product and offering to the customer. This is customization. Standardization, company has developed the product, you buy it, I am not going to change it in any ways. You have to buy as it is available. So this is about the terms, price sensitive, insensitive, broader, narrow, standardization and customization. In cost leadership, what the company is doing? Standardization of a product, which means they develop the product in bulk, standardization, and customer have to buy it. Standardization of a product, low per unit cost. Low per unit cost, which means the product price is low. Per unit price is very low. Third one, targeted for, yes, targeted for price sensitive buyers. Sensitive buyers. These 3 simple key terms. The company which follows cost leadership strategy, these are the 3 things that they have to do. Why to go for standardization of a product? Suppose if a company have to go for customization, they have to modify the product for customer to customer, right? It will involve higher cost. Customer is having unique need, and to satisfy the unique need, they are changing the products. Then cost will improve. But in standardization, what is happening? Same product for everyone. Do mass production. You know about mass production? Like huge production, large volume of production. Already experience curve says, when you increase the volume of production, automatically per unit cost will reduce. That is what in cost leadership companies do. They will do mass production, bulk they will manufacture. Then automatically what will happen? Per unit cost will reduce. That's why standardizing the product, low per unit cost. When the product is offering for low per unit cost, the customer focus is sensitive buyers. Let's understand differentiation now. The companies which follow differentiation strategy, what they do is that they will try to satisfy the, yes, unique needs of the customer. Unique needs of the customer. If any company which wants to satisfy the unique needs of a customer, can they go for standardization in their production? Because they have to change the product as per the taste and specifications. When the product has been modified as per the taste and specification, will it show impact on the cost? Then automatically cost will improve. When the cost increases, they have to sell it for a higher price. When the price is high, the customer focus will also shift. Yes or no? Now, satisfying the unique needs of a customer, targeted for whom? Price insensitive buyers. Price insensitive buyers. That's about cost leadership and differentiation. In this too, there is one more thing that we have to understand. These two strategies focuses on broader market. Broader markets. which is nothing but product is for everyone. They develop the product. If you have money, you can go and buy. So what's the big deal in there? Any company develops the product. If you have money, we can buy. No. There are some companies and there are some products, even though if you have money, you can't buy. Do you know about this? Have you heard any such kind of products where even though you have money, the company is not going to sell you that? Automobile we can take. Rolls Royce we can say. And in Mercedes-Benz we have Maybach. If you know this model, in Mercedes-Benz exclusively there is a model called Maybach. Now, they won't sell you even though you have money. Sir, why? Because they will check your reputation. In those cars, they are limited edition cars. Maybach, I have entire world, I think only 50 are there to my knowledge. In India 50, the worldwide 50. This only, in India there are 50 only. The worldwide they have many. Yeah, but Rolls Royce there are some limited edition cars. Once I have seen. In the entire world there are only 6 to 7 I think I have heard. Which now this car is not for everyone. Even though if you have money, company is not going to sell you. That's why I said these two strategies are for broader market. In differentiation, if you have money, the company will satisfy unique need, you go and buy. These are the two strategies, cost leadership and differentiation. Let's check with the focus now. What is happening in the focus strategy? First of all, the meaning of focus strategy says that satisfying the needs of small group of customers. Now focus strategy, what it is doing? Satisfying the needs of small group of customers. The moment I say small group of customers, the target market will be narrow, small group, not for everyone. Like in the market there are so many customers, not for all the customers the company is selling the product. They are selling it only for a specific group, small group of customers. On that case, automatically the target market will be narrow market. Narrow market. Here the concept is not over. Again, focus is of two types. Again, focus can be understood two different ways. They are, yes, focused cost leadership and focused differentiation. Focused cost leadership and focused differentiation. Now what is this? Focused cost leadership, developing a product for low cost for narrow market. Simple concept. Developing a product for low cost, that too for narrow market. Which means the market and the customers are very less, but you are developing the product for low cost. I'll tell you a simple, actually this example doesn't exist. I have just created for understand this strategy. You all know Patanjali is basically known for their Ayurvedic products. Now they have entered into FMCG. Imagine if Patanjali do so, the situation that I am telling you now, that will come into focus cost leadership. Patanjali is developing a low cost Ayurvedic product to cure a rare cancer. If they do so, they are not doing, if they do so, there is a rare cancer. When I say rare cancer, target market is very narrow. And moreover, the company is offering the product for low cost. Then that strategy will refer to as focused cost leadership. Developing a product for low cost, targeting a narrow market. Focused differentiation, satisfying the unique needs of a customer, targeting a narrow market. The company is satisfying the unique needs but targeting a narrow market. The example which we have discussed, Rolls Royce and Mercedes-Benz Maybach. Now those two will come into what? Focused differentiation, not for everyone. Unique needs are satisfied and moreover the target is very narrow. Only for limited customers they will sell the product. There are so many examples we can discuss. Before pandemic, one of the Chinese companies have announced that a hotel in space. Hotel in space, they said, where a guest can stay for 1 week or so, prior by 3 months training, because you are staying in zero gravity. So you need to be trained. And they said that every guest have to pay around 21 crores or so. Yes. For 1 week, 21 crores they have to pay. Now tell me, what is the strategy of that company? Focused differentiation. Because narrow market, out and out unique need they are satisfying. There when we study the explanation, they say that the people, those who have distinct taste and preferences, for them only focused differentiation strategy is applicable. Your taste and preference should be something unique. Like for how many days I'll stay hotels on the earth, let me stay in the hotel in the space. One, he should have money. Second, his taste and preferences should be something different. Like there is a mobile manufacturer called Virtue. They develop feature phones but cost you more than 1 crore. Feature phone. Not a smartphone, feature phone. But it costs you more than 1 crore. Gold plated, diamond studded. Now who will buy? Think of it now. That strategy will come into focus. Differentiation. Got the point now? So understand the examples, understand the scenarios, concept is over. We are done with actually this chapter. Whatever you read will be revolving towards the concepts that I have said now. I'll take you through some of the key terms through material reading. Just brief up the concept once again. Cost leadership. 3 things will do. Standardized product, low per unit cost, price sensitive buyers. Differentiation satisfying the unique needs, targeted for price insensitive buyers. Both strategies targeting is broader market. Narrow is satisfying the needs of small group of customers. Target becomes narrow. 2 types of focus strategy is there. Focused cost leadership and focused differentiation. Focused cost leadership, low cost product for narrow market. Focused differentiation, unique needs for narrow market. Whatever you are going to study will be revolving towards the explanation that I have provided for. And every strategy will have their own advantages and disadvantages. Once you are done with once you understand with the concept, when you do the material reading, it becomes so simple for you. Let me take you some of the key terms to understand. In this chapter, we have one more concept called morning. I was saying that Porter's 5 forces model. Remember? That comes into this. That is nowhere related to business level strategies. I don't know why your board have kept into this. That is nowhere related to business level strategies. The right place for that is the second chapter, because Porter's 5 forces model is analysis. Probably it has developed by Michael Porter. That's why they might have kept in this chapter, because the 3 generic strategies are also developed by Michael Porter. Beyond that, I don't find any reason that concept to be here. So look at this question this concept can be asked in multiple ways. In certain cases, you have to answer the 3 strategies at a time, giving a short briefing of business level strategies. Even if it comes in the case study scenario also, if the question demands, you have to write all the strategies in one question, then this will be the right answer. You don't need to go for elaborate explanation. You can see this a short note on Porter's generic strategies. Cost leadership. What a company do here? A standardized product, low per unit cost. Yes, for consumers who are price sensitive. Differentiation, what is happening here? Unique products and services for price insensitive buyers. Focus, what it do? Small group of consumers whose market segment is narrow. Imagine if this question you are answering, just to grab the attention of evaluator, we can draw this outline. Whatever the 4 strategies that I have said, these are the outline. This outline you can draw. On one axis, competitive advantage. Morning I have said there are 2 ways of gaining competitive advantage. One, either to develop a product for low cost or try to be unique. This is what? Everything is interconnected here. Nothing new will come. There are 2 ways. One is either to be a low cost producer or differentiate the products and services, unique. And competitive scope, 2 markets, broader and narrow. The rest of the 4 strategies will fall. Cost leadership, companies focusing broader market, the competitive advantage is low cost. Differentiation, broader market, unique products. Like this you can draw. Rest of the 2 also falls in the same. Now check what has been asked in the question. If a situation comes where you have to write about the 3 strategies, then draw this outline and explain about those 3 strategies. If not, independently, question might be asked. Explain about cost leadership strategy. Then you have to provide all these explanation. What is the target market for cost leadership? Broad or narrow? Aims at broad, mass market. What the company have to do? Offer a product for low price for products better than your competitors, still you can make profits. And if the company have to develop the product for low cost, do they need to go for cost cutting? Companies follow cost leadership strategy. In cost leadership, if you have to reduce the cost of your product, then you have to follow cost cutting techniques. You have to reduce the cost. The techniques have been given here. It requires rigorous pursuit of cost reduction in procurement, production, distribution. In all these areas, go for cost cutting. And moreover, in this, there is one more point which you need to understand is that you can check with the point 6. Under what condition cost leadership strategy will give you good result? Good. Some conditions are there. First one, market should consist of many price sensitive buyers. Like I said, India consists of more price sensitive buyers. Observe, the companies which follow cost leadership, they grow very rapidly in India. In mobiles, Xiaomi, grown so rapidly. In FMCG, Patanjali, every year they are doubling their net profit because only strategy that Patanjali follow is cost leadership. Even in their advertisement also they say this. We are selling the product for a lower price when compared with the private players, they say this. The company which follow cost leadership, they will gain good market share. Now, how come Jio has become that popular even though the technology is new? What they follow in Jio? Cost leadership. They have offered a high speed data services for low price. That was not there previously. That has led them to grow like anything. So, cost leadership, if it has to be successful, market should consist of more price sensitive buyers. And there are few ways to achieve product differentiation. You can't differentiate your product. You can't add unique elements in your product. Then better to go for cost leadership. And next one, buyers don't care much about from brand to brand. Again, this happens in India. So many people so far don't know that the name of a brand is Xiaomi. They still think that it is MI. They don't bother about brands. What they want is that a product for low price. If the price requirement is satisfied, I am buying. I don't bother about brand. If buyer is not bothering about brand, in that market, the right strategy is cost leadership. And when there are large number of buyers with significant bargaining power, these are the conditions. Buyers have more bargaining power. Buyer says that I want a product for much lower price. In these conditions, it's better to follow cost leadership strategy. Any of the generic strategies at business level, cost leadership, differentiation, focus, any strategy that you follow, there is a common disadvantage. In the long run, competitor will copy. So any strategy, if you read this point, will come. So here it says that the competitor, look at the risk, it says, the competitor may imitate the strategy. For any strategy, this risk will come. This is about introduction. Then you can, how to achieve this, when you read, you will understand advantages and disadvantages. When you follow cost leadership, can you avoid the competition war if you follow cost leadership? Yes, because you are the one who is offering the product for such a low price. You don't need to worry about your competitors. And buyers don't exercise bargaining power on you because you're already selling the product for low price. Now, what buyer bargains for? It is already in the lowest standard. Suppliers, raw material prices increases, company have to absorb it. There is no other option because you have to manufacture the product for low price. Even though the raw material prices increases, companies will absorb it. And new entrants, can you create an entry barrier through cost leadership? Yes, when you offer the product for low price, new company cannot offer it for such a low price. Substitute, will buyer shift to substitute from you? No, you are offering a product for low price. His need is satisfied for low price. Then he won't shift for the substitute. Advantages. Disadvantages. Look, I have said everywhere you get this. What is this? Competitor can copy. And moreover, a firm can succeed with this strategy only if you can increase your sales volume. There are so many other companies which are offering the product lower than Xiaomi. but they haven't got the market share. Now what Xiaomi did, offering the lower price, at the same time you should put your efforts to increase the sales also. That's how. The same thing will happen for differentiation strategy, the meaning which I have shared. All, if you read, you will understand. Like, unique needs, price, insensitive buyers. Uniqueness could be of anything, like design, image, features, technology, in any of the area, uniqueness have to be adopted. Greater product flexibility has to be there, good maintenance have to be there, innovation has to be there. All these elements should be there when the company go for differentiation. Here also how to achieve will be there, and advantages and disadvantages. Look at the same areas which I have said. Advantages, existing rivalry. In cost leadership, you have an advantage over the competitor because you are selling the product for low price. In differentiation, you will have advantage with respect to loyalty. Uniqueness you are offering. Customer is closely attached to the unique features that you are offering. Then he don't shift to the other brand. Their price acts as a shield to fight against the competitor. Here, brand loyalty will acting to protect against the rivals. Buyers. Here also, buyer won't bargain because you are offering special features. Buyer know that if I have to get the special feature, I have to pay that much amount of money. He know that. So when you buy a Mercedes-Benz, it will give you so many features. Automatic climatic control. When it rains, automatic wipers will on. You have a panoramic sunroof. You have sensors everywhere. Now buyer know when this many offers have been provided, price will be high. Now you don't expect in Maruti Suzuki all these things. Buyer know when I buy Maruti Suzuki, I don't get all these unique features. That's why buyer won't bargain in differentiation because he know that he is getting some special features. Suppliers, these companies don't need to worry about if raw material price increases because here this company's target is price insensitive buyer. Even though the price increase, he is not going to bother. He will buy it in any ways. Even though raw material prices increases, all of a sudden if this company increases the price of a product, then also customer is willing to pay. So don't need to worry about raw material price. New entrants, innovatively you are launching products, unique products. Then it is very difficult for the new companies to give such kind of things. Then you have gained benefit with respect to new entrants. Substitutes, you have loyalty. You have loyal customers. When you have loyal customers, do you need to worry about your substitutes? No. Because customer is anyways not going to purchase a substitute product. Same advantages that we have discussed in cost leadership. Disadvantage, look, first disadvantage, this is what I said. Uniqueness is difficult to, why? In the long run, competitor will copy that uniqueness. It's very difficult to sustain. Sometimes you know what customer thinks. If he thinks like that, then it becomes as a disadvantage. I am paying so much money for this features. Let me check the another alternative for a lower price offering the same features. Suppose if customer thinks like that, it's a disadvantage. That is the point says. Charging too high a price for differentiating features may cause the customer to switch to another alternative. If customer thinks like that, look, suppose if a customer thinks like that, he is not a loyal customer. Because he is thinking that for the same price, let me check any other brand is offering me the same kind of features. If customer thinks like that, then it becomes an disadvantage. That's about differentiation. Focus, it says that fulfilling the needs of a narrow market, small group of customers. Here, yeah, whatever the market that you have chosen, it should be in sufficient size. There should be growth potential in the market, and it should be something which is not giving success to the competitor. When you follow focus, these three requirements have to be kept in mind. Sufficient size should be there, growth potentiality should be there, and competitors should not be entering into that market. The two types we have. Focused cost leadership and focused differentiation. What is happening in focused cost leadership? Competing based on low price, targeting a narrow market. While you are answering, first mention this point. This is a key term. Without mentioning this, you are writing everything that you want to write. Won't serve the purpose. That's what I am saying. Next, focused differentiation. What is happening here? Offering unique features that fulfill the demands of a narrow market. How simple key terms are? And then you add whatever you can add after mentioning those key terms. Focus is over. How to achieve this thing? Look, how to achieve every point, it's a niche. You know why this says everywhere niche markets? Because in focus you have to identify the narrow markets or particular markets. That's why the term has been used. Advantages and disadvantages. When you read, you can know about it. So in this chapter, we have one more concept called, the first concept, Porter's 5 forces model. Yes, what is this Porter's 5 forces model is all about? This is not a business level strategy first thing. This is for the purpose of doing analysis. Obviously created by Michael Porter. What analysis is this? Understand. Competitive analysis. If any company wants to understand the competitive pressures of the industry, then they can take the help of this technique. Already I said strategic group mapping. When there are so many competitors, you can't study them independently, divide them into groups and study. In the same way, in order to understand the competitive pressure in the industry, this technique can be used. Because companies cannot independently understand about each and every competitor. So that's why. And to understand the competitive intensity of the market, what Michael Porter says that don't study each and every competitor independently. Rather, I am going to provide 5 competitive forces. 5 competitive forces. When the company studies these 5 competitive forces, ultimately they could know about the competitive intensity of the industry. Okay, that's why it is called as Porter's 5 forces model. So in order to do the competitive analysis, that's why Michael Porter's 5 forces model for competitive analysis. So let's understand the other points. It is a widely used tool for systematically diagnosing of what? Principal competitive pressures. If any company wants to understand the competitive pressures of the market, don't study about each and every competitor. Rather, study 5 forces. When companies systematically diagnose these 5 forces, ultimately they will come to know about their competitors. Now, these 5 forces goes like this. First, I'll take you through the 5 forces. The 5 forces are: first one, threat of new entrant, bargaining power of buyer, bargaining power of suppliers, rivalry in the existing companies, threat of substitute. 5 forces. Now, companies studying these 5 forces to understand the competitive intensity in the markets. First, threat of new entrant. Can we say whenever a new entrant comes into the market, he will act as a powerful competitor for us? Obviously, when big company enters into the market, because whenever new company enters into the market, will they come with new capabilities? Imagine all of a sudden everything goes well, Tesla cars are available in India. Isn't Tesla is a powerful competitor for Maruti Suzuki now? In India, Maruti Suzuki occupies the larger market share. New entrant is always a powerful source of competition, because new entrant will bring new capabilities into the company. Now what to do? New entrants will come. If you have to stop the new entrants, what you have to do? Create entry barrier. The threat of new entrants can be avoided by the companies by means of creating entry barrier. Entry barrier stands for restricting the new companies to enter into the markets. There are n number of ways to create entry barriers. Let's understand some of the entry barriers. First one is capital requirement. Increase the capital requirement to enter into the industry. That is what Reliance did. Jio has increased the capital requirement. If another company have to establish a company like Jio, he need to spend 1,50,000 crores. Not possible for the companies to spend that much amount of money. Hence, they are not entering. After Jio, have we seen any new telecommunication company in India? Created already entry barrier. If a new guy has to come, he needs to spend a lot of money, and they may not be in a state to spend that much amount of money. Created entry barrier or not? Yes. Second, economies of scale. Offer the product for low price. Again, Jio did. Did or not? 4G or services has offered for such a low price. Then new entrant, the guy comes into the market, he can't offer the product for such a low price. Hence he is not coming. Economies of scale, reducing the per unit cost. Product differentiation. You are satisfying the uniqueness in every unique need you are satisfying. Then new guy, there is no option. He's thinking what kind of uniqueness I can offer for my customer. Already the existing companies have covered all the unique features, created entry barrier. Switching costs. You are using a brand now and all of a sudden another brand you have liked and you want to shift to it. In order to shift that new brand, you have to spend more money than the existing brand. Will you shift? No. Suppose if the price is so less, then you have to shift to other brand. You are using one brand and you have to shift to other brand. If the price is high, then you might be thinking, should I change or not? Because existing brand, comparatively the brand which I want to shift, the price is very high. So you will think whether to shift or not. Imagine to shift to the new brand, the price is low. Will you quickly shift or not? That is what switching cost stands for. In order to persuade the target customers of other brands to our company, we have to ensure our price should be very less. Then customer will easily shift. Jio did. Forget about offering for low. Mukesh Ambani said that, take it. Free. Then everybody shifted. Because shifting cost is negligible there. After he habituated, it's a big strategy. After he habituated all the customers, he kept price so low. Now you check, slowly he is increasing the prices without knowing to the customers. If you carefully observe, Jio prices are increasing now. Because already he made the people to habituated. They have habituated to that brand. Even though he increases the price, customer won't bother about it. And the company is doing well with profits. If you look at the balance sheets of Jio, they're doing pretty well. This is the strategy, switching cost. So persuading the target customers or other brands to our brand. Here the point is, when such last line, look, when such switching costs are high, buyers are often reluctant to change. If the switching cost is low, buyer will immediately change. You are creating entry barrier. Brand identity. Your company is having a strong brand identity. The new entrants may not create such kind of identity in the market. Access to distribution channel. Existing companies have covered all the distribution channel. For a new guy, there is no scope for distribution channel. In India, as of today, if you have started a cool drink manufacturing company, now obviously you go to the retailers to sell your cool drink, right? Will you get any retail outlet without having a refrigerator of either Pepsi or Coke? Now where will you sell now your product? You went to a shop and said that mine is a new cool drink manufacturing company that I have established. Will you sell my cool drink in your shop? He said that I have already Coke. Coke refrigerator is there. Because what Coke did? They have covered all the distribution efficiencies. No space for a new entrant now. Pepsi also did. Only market is occupied for Coke and Pepsi. Of course, our retailers are doing something different. Actually, Coke is having a policy. You are not supposed to keep other brand product in the Coke's refrigerator. They will keep curd and buttermilk also in that. If the Coke guy looks at that, he feel very bad, I tell you. Actual policy is that they are offering, they are giving a refrigerator with the Coke branding on that retailer, because they have to strictly maintain only the Coke products over there. There is no distribution channel left in Indian market occupied. No, new entrant can't come now. And possibility of aggressive retaliation. Existing companies are aggressively retaliating. New company guy will be scared. Already existing companies are aggressively retaliating with respect to price. If one company says 10 rupees, the other company says 9. If he says 9, the other guy says 8. Aggressively retaliating. The new company may not enter. Now all these things are referred to as what? Entry barriers. Next, bargaining power of buyer. What buyers will do? Buyers are forming into groups and cartels, and they are going to the manufacturer and showing pressure on the manufacturer either to reduce the price or to increase the quality. This happens only in where? Industrial products. Because in industrial products, the buyers are bulk buyers. When you are a bulk buyer, can you show bargaining power on the manufacturer? Because you are buying so much quantity, then you can show bargaining power. If you are not a bulk buyer, you are only buying one product, can you show bargaining power now? Not possible. That's why bargaining power of buyer stands for buyers are forming as groups, going to the manufacturer and pressurizing them to reduce the price or increase the quality. In which scenario this will applicable? Industrial products, not for consumer products. Same thing with the bargaining power of suppliers also. Actually, suppliers tend to show bargaining power under two conditions, not every time. When there is a scarcity of raw material, when suppliers are monopoly. In these two cases, they will show bargaining power. In the market, there is scarcity of raw material, then buyer will show bargaining power on more companies. If supplier, when one supplier show more bargaining power on many of the companies, that indicates that huge competition is there in the market. And supplier is monopoly. There are cases where suppliers are monopoly. Microsoft, Windows, Microsoft. By keeping aside Apple products, when it comes to laptops, any of the laptop that you buy, which operating system you will have? Windows. Now, can we say that guy is having a monopoly in the market? He is a supplier for all the laptop manufacturers or not? Personal computer manufacturers, Windows is a supplier. Now, he can show bargaining power because there is no other option. That's what bargaining power of suppliers. Rivalry among existing firms. Yes, this will quite happens. One company will be fighting with the others. Rivalry among the existing players is quite obvious, because that will help us to understand the competition. When there is a rivalry among the competitors, that indicates competition exists. Next, substitutes. I said new entrant is a powerful source of competition, right? Substitute is a latent source of competition. Latent is nothing but indirect. Already in competitive landscape I said direct and indirect. In indirect competition we are going to have substitutes. Even substitute also show lot of influence on our product. So by understanding substitutes we can know competitive pressures. By understanding rivalry in the current players we can know about the competition. When you study these 5 forces, consciously keep one thing in your mind. These 5 forces are helping the company to understand the competitive pressures. Then you will understand the concept. So we are done with this chapter. Okay. 5 forces model for competitive analysis and 3 business level strategies. Now corporate level strategy is completed. Business level strategy is also over. Now what is the third level that we have? Functional level strategies. Now what is the objective of this particular chapter? This chapter talks about the strategies that are prepared for each and every functional area. Organization is combination of different functional areas. Agree? Functional departments. In those areas, what kind of strategies have been designed? It is a concept. This chapter talks about the strategies that are prepared in each and every functional area. How many functional areas we are going to cover? Marketing, finance, production, R&D, logistics and supply chain, HR. 6 functional areas. And what kind of strategies and what kind of functions that are performed in those functional areas we'll be understanding in this particular chapter. So let's begin with the first one, marketing. Marketing strategy formation. Yes, a broader and extensive area to be covered. We'll try to curtail to the major things that are needed to be known. First, with respect to marketing, we have to know the definition of marketing. Just to understand the content, I am giving you this definition. Yes, here we have the definition of marketing. What is marketing stands for? Marketing is a social and managerial process by which individuals and groups obtain what they need and want through creating, offering and exchanging of product value with that of others. First of all, marketing is a process. What kind of process? Social and managerial. Happens in the organization as a managerial process. Happens in the social process where people also do marketing. In techniques we'll have person marketing. In marketing strategy technique we'll be having concept called person marketing, right? That's why it says social process. Is marketing helping us to satisfy our needs? Yes or no? By the by, what is marketing is all about? Why marketing? Good. Marketing will create awareness of the product among the customers. Without marketing, we can't know such kind of product is available in the market. Somewhere it is manufactured in the factory, went to distributors, and ultimately through retailers, the product is available in the shop. How customer can come to know such kind of product is available in there? Only when the company do marketing. That's why marketing is trying to satisfy our needs. Because company do marketing, we get awareness, we go and buy the product, hence our needs are satisfied. That's why it says it is trying to satisfy needs and wants. How? Through creating, offering and exchanging of products value with others. Company will create the product. Company will create the product. Company will offer the product. And what we are doing? Exchanging product value with others. You know why value with others term come? By the way, this definition has been given by Philip Kotler. Philip Kotler, who is referred as father of marketing. Philip Kotler has given this definition. Why Philip Kotler the last term value with others says? Yes, when we purchase a product, we are giving something which is having value and we are taking something which is having value. Now go to shop, give a white paper and say money is also paper, take this paper and give me product. Then he'll throw you out. Value. So beautifully Philip Kotler have written value with others. This can be applicable even in barter system also. Because what happens in barter system? Goods were exchanged for goods. You give a good which is having value and take a good which is having value. That's why he said that exchange of products value with others. This is how the definition of marketing goes. After this, in marketing, there is another concept that we have to know called as marketing mix. So just a small outline to understand this marketing mix. Whoever is not able to deal with the air conditions temperature, help out with yourself. I can see so many people are having discomfort because of the temperature. Just circulate the remote and change the temperatures, and here it is needed. I think whoever needed, take it. Remote is here or there. Adjust the temperatures according to your convenience. Still you have to sit for 1 more hour. Sir, after 1 hour you don't feel as like moving, sir, will become stiff. Better than that, change. So marketing mix. So after some time switch on, because that is needed for me also. Now as of now you switch it off, but after some time. As of now it's okay. The concept is marketing mix. The entire marketing depends on this marketing mix. Easy concept. What is marketing mix consist of? Marketing mix consists of certain variables. We can call them as controllable variables. And in marketing mix, these variables are represented by 7 P's. That's why we call them as 7 P's of marketing mix. And moreover, we can call them as controllable variables. When company understands all these 7 variables, then marketing program of a company will be successful. These variables are again divided into 2 heads. Whatever the 7 variables that I have said, they are divided into 2 heads. Some are called as 4 P's of marketing mix. 4 P's of marketing mix, and then we have expanded 3 P's of marketing mix. So overall we have 7 P's now, 3 P's and 4 P's. Understanding the 7 P's is marketing mix concept. Let's check with the 4 P's of marketing mix. Wherever you learn about marketing, marketing mix concept is must. They will teach you this marketing mix. Whenever you learn about marketing, the 4 P's goes like this. Product, yes, price, place and promotion. First, let me explain this. Meanings are so simple. In this, meanings are not complicated one to understand. Meanings are simple to know. Product. How to understand the meaning of this term product? Goods and services manufactured by the firm. Meaning is over. Product stands for either it can be a good or it can be a service. Goods and services manufactured by the firm is called as product. Why to consider it as one of the variable in marketing mix? Marketing is for what? Marketing is for what? Just now we said. Creating awareness. Among whom? About what? Now without product can we start the marketing concept? That's why the first P of first variable talks about product. In order to do marketing, first we need to have a product. Goods and services manufactured by the firm. Is the company is offering the product for free? The second variable talks about price. Amount paid by the consumer to obtain the product. The amount that we are spending to obtain the product is called as price. Price is also an important variable in marketing, where the sales in most of the cases depends on the price. That's about price. Place, where the product is available for the target customers. Simple key terms. Where the product is available to target customers is called as a place. More the places the product is available, more the customer will buy the product. Promotion. What is the intention of promotion? You might have heard this term promotion in entertainment industry. Before the movie releases, they do promotional activities. Movie, we are doing promotion, they say. What they do before the movie releases in promotion? Wherever you see, they will only come. Every serial, every TV program, on social platform, every news channel. Recently, you might have come across with this for a movie. Everywhere. Wherever you go, you are seeing their faces. That is promotion. Now, what is the intention of promotion? Let us understand that. Promotion stands for persuading the target customer towards your product. Persuading, attracting. Now, as an audience, what do we think? What kind of attracting that you are doing? Not that kind of. So, persuading the target customer towards the product is promotion. Everywhere you see these promotions are happening, then as an audience you might be thinking that let me go and watch. Everywhere they are coming, everywhere they are talking about it, first let me go and watch. Common human tendency. Or else we call it as herd mentality. Everyone think like that. A hype will be created. Every channel they are coming and talking, creating stories about the movie. They are saying this is what we did, this is what we did in the shooting is happening. They will talk about the stories. Look at these promotional activities. When an interview is going on, the interviewer will be asking, can you tell some stories about what happened in interview? Then they will tell, this is what happened while we are shooting. This is how he did, this is how he did. We both quarrel, he is the mischievous guy in the... They will do this promotion. And then we will become so crazed. Wonderful thing is happening. Once the movie release, immediately I should go and watch. In fact, there is no connection between what happened in the shooting and what you are going to watch. But it will create that interest. Promotion. Persuading target customer towards the product. Got the meaning of promotion? Persuading target customer towards the product. Not yet done with the promotion. There are 4 types of promotional activities can be done by the companies to persuade the target customer towards the product. They are, first one is Personal selling. Next one is advertisement happens. Next one is publicity. Next one is sales promotion. That's why in the morning I have decided I am not going to keep it in a vibe until evening. I know that even in lunch, if I keep that in a ring mode, then I'll forget when come to class and it will ring. That's why in the morning I have decided until 8 o'clock it will be in a silent mode only. You also do that. It's okay. It happens. Nothing wrong. Now you'll be thinking a big sin I have committed. My mobile got rang. No need to worry. It doesn't mean that now you're going to make it on a ring mode. Anyway, sir said let it play a good ringtone. Don't do that. These four are promotional activities: personal selling, advertisement, publicity, and sales promotion. Quick briefing. Personal selling. Every one of you might have come across with this personal selling. You are not doing it, but you have come across with that. The guy who come to the house by selling some products. You might have come across with the people who will come up with these reference books, dictionaries, encyclopedia. Whatever they do is personal selling. Understand the key terms in personal selling. Happens with oral communication because the guy is coming to and orally explaining about the product. Personal selling happens through face-to-face oral communication. Personal form of creating awareness because a person is coming to you and explaining about the product. Personal form of creating awareness happens through face-to-face oral communication. An interesting part about personal selling is starts with a mutual interaction, ends with a sale. Because the sales guy, when he come, what he'll say, sir, listen to me first, don't buy. You don't need to buy, sir, first listen to me. Then he will start the mutual interaction and ultimately it end up with a sale. These are some of the points about personal selling. Okay. Personal form happens through face-to-face oral communication, starts with mutual interaction, ends with a sale. Advertisement. And moreover, cost. Good point you have reminded. Personal selling is not a cost-effective means of reaching large number of customers. Why? Not a cost-effective means of reaching large number of customers because to do personal selling, the company needs to invest money, hiring executives, paying them salaries and allowances. Money is involved. Even though you are spending money, can you reach large number of customers in personal selling? No. That's why the point says not a cost-effective means of reaching large number of customers. These are the four key terms. Advertisement happens through via different channels. Print media we have, broadcast media we have, digital media. By using any of the media, you can do the advertisement where creativity can be involved. Publicity. In personal selling and advertisement, do you need to spend money? More or less, you have to spend money in both the activities. Publicity is one such kind of activity which happens without spending any money. You are not spending any money here. Neither directly or indirectly, you are not spending any money here, but skillfully, you are keeping a piece of information in the media without paying anything. For publicity, key term is without paying anything, you are promoting your product. As promotion, I have said about entertainment. There is a one guy in entertainment industry who is known for publicity, a film director. Whenever publicity comes, he will come in my mind. Mr. Ram Gopal Verma. Look at his movies. Rajmouli, the poor guy, did a movie and spent so much of money for promotion. They say that they have spent more than 5 crores only for promotion. No, for promotion, I think they have spent 5 crores. Having special merchandise also. They are wearing the special merchandise. With that, and booking a chartered flight, roaming throughout India, other countries also, and they are doing promotion. Look at our guy. Only he will announce the title of the movie. Done. Good amount of promotion happened. News channel people will call for interview. 1 hour interview happens. He will scold few and few will scold him. Publicity is over. Why to spend money? That's called publicity. Without spending any money, if you are skillfully promoting your product, that comes into publicity. No money is paid to the media either directly or indirectly. It's a promotional method. Sales promotion, any kind of promotional activity which is exclusively done in order to increase the sales. There the answer lies, sales promotion. Any kind of promotional activity which has been done intended to boost the sales, discounts, offers, cashback, money refund, 1+1, 50% extra. All these are sales promotion. You check with the market, wherever there is a discount, flat 50% discount. Within 2 days, the entire stock is gone. Sales increases. They don't even check whether it is needed for me or not. It is in discount. Let's buy first. Later on, we'll decide who will use it. For companies, discount concept is so unique. If we think a bit logically, we will understand what is how company thinks and how customer thinks about discount. Like how customer thinks, 1000 rupees product, company say 300 discount, you'll buy it for 700. Now after coming home, very proudly you're thinking about yourself, look how smart I am. I have purchased a 1000 rupees product only for 700, your version. I'll tell you the company's version now. Company is thinking, look how smart I am. I am successful in spending 700 rupees from the customer. Got the difference now? You're thinking of saved 300. You're not thinking of the money that company was successfully spending from your pocket. 700. It's other side of a coin whether you need the product or not. Sometimes because of discount we buy the product which even we don't need it. That's how the concept is. Some discounts are not discounts. You will think that it is a discount. Or Mukesh Ambani do this again. Trends. Where you analyze this, there is no discount in that. Coupon. How psychologically he play every time with the customer minds. I am amazed. He will give you the coupon where 500 is written with the big words. Isn't it? The moment you take the coupon, you will be having a psychological satisfaction as if you have 1000 rupees with you. Once I have analyzed this discount, then I have come to know this is not a discount. It is just 20% discount you will get. I have calculated how this will happen. First, I will go to Reliance and I will buy 3000 rupees. Then they will give me 2 coupons. 500 and 500, 1000 rupees. Now I am thinking that I have purchased 3000 and I have got 1000 rupees with me. No. If I have to redeem this 1000, again I have to purchase. Minimum 1250 for every coupon. Now 2 coupons I have. 1250 plus 1250. 2500. Look at my total purchase now. 3000 plus 55. The discount that I got is 1000. Now if you calculate this, how much percent of discount I got? Hardly 20%? Around? It will come like that, right? Suppose if the Reliance says 20% discount, will customer go and buy? No. Coupons. And they will give a physical coupon. And there also they will keep a deadline. It is not lifetime coupon. Now there are some customers, now they are thinking, unnecessarily the coupon is getting expired. Let me go and buy. He is worried about the coupon expiry. He is not thinking whether I need to buy the product or not. This is how discounts work. They will keep you in trap so that you can purchase the product. Then I have applied one more logic here. Okay, they have their own logics. I have my own logic. Now along with our friends, we have decided we will buy systematically. Festive shopping. First one friend will go and buy. He will get the coupon. I will use the coupon. Now I am a first time buyer. Now the real discount is applied for me. Of course, first guy have to sacrifice. Now the coupons that I got, now I will redeem the coupon. Again they will have given me some coupons. Now I will give it to the others. This is how we have made a plan. Then the real discount is applied for us. That's how sales promotion works out. All the discounts, cashbacks, money refunds, EMIs, kiosk model. You know about kiosk model? Kiosk model is nothing but moving model of business. Like food on wheels, you know, food on wheels. That's kiosk. Any business which can be mobile from one place to other. All this will come into sales promotion. We are done with 4 P's. Product, price, place and promotion and the 4 promotional activities. On the other hand, we have expanded 3 P's of marketing mix. That's simple to know. Yes. People, physical evidence and process. These are the 3 expanded P's. People, all human element who are contributing for marketing, including employees of a company. Because yes, employees are needed to do marketing. So people stands for all human elements who are actively contributing for the marketing. Physical evidence, the market where the company is delivering its offers, where the environmental factors exist, is called as physical evidence. Market will act as a physical evidence. Process stands for procedures and mechanisms. Procedures and mechanisms by which marketing has been done, we call this as process. People is human elements, physical evidence is market, process is procedures and mechanisms. That's about 7 P's of marketing mix. This is how the 7 P's, here 4 P's have been given, and then the expanded 3 P's. After this, the promotional activities, all the key terms that I have said will come, like oldest form, face to face, interaction, everything will come in here. Advertisement, non-personal, highly flexible, you can say. Publicity, skillfully promoting product without any payment, all the key terms will come. If sales promotion, look at all the sales promotional activities here, they have been given, like discounts, contests, money refunds, installment. This one I have said kiosk, moving model of business. This will help to increase the sales. The customer don't need to go to the shop, rather they are keeping some kiosks. Like you will be seeing this for automobile. Sometimes the automobile companies will be establishing a small setup at the adjacent to the road where they will sell bikes and cars. Previously this used to happen for telecommunication, like SIMs used to sell like this. They will come into kiosk, sales will increase. Exhibition, fair, all these things will come into sales promotion. What are the sales promotion is intended to boost the sales. Now when you go for sales promotion, this will improve your market share. As the sales improve, market share will also improve. There's about a 4 marketing mix concept. And then we have some marketing techniques. A quick briefing I'll give you. Pay attention. Social marketing. Any kind of marketing activity which is exclusively for promoting a social cause or idea. No smoking campaign will come into social marketing. Because what it is doing, promoting a social idea, cause or practice. Theater, before the movie starts, we see some advertisements. Mukesh used to come previously. Now a lady is coming and saying that I have sold my 2 bangles. She will say in a way that she sold because of we. Because I am not responsible for your sale of bangles, kindly. She says in that way, I have sold my 2 bangles. And now these 2 advertisements tell me, are they selling any product? Is it for promoting a product? No. No, don't say that. Yes, sir. By looking at the advertisement, I felt like having it. The advertisement said don't have. What is that advertisement is meant to do? Social idea, cause or practice. Next, augmented marketing. This marketing is with respect to additional customer benefits built around the actual product. You buy a product, additional benefits you get with the product. Like when you buy a car, companies say free services. When you buy an air condition, companies say installation. When you buy a refrigerator, companies say we will provide you training. Additional services built around the actual product. They are called as augmented marketing. Direct marketing. Any kind of marketing technique where company is directly interacting with the customers. The key term says interact directly with the customers. Like sometimes we get calls from the companies, we get mails from the companies. Direct marketing it talks about. Sometimes what some companies do is that they will try to establish their own TV channel. Naptol. 24/7 they sell their products over the direct marketing. I am directly approaching my customer, no need of any intermediaries. Home Shop 18, Naptol. TV shopping it will commit as direct marketing. Relationship marketing. Any marketing which is for establishing long-term relationship with the customers. To establish long-term relationship with the customer, you see some companies what they do, they will give you some special offers to you. If you are associated with the company for a longer period of time, they will give you some special offers. Because they want to maintain long-term relationship with you. That's why they are offering you special offers. Imagine if I buy most of the products from Pantaloons. Imagine if this happens. Now what a Pantaloon guy do is that they will select a week, They will call it as, suppose if it is my birthday, they said it's your birthday week, we will give you 30% extra discount. Because they want to maintain long-term relationship with me. That will come into relationship marketing. Next one, services marketing. If you don't confuse, I'll give you a term. Services marketing stands for marketing to services. If you are not confusing, you can understand this. Services marketing is nothing but marketing to services. Every time, marketing is not only for product, marketing is even for services also. We see an advertisement of a bank, we see advertisement for insurance, we see advertisement of telecommunication. All these marketing is selling of what? Service. That's what it says. You can see the key term also, marketing to services. Next, person marketing. A person is doing marketing of himself. Politicians, celebrities. Politician at the time of election, he will do person marketing. This is what I do for you. This is what I do. Person marketing. This talks about, the key term is maintaining, changing attitude or behavior toward a particular person. About a person, he is creating that. That's a person marketing. If the same thing is, look, for organization, person and place marketing, same key term. Key term is same. You just have to change at the end. That's why I have highlighted it. Person marketing, maintaining, changing attitude and behavior towards a person. If it is an organization marketing, look at this. Creating, maintaining, changing attitude and behavior towards an organization. Because the company is creating awareness about it itself. That comes into organization marketing. Instead of product, the company is creating awareness about the company name. They want to know, people can realize that kind of company exists. That's about organization marketing. Next, place marketing, same key term. If you observe, create, maintain or change attitude and behavior towards a particular place. Usually tourism departments will do this to create awareness about the place. That's about these three. Enlightened marketing. The company's marketing program should run in the long run. Then it is called as enlightened marketing. It's not that you are marketing giving you result only in the short run. Whatever the marketing that the company is following, this should help you to give benefit in the long run. If it should give benefit in the long run, the company should follow 5 principles. Your marketing should be customer oriented. In your marketing, you should have innovation. Do value marketing. This point is missing here. It's called as sense of mission marketing. Kindly add that. Not sense of marketing. It's sense of mission marketing. So do marketing with a purpose. Next, societal marketing. Nothing but social marketing. 5 principles. If any company adopts these 5 principles, then what happened? Their marketing will run in the long run. It's called as enlightened marketing. Differential marketing. When the company focuses on several market segments and design separate offer for each segment. Different segments they are focusing and giving separate offers for different segments. Example you can check. Hindustan Unilever, when they manufacture soaps, they have segregated soaps into 2 segments. You can see the example over there. Lifebuoy, Lux and Rexona will come into popular segment. L'Oreal and Pierce will come into premium segment. Now they will give different advertisement for different segments. In premium, we can add Lux also. Even they have added Lux into popular, it can add into premium. Because you see, for Lux advertisement, only superstars will come. Have you noticed this? Every time, Deepika, Katrina, even Shah Rukh Khan also have come. Yeah, it happened. Even Shah Rukh Khan came for Lux advertisement. Premium. Supporting the heroines. In that advertisement, actually, that's what he do. Other heroines will be there, but he'll be supporting that heroines. So this is about differential marketing. Targeting different market segments, coming up with different advertisement. Coke also do this. When Coke give advertisement for Thumbs Up and Coke, he always choose celebrity, superstars. In every industry, he will take superstar for Coke and Thumbs Up. But for rest of the product, they may not choose superstars to promote. Differential marketing. Different products, different marketing. Synchro marketing. In synchro marketing, what the company have to do is that, this can be called as seasonal marketing. When there is no season, the demand will be less. Through flexible pricing, companies should try to increase the demand. It's called as synchro marketing. Like regulating the pattern of demand when there are fluctuations in the demand. If any business that runs on fast food, let's take Domino's and KFC. Can we say for Domino's and KFC there will be high demand in weekend? Saturday and Sunday there will be high demand. In weekdays demand will be less. That's why KFC say Wednesday offer. Because they want to increase demand in midweek. When there is no demand, they are trying to fluctuate the demand. Now that is called as synchro marketing. Got the concept? Yes. Concentrated marketing, where company have to focus on sub-markets. Focusing on sub-market is concentrated marketing. Demarketing, in demarketing, company have to do three things. Reduce the demand of a product intentionally. Second, to shift the demand of a product. Third, don't destroy the demand. There is a small error here. Strike it off this permanently. In demarketing, you are not supposed to destroy the demand permanently. You are not supposed to do that. In demarketing, either to reduce the demand or to shift the demand, but don't destroy the demand. Why company is intentionally reducing the demand of a product? Because there is a mismatch between demand and supply. Huge demand is there in the market, but company supply capacity is very less. Then there is no other option. Reduce the demand. It's called as demarketing. Three things. Reduce the demand, shift the demand, but don't destroy the demand. These are some marketing techniques. Finance we can ignore. In finance, this concept you have to understand. Only this concept I'll explain in finance. If any company wants to start a new project, do they need additional funds? Yes. Now the question will be asked, you being a finance manager, how you are going to procure the funds in order to implement the new project? This is the question. For the implementation of new project, company requires additional funds. You being a finance manager or you being a strategic manager, how you are going to suggest the company to procure the funds to implement the new project? It's a question. Actually, it's a practical question to be asked. In order to generate the answer for this question, let us divide this into two parts. First, you have to write that being a strategic manager, the first responsibility is to design a good capital structure for the project. Obviously, a good capital structure should consist of two things. Debt and equity. You are explaining about this. A good capital structure will be designed. A good capital structure is the one which have a good appropriate amount of debt and equity. Even though the company is in profits, they are not supposed to purely depend on the equity to project a fund. You know about this. What happened if the entire project is funded on equity? The ownership will dilute. That's why it's good to have some debt in the capital structure. You will explain this. And then to get the funds, what the company have to do? These 4 points. First, design a good capital structure. Then procure the capital by working capital borrowings. You will have some reserves and surplus as source of funds, and you need to maintain good relationship with banks and financial institutions. These are the ways by which you can procure the capital for new project. The rest of the 2 point talks about the thing which I have said. Generally, fixed debt obligation must met irrespective of profits. Here you need to explain what happen if you don't use debt in your capital structure. That is the point says. If ordinary stock has been issued to finance a project, ownership may dilute. Because the hostile acquisitions are happening in the market, any company which is having interest in your project, they may acquire you. This is how you should develop the answer. First write about capital structure and then write these 4 points, how you can procure the funds for a new project. That's about finance. Finance is not a big thing to understand. One more thing in finance. Yes, it is also needed. How the worth of a business is evaluated. There are 3 ways to evaluate the worth of a business. First one is net worth or stockholders equity. You know about net worth. What elements will come into net worth? You write about it. That is a thing says here. Net worth is nothing but sum of common stock, additional paid in capital and retained earnings. And then you will subtract an appropriate amount of goodwill for overvalued or undervalued assets. In a very simple way, net worth is nothing but total assets minus outstanding liabilities. Like explain about the entire net worth concept that you know here. But don't explain so financially, I know about net worth so much. This basic is enough. Next. Future benefits to owners through net profit. This is not a calculative one, imaginative one. Understanding the net worth of a business by this way is an imaginative one. Why it is imaginative one? Read the point, you will understand. Future benefits to owners that comes in the form of net profits. As a owner, can you tell what kind of net profits you will get in the future? Can you exactly determine your net profits? No. That's why here an imagination has been made. How the imagination has been made? The net profits have to be increased 5 times for future. Look at the term what it says. A conservative rule of thumb says a business worth is equal to 5 times the current annual profit. You are increasing 5 times the current annual profits. Whatever the annual profits that you have now, you are increasing it for 5 times for the future. Is it really that every business current annual profit can be increased 5 times for future? That's why it is an imaginative one. So that you will have an appropriate amount by which you can say your net worth. So the method says future benefits to owners that comes in the form of net profits. For this, the current net profits are going to be increased 5 times for future. First method is net worth. Second method is future benefits to owners that comes in the form of net profits. Third one is market determined net worth. Again, market determined net worth is of 3 ways. Comparative price method, PE ratio, outstanding shares. What is comparative price method? Based on the selling price of a similar company. Comparing. There is a similar company like yours, which is meeting up with all requirements. When I say similar companies, production capacity might be same, distribution efficiency might be same, financial structure might be same. Everything is equal. Whatever might be the net worth of that company will be yours. So what you're doing here? Comparing. That's called comparative price method. Even the explanation talks about the same. Based on the selling price of a similar company. You know about P ratio. You know the P ratio formula. Market price per share is divided by annual earnings per share. Then you will get an appropriate amount to know the net worth. Next, outstanding shares. Even for this also a small calculation will be made, multiplying the number of shares outstanding by market price per share, and you are going to add a premium. Then you will know outstanding shares method. These are the 3 things that will come into market determined net worth. And majorly there are 3 ways to understand the worth of a business. What are the 3 ways? First one, net worth. Next one, future benefits to owners through net profit. Market determined net worth. Market determined net worth is 3. Comparative price, PE ratio, outstanding shares. That's about finance. Production. Production strategy. For this, a small outline to be understood to know easily. Production strategy. All the activities that are part and parcel of production strategy are majorly categorized under 2 heads. Whatever happens in production under production strategy, they are categorized under 2 heads. Some of the activities can be discussed under production system. Some activities are discussed under operations planning and control. Okay. All the activities with respect to production strategy are majorly categorized under 2 heads. Production system, operations planning and control. Now, on what basis like this division has been done? Whatever happens under production system, usually it will be in long range in nature. All the activities that happens under production system is long range in nature. Whereas activities that happens in operations planning and control, they are related to day-to-day operations. These are with respect to day-to-day operations. Okay, on this criteria, they have divided the activities. Let's check the activities that come into production system. Whatever the activities that I am writing here, their nature is long range in nature, right? Okay. The activities goes like this under production system. Defining plant capacity, comma, location and layout. Capacity, location, layout. Tell me these three things, will you change it regularly? The capacity of your plant, location of your plant, layout of your plant, can you change it frequently? Not at all possible. You can't change it frequently, right? Will you quickly call someone if someone is available here? Yes. So these are the activities that comes into production system. Plant capacity. You know about the capacity of the plant? How many units have to be manufactured? You can't change the capacity every day. Location. Is it something day-to-day activity that every day you are changing your location of the plant? Once you have decided it is going to be for long term. And next one is layout. How does the plant should look like? You can't change the layout of the plant so regularly. If situation demands, you might be making some minor changes. All these three activities come into production system. Next, product or service design. Product or service design. This is also something a bit of long range in nature. You don't change the product and design regularly. On day-to-day basis, you don't change. That's why it also come into production system as a long range activity. Degree of automation. Degree of automation. In production, degree of automation, three options are there for you. For a company, three options: fully automated, semi-automated or manual. How your production should be? It's comes into degree of automation. And this also you can't change regularly. Yesterday you said entire my factory is automation. Now you are changing it to manual today. You can't do that. This is something related to long range in nature, degree of automation. Next, extent of vertical integration. We have already discussed about vertical integration in the morning. To what extent you can vertically integrate? Either you may vertically integrate backwards or forward. In backward, whom we are integrating? In forward, whom will you integrate with? So to what extent you will go vertical integration? It is also production strategy. These are the 4 simple activities. Plant capacity, location, layout, product or service. There is one more thing I think I have missed. Work system. Yes. Work system. Work system talks about how the work should happen in your plant. Suppose if company is something which is manufacturing cool drinks, there should be a work system in the plant. First, the bottles need to be washed, then they have to be filled, then they have to be labeled, then probably they might be capped, packed. These are the activities, right? Sir, I'm a very unique production guy. First, when the bottle comes into my plant, I will do capping, sir. Where do you fill? Then you do that. There is a system, right, to do. It's called as work system. You can't change this work system. Once you decided, automobile company. Okay, first we will fix the tires, then engine, then interior, then exterior, painting, finally. Process is there. This is something related to long range in nature. These are the activities that comes into production system, which are long range in nature, where a production strategy have to consider. After this, we have some activities, operations, planning and control. These activities are related to day to day. Let's see how they goes on. This talks about production planning. Production planning. Regularly you have to do production planning, right? When daily basis production planning happens, you need on regular basis material supply. You need material supply or not on regular basis? When production is happening on regular basis, then on regular basis you need to check with your inventory management. After inventory, you should check with cost and quality. On regular basis, you need to check with your cost and quality. How much cost, under the limit of cost is happening or not. Quality issues have to be checked. And finally, maintenance. Maintenance of equipment. Plant and equipment. It's very important to maintain the equipment. What happens if equipment is not properly maintained? A sudden breakdown happens in a factory. This will lead to create huge loss. These are the productions. This is production strategy. I have given you in the form of points, but when you read, it will be in the form of a paragraph. Like the first one is production system activities. And these activities nature is long term in nature. Operations, planning and control. The first point talks about all the activities that I have given. Usually they are related to day-to-day operations. These things have been done in the light of long-term objectives. These day-to-day operations are with respect to the long-term operations. Enough about production. Yep. What is logistics is all about? Transportation. Movement of goods from one place to other place. One major key term that you have to remember about logistics is logistics ensure right materials are available at a right place, right time, right quality and at the right cost. And we can correlate effective logistics of a company will help the company to gain competitive advantage. Look at the interconnection I am establishing. If any company which is strong in logistics, that will help to gain competitive advantage. How come? Good logistics improve delivery time. When it improves the delivery time, creates customer satisfaction. Customer satisfaction will help you to lead competitive advantage. These are the advantages that says. Look at the advantage. Yes, it helps to save your cost. If your logistics is good, you don't need to have heavy inventory. Can you have minimal inventory? Because in time raw material has come, in time finished good is going out of the organization. That's why effective logistics will help to reduce the inventory. And next, it will improve delivery time. That leads to customer satisfaction. Ultimately, you can gain competitive advantage. These are advantages. And remember these issues also. When you're writing about logistics, just keep in your mind to understand these issues. You always think like, okay, as a logistics manager, these are the issues I have to keep in mind to create a good logistics strategy. What the issue says, first one, what components are available to transport? You always think like a logistics manager when you're answering this question. As a logistics manager, first issue talks about what components are available so that I can transport. That's the first point. Components and materials are available. Next, for the company that you are acting as a logistics manager, you should check how many manufacturing locations your company is operating. In those locations, what products are being made? Take ITC. Will ITC manufacture all the products in same location? They have stationery in one location, tobacco in the other location. They have like FMCG products in the other place they will manufacture, which means companies operating in different locations. In different locations, they are developing different products. That's about what products are being made. And for all the products, you can't use same kind of transportation. Then what mode of transportation should be used for different products? If it is a perishable product, you should choose a speedy mode of transportation. If it is a flammable product, you need to have a closed container, carefully you are taking it. So you need a mode of transportation. And moreover, what about distribution facilities? Because ultimately distribution facilities will help you to take the product to the customer. It is not enough to have strong logistics. Along with the logistics, you need to have a strong distribution facility also. And what material handling equipment is used? Imagine you are transporting a flammable oil. Imagine a petrol. You can't send it in a vehicle which is open from the top. What will happen? Nothing will be there when it reaches the destination. Material handling equipment is very important. You are transporting milk. A stainless steel container has to be there. You can't send it in iron container. By the time it reaches the destination, from milk it will become boost. So material handling equipment, what you are using is like other case, you are a logistics manager. You need to lift a heavy good and keep it in the vehicle. I will recruit some 100 people for this, sir. They will lift the product and they will keep it in the vehicle. Is it so? You need a lift crane that will pick the product and keep it in the vehicle. Material handling equipment. Logistics manager, you check with that. What product you are transporting, what equipment you need. It's a part and parcel of your logistics strategy. And deploying inventory in logistics. Inventory, stock. What is the stock that is available with raw material? What is the stock with finished goods? Check with the inventory. And finally, whether you need to have own transport vehicles or go for outsourcing. You check with the logistics thing. Whether my company need to have my own vehicles or do I need to outsource it? Some good logistics issues. Definition of logistics, issues of logistics, advantages of logistics. Simultaneous to logistics, we have a concept called supply chain management. Supply chain talks about creating a link between three people. Already I have highlighted that. Suppliers, manufacturers and customers. To simply answer, in a broader sense, if you have to understand about supply chain management, supply chain starts with the customer and ends with the customer. I can say that. We can understand like this. Because all the activities starting from identifying the customer need until the product reaches, like the point says here, it involves all the activities from point of origin to point of consumption. Origin, let's say manufacturing. Point of consumption until it reaches to the customer. All the activities that happens in between will come into supply chain management. All the activities that happens from point of origin to point of consumption. The key term, meaning of supply chain management, what is happening here? Supply chain creates a link between whom and whom? Suppliers, manufacturers and customers. Like I can say it starts from procurement, manufacturing, distribution, marketing and sales, services until the product reaches to the customer. Everything is supply chain management. All these activities have to be, all the supply chain activities have to be properly planned, implemented and controlled. That is what effective supply chain is all about. If supply chain management have to be implemented successfully, there are some activities have to be done, steps. These are steps in the implementation of supply chain. What is the first thing that has to be done? product development. You need to identify the need, what product have to be developed. In supply chain management, first focus on product development. What product have to be developed? And to develop the product, we need inputs. For that, we'll go for procurement. Procurement is nothing but resource planning. To develop the product, we need some resources. Do careful resource planning. So first need is recognized. Resources have been bought. The resources are ready now. The next thing is manufacturing. One thing here. For the effective implementation of supply chain management, for effective manufacturing, company should follow a technique called just-in-time, Japanese inventory management tool. So if effectively supply chain have to be implemented, use a technique called just-in-time. It's a Japanese technique. This is nothing but minimum inventory. Don't have more inventory. The real just-in-time says, procure the raw material only at the time of production. If you procure the raw material only at the time of production, are you reducing your inventory? Do that. That will help you to save your cost. So in effective supply chain management, when manufacturing is taking place, can take the help of a technique called JIT. What is JIT? In a single statement, it says minimum lot size, minimum inventory. Procure the raw material only at the time of production. Okay, manufacturing is over. Next thing is distribution. All the channel partners should be available with your product. That's about distribution. And then in the needed places, you can go for outsourcing. You know the concept of outsourcing. But effective implementation of supply chain management says that don't just give the outsourcing of non-core activities. If needed, even core activities can be given for outsourcing. Generally, what companies do, non-core activities they will give outsourcing, core activities they will do on themselves. But effective SCM says, if needed, even core activities can be given for outsourcing. Yes, many companies do that. Even the core activities they will give for outsourcing. And then provide better customer services. Finally, you will check your improved performance. Simple steps. I said value chain analysis steps. Same thing are here. First, not all the points, but some points you can interconnect. First, product development. Get the raw material. Manufacture. Distribute them. Outsourcing have to be done. Until distribution, the point remains the same. Outsourcing has to be done after distribution. Then customer service and measuring your performance. That's about logistics and supply chain management. Meaning of SCM and the steps for effective implementation of SCM. Next functional area that we have is R&D. What do R&D people do in the company? Their responsibility is to innovate the product or to make necessary modifications in the existing product. Like these individuals are responsible for what? Developing a new product or improving the old products. Major key term. R&D people are responsible either for new innovation or to make modifications in the existing product. And they will perform such complicated tasks such as developing new technologies, and they will perform tasks such as adjusting the process as per the available raw materials. That's the point says adjusting the processes to local raw materials. Depending upon the availability of raw material, they will adjust the process. Adopting the process to local markets, and they will alter the products. This is a supportive point. But the main point that you have to write is the one which I have highlighted. Their major responsibility is to develop a new product or to modify the existing product. There are some strategies for which R&D involvement is must, like product development, market penetration, concentric diversification. All these strategies required more emphasis on R&D. There are some R&D policies that have to be maintained by R&D department. First one, R&D experts should emphasize product or process improvement. R&D people always focus on product development or process development. How well new innovation can be done, how well new processes can be adopted. Next, two types of researches are there. Stress basic research or applied research. Stress basic research, rigorously thinking and coming out with a new product. Applied research, someone already did, copy it, but innovatively. Stress basic research will make you R&D leader.
Applied research will make you R&D follower. That's what the point. Be R&D leader or R&D follower. Can we say Apple as R&D leader now? Every time they will come up with a new innovation. Xiaomi is follower, innovatively copying someone's innovation. Now Apple do stress basic research, Xiaomi do applied research. Next, your process can be robotics or manual, wish of the company, whether they can have the entire processes manually or robotic. If not, how much money you have to spend on R&D? High, average or low amount of money, depends on financial capability of the company, how much money they have to spend. High, average or low amount of money on R&D. Next, two options you have. Perform R&D within the firm, outsource R&D, will and wish of a company. If they are capable enough to maintain in-house R&D, they can, or else outsource R&D, depends on situation. Researchers, either you have university researcher or you may have private sector researcher. University researcher, the guy who holds highest degree in the field. Private researcher, he might not be having the degree, but he is having good amount of expertise. Which kind of researcher should be there in your R&D team? Your wish. These are R&D policies, we call them as. Three approaches, already two approaches I said. Who are R&D leaders? To be the first firm to introduce the new technology into the market. It requires a lot of investment, money. It's a riskier one because you are the one first time launching the technology into the market. The second one is follower or innovative imitator. Don't purely imitate it. Imitate it innovatively because he has taken copy and patent rights. If you copy, he will sue you. Imitate it but in a innovative way. Like that's what Xiaomi do. Apple have kept a fingerprint scan at the front side. Now they said, our technology is new. We have a fingerprint scan at back. Innovative imitator of a successful product. Leaders who introduce first time the technology into the market. Imitators, innovatively imitating the successful products. These are the two approaches that any company can follow. Next, low cost producer. What these people do? Mass producing the products that are recently introduced in the market and got success. There is a one product which is recently introduced in the market and it got success. Now what this company do? They will go into mass production. When they go for mass production, automatically what happened? Per unit cost will reduce. That will do. You can see here. Mass producing products is similar to but less expensive than the product recently introduced. Because what is the benefit of this? Imagine a product is got good success in the market. If market consists of more price sensitive buyers, what they'll be looking for? Let us get the same kind of product for low price. Now these companies will capture. Already market, the product is successful in the market. Now they are developing a successful product for low price. Look at the point that's what it says here. Like the situation that I have said now. When a product is accepted by the customer, price becomes increasingly important in buying decision. Once the product is accepted and becomes successful, if a customer have to buy it, the important decision depends upon the price. Now what these companies will do? Increasing the volume of production, they are reducing the price. Hence they will get more success. Sales will be increased. 3 R&D approaches. Leaders, followers, low cost producers. Then we have some decisions are here. If time permits, then check, or else you can ignore with this. The last functional area that we have with respect to this chapter is human resource management strategies. First, I will explain about the 4 functions that HR guys will do. Then I will talk about the strategic roles. This particular question. These 2 are important. For HR strategy, read both the concepts. Rest of the areas you can skip some of the concepts which I have ignored, but for HR both the concepts have to be focused on. Case studies chances are also there. The concept is practices that have a strong influence on employee competencies, which means the functions of HR department. So many functions are there for HR guy. HR people have to do recruitment and selection. They should do training. They should do performance appraisal. They should conduct management development programs. They should provide compensation to employees. welfare measures, exit interviews. So many functions are there. Among all the functions, we have been given only 4 functions. And these 4 functions also have been kept as, what is this question? Factors of human resource that have a strong influence on employee competencies, which means they are called as factors. The factors with respect to do HR that will have a strong influence on employee competencies. 4 factors we have. First one is recruitment and selection. The first thing the HR guy have to do in the company is recruitment and selection. What is the difference between these two terms? Both are same? Different? Because and is there. What is recruitment? What is selection? After selection, we recruit. Last time also we have given the same answer, but that was wrong. What was recruitment? There were from a very recent batch and giving the wrong answer. Last crash they are from. Recruitment and selection. What is recruitment? What is selection? Attracting is? That is recruitment. Selection is? Excellent. At least I have got answer from there. Recruitment and selection stands for, recruitment means attracting the talent pool. Whatever I am saying, it is there actually, but you don't know that that is what the answer is. I'll show you. Recruitment stands for attracting the talent pool. Selection stands for choosing the best from the talent pool. A company has given an advertisement in a newspaper saying that on so and so date interviews are going on. This is recruitment. By looking at the advertisement, you went to the office to attend the interview. So many aspirants like you have come, but the company have only selected few. Now choosing the best from the talent pool is called as a selection. Look at here. Identify, attract. These two will come into recruitment. Selecting the most is called as selection. HR guy, first he should go for recruitment. From the recruitment he should do selection. Recruitment stands for attracting the talent pool. Selection is choosing the best from the talent pool. Now once the selection happened, you should provide training. Training is nothing but imparting the skills so that they can improve their competencies. And then we have a term called appraisal of performance. Even after giving training, some of the employees are not performing their job well. So they might haven't learned effectively. Then what you should do? Again provide them training and coaching. This is the point says. Identify any performance deficiencies experienced by employees due to lack of competency. Such deficiencies once identified can be solved through counseling, coaching and training. HR will do this. This activity is called as appraisal of performance. And finally provide compensation. An employee motivatedly do work only when he have been provided with good compensation. Otherwise, he will choose the other company which gives him satisfactory compensation. That's why compensation is very important. Increase the competency of the workforce. When you give good compensation, this will increase the competency of the employees by providing good pay and package benefits. These are the 4 factors that will have strong influence on employee competencies. These 4 factors will relate to which area? HR. Recruitment and training, recruitment and selection, training, appraisal of performance and compensation. We have one more concept here in HR, talks about strategic roles of HR. That we will discuss post break. Okay. This concept we have. Human resource manager will play some strategic roles. Some interesting roles are there, we'll understand. Then we'll be left with 2 more chapters. In that, the next chapter, we have only 2 concepts to discuss. I will not talk about organization structures. I will talk about leadership and corporate culture. These 2 will talk. Then we'll go for the last chapter, implementation and control. So there, straight away we will begin with change, control, PPR and benchmark. 4 concepts in last chapter. The next 2 hours we'll spend on that. Clear? Good. Now we have 1 hour break. Relax. If you have any doubts, after 15 to 20 minutes, you can get me down. Now I am going for my break. I'll come back after 15 to 20 minutes. I'll grab my coffee and I'll come back. I'll be available in the staff room. Any of the queries if you have with respect to anything, You can come down. Clear? Done? Enjoy your break. We'll see after 1 hour. Ready for the last session? Nice. So it's good to know still all of you are carrying that energy, and good to see smiling faces. Otherwise, I was thinking that the last session I'll be seeing some weird faces. Sir, it is over. Kindly complete this and we'll go, sir. But I'm glad. Who? Yeah, I got it. So happy to see smiling and energetic faces even in the last session. It's a good thing that you should bring on your own. They won't provide that. They have only provided one thing. The next one you have to bring. Right, so shall we start? Yes. To finish up with this chapter, we have one concept left. HR we have started. Before we are going for a break, we have covered about the 4 factors with respect to HR: recruitment and selection, training, appraisal of performance, and compensation. In the organization, HR manager has to play some strategic roles so that the entire organization work effectively. This is what we call human resource manager can play some strategic roles. Let's understand the roles. The first role HR have to do is that providing purposeful direction. In the organization, HR deals with whom? Employees. Now it is his responsibility to lead all the employees towards a common direction. Who has set this common direction? Top level. Top level people have set a goal. Now it is the responsibility of the HR to lead all the people towards a direction. That's why we say HR's role is to provide purposeful direction. You can see the key term here: lead people and organization towards desired direction. Now this desired direction has been set by the top level people, and maintaining harmonious work environment. Like all the employees are working harmonious work environment and everybody is working towards achieving the goal. Next, building core competency. We already know what is core competency. What is core competency? Unique strengths that cannot be shared by others. Now, will employees contribute to develop these core competencies? Yes. If a company, like here core competency definition has been given, then it says that HR manager will play a key role to develop the core competency. How? Your company is having skilled employees like no other company in the market. Isn't it core competency for you? Now, who are bringing that skilled people into the company? HR. That's why HR's role is to build core competency. Not only that, HR helps to create. Now tell me, what are the 2 certain ways of gaining competitive advantage? One is to be low cost, trying to be unique. If companies successfully develop these 2 things, do they need skill manpower? That's what the point says. First, competitive advantage can be gained by cost leadership or by being unique. If these 2 things have to be completed effectively, this is putting these strategies into effect requires a highly committed and competent workforce to develop the product for low cost or trying to be unique. If these 2 things have to happen, then you need to have competent workforce. Now, who are bringing competent workforce into the company? HRs. That's why it says creating competitive advantage. Next, HRs will facilitate the change. What happened if a company does not adopt to change? They can't survive. HRs has to keep on put their efforts to promote the acceptance of change rather than maintaining what is status quo. Putting same level of efforts. Like I haven't used this term, we can use this for stability. Stability is status quo oriented strategy, which means you are maintaining same level of efforts. In expansion, we will challenge the status quo because we don't maintain the same level of effort in expansion. That's about facilitation of change. Next, managing workforce diversity. When you check a multinational company, you will have diversified workforce. Like workforce diversity can be observed in any company. What is this workforce diversity? Skilled people are there, unskilled people, semi-skilled people, Gender differentiation. Men and women are working. Young people will work. Old people will work. Now you can't deal with all of them in the same way. You can't deal with a skilled guy in the same way how you deal with an unskilled guy. Unskilled guy, even if you scold, he won't bother. You can't do it for a skilled guy. He will search for another company where he will be given respect. That's why different people have to be dealt in different way. The way how you deal with a man is different how you deal with a woman. To a guy, you can roughly a bit you can behave. Now you can't do that for a girl. So many sections are supportive for them. You are done. Some dangerous sections are there. Once they are applied, you are close. That's why be very careful about no. About now you got. Thank you for helping me out. So this is that's why for a HR guy this is a very challenging task. Diversified workforce, but all of them should work for a common goal. Everybody will not be thinking in the same way. You have to deal with different people in different way, but everybody is working for a common goal. That's why it says one point gives here. Yeah, it's a challenging task for HR. Managing a cognitively healthy work environment is a challenge for HR manager, even though there is workforce diversity. Workforce diversity can be in the form of male, female, young, old, educated, uneducated, skilled professionals, and so on. And maintaining a good, healthy work environment among all of them is a challenging task for HR. Next, empowerment of human resources. What is empowerment stands for? Letting the others to realize their own potentials is called as empowerment. Look, you have skills, but you are not identifying that you have skills. I am helping you to identify your skills. Then I am empowering you. Got empowerment meaning? Letting the others to realize their own potentials. You have a potential. You are not realizing it. I have provided you an opportunity to realize your own potential. Now what am I doing to you? Empowering. HR manager is empowering whom? Employees. So that employees can realize their own potential. That's what it says, empowerment of human resource. That's what the key term also said. Authorizing every member of society to take his own destiny, realizing their own potential. In the organization, HR is empowering all the employees so that employees can realize their own potential and work for their best. Next, development of works ethics and culture. HRs have to always maintain cohesiveness among the employees. Cohesiveness is togetherness, unification. Opposite to cohesiveness is conflict. It is not good to have more conflicts in the company. Rather, what should be there? There should be more cohesiveness should be there. So that is what HR should work for. These are strategic roles of HRs. So these are the 7 strategic roles. Are you clear with the roles? Yes. First one is direction have to be provided. Core competencies and competitive advantage. Anyways, you know about this both. And then HR should facilitate change. Along with that, workforce diversity have to be maintained. Empowerment of human resources have to be done. Ethics and culture. Like ethics and culture, some point says that creating an atmosphere of trust, encouraging creative ideas by people, all these things have to be done. So we are done with all the functional level strategies. Starting from so we are done with this chapter. Marketing, finance, production, R&D, logistics, SCM, HR. So corporate level strategies, business level strategies and functional level strategies have been completed. After the formation, actual process is implementation and control. But we have a 7th chapter, talks about 3 different concepts. Let's understand it. The title of the chapter is Organization and Strategic Leadership. In this chapter, we are going to discuss three concepts. You might be thinking, sir, why this chapter has been kept here? There is a meaning for that. The three concepts that we discuss in this chapter is with respect to the organization structures, leadership and culture. These three concepts we will discuss. Why are we discussing these three concepts? Because organization structures, leadership and corporate culture, these three elements will help for effective strategic execution. If organization have to effectively implement strategy, will leader plays a good role? Leadership is contributing. You should have good culture also. Good corporate culture also promote better strategic execution. In the same way, organization hierarchies also provide better strategic execution. In that, we will pay more attention on leadership and culture. Briefing of structures I will provide. Organization structures. Major organization structures that we have to focus are this. A simple you can avoid. Functional structure, divisional, SBU, matrix, network and hourglass. The question is, why are we discussing these organization structures? Remember one point. Whenever there is a change in the strategy, organizations have to change their structures. Remember this point. Whenever there is a change in the strategy, structure have to be changed. If I say strategy follows structure, strategy follows structure, structure follows strategy, which means whenever first priority is of strategy. As and when strategy changes in the organization, that leads to change in the structures. Previously, you might be following stability strategy. From stability, you went into expansion. That too, conglomerate diversification. You are entering into new industries. Then you should follow SBU structure. If you are following stability, it's okay to go for functional structure. Just remember the levels over there. That's enough. Like in functional structure, we have two levels. In functional structure, we have two levels, corporate level and functional level. Top level people will be sitting. Under them straight away we'll have functional managers. In divisional structure, three levels will be there. Top level, from here I can explain you, their points have not given. In divisional structure, we have this is corporate level, this is business level, and this is functional level. These three levels will come in this. It's to be there. Right. So that's about divisional. SBU. We have three levels in SBU. Top level, second level and third level. In top level, CEO is there. Second level, SBU heads. Third level, divisions relating to SBU. It depends on how you do business. From stability, you went into expansion. You have divisions, then go for divisional structure. You have entered into new industry, SBU structure. Now after this, we have another structure called matrix structure. Matrix structure. The key term for matrix structure, one subordinate will have two superiors. If any company deals with multiple projects, imagine you are working in a company which is following matrix structure. You are working here. Imagine you are a finance executive working here. Now you should report to two superiors. Who are they? On one axis, you are reporting to your functional head. Okay? Vertically, you are reporting to your functional head. Horizontally, you should report to your project manager. Hence, one subordinate will have two superiors. Vertical flow of authority and horizontal flow of authority. That's why it's a matrix structure. As you can see here, employee have two superiors. Vertically, functional manager. Horizontally, project manager. Next, we have something called network structure. What you have to understand about network structure? There is no structure for this. Network structure is called as non-hierarchical, non-structural organization. Why we are calling it as a non-structural organization? Large amount of the work given for outsourcing. The companies which follow network structure, they give 80% of the work is given for outsourcing. That's why this structure is called as non-hierarchical organization structure. And these structures will be changing like cobweb network. One of the student ones have drawn this cobweb. Don't do that. He bought final exam paper to him and said, sir, tell me why I haven't got the marks when I have written so well. He draw this cobweb. Don't do that. Only the outlines that I have said, it is enough to draw. Why it is called as cobweb-like network? Because these hierarchies will be keep on changing. Suppose if I have everything in one office, I have hierarchy. Then I will have a single structure and defined structure. But I am not doing work on my own. I am giving all my work for outsourcing. Then why should I have a clear hierarchy for me? My hierarchy will be keep on changing. That's what network structure is. They're called as virtual organizations, non-hierarchical cobweb-like networks, because company majoritarily depends on outsourcing, and they will not be located in a single building because they are not doing work from one place. Like I have office here, but my production is happening somewhere outsourced. R&D is happening somewhere. Marketing is done by somewhere. Then why should I have a building to do the work when large amount of work is given for outsourcing? That's what, not located in a single building. Result of which what? The place where I am sitting is referred to as a small headquarters, acting as a broker. Now I am electronically connected to some fully owned and partly owned subsidiaries. Now who are these fully owned, partly owned subsidiaries? To whomever I have given outsourcing. That's about network structure. This one is needed, hourglass structure. Plenty times it has been asked. You know, when we discuss about the hierarchy of the organization, we always discuss that in a pyramid shape, isn't it? Top level, middle level and lower level. Remember this? Why we discuss in this format? Because of the number of people who stays at there. Top level will have less number of people, middle and lower level, the scope will become larger. Now what hourglass structure says is that don't make any changes in top and lower level. Try to reduce the number of people at middle level. So hourglass structure talks about reducing the scope of middle management. That's where hourglass structure is like this. This you can draw in the exam if it comes. You can see broader top management is there, broader or lower level is there. But middle level what happened? Narrow. Functional level people scope has been reduced. If functional level scope reduced, who should do their work? Their work need to be replaced with technological tools. So, nutshell, 3 points. Hourglass structure, reducing the scope of middle management, replacing their work with technology, establishing direct connection between lower to top level. That's what hourglass structure. So, draw this outline and explain that. Meaning also says the same. Hourglass structure consists of 3 layers with this structure, which has a short and narrow middle level management. And moreover, information technology links top and bottom level, taking away many tasks performed by middle managers. So many companies prefer to follow this kind of hierarchy just to save the cost. By using technology, they will reduce the middle level people. Why are we discussing all these hierarchies here? Because whenever there is a change in the strategy, that will lead to change in the structure. That is promoting for better strategic implementation. After this, the next concept of this chapter also talks about the element that will support for better strategic execution. That is nothing but strategic leadership. In the strategic levels, can you tell me from where leadership will flow? Top level, corporate level people will be referred to as leaders. If strategy have to be implemented effectively, will leader contribution is required or not? Yes. That's why the first thing that we have to understand about roles that a leader plays in a company for better strategic execution. The concept of is leadership. We are understanding certain roles of a leader. Now these roles are in what sense? For a better strategic execution. These are general roles. If you want, some of the roles you write in any of the place if the question has been asked. But don't write only these roles as answer. We have some other roles which majorly we have to write. These are general points that a leader has to play in the company. Visionary, administrator, decision maker, crisis solver, spokesperson, like negotiator, motivator, arbitrator. Now probably Mr. Srivalli might be understanding this in a wrong way. This point he might be understanding in a wrong way, isn't it? What does the term says? He is thinking about IPL cheerleader. No. That, sir, leaders are dancing in the boardroom. CEO, leader should play as head cheerleader. No. What is the job of cheerleader? To bring energy in the organization. So he will energize the employees, motivator, he'll energizing. That's why he's called as head cheerleader. These are general rules. You better write the points that you remember, not needed to write all the points about this. But important element with respect to this is this. A strategic manager have 5 leadership roles to play in pushing for a good strategic execution. These 5 roles are important for us. Case study scenarios also sometime comes. They will give you the entire case study. In the case study somewhere they say so and so is acting as a leader. As a strategic manager, you suggest the leader what kind of roles he should follow. Then don't write the roles that are there in the above box. You can write, but the question straight away asking 5 leadership roles that a leader has to play for a better strategic execution. Let's understand these 5 roles now. First role. In the hierarchy, where do leaders stay? Top. Hence they stay at the top level. It is needed for them to closely monitor what is happening in the company. Okay, closely they have to monitor whatever the activities that are happening in the company. If any problem comes, immediately they should solve it, and they should remove the obstacles that are stopping for better strategic execution. You have to write these 5 roles as it is. Remember, don't generalize this. If the question is about strategic roles of leadership, as it is, you have to write these 5 roles. You can't generalize them. So let's understand. First one, staying on top of what is happening, closely monitoring the progress, solving issues, and eliminating obstacles in the path of good execution. This is the first role that a leader has to play. So staying at top, you remember, closely monitoring the progress. If any problem comes, he should eliminate the problem which is obstructing the company to reach the goals. That's about first role. Second role, promoting a culture of SCMPE Corps. SCMPE Corps stands for team spirit. A leader has to bring team spirit among the members of a company. Then only they will work for effective execution of strategies. That's what the second role says. Promoting a culture of SCMPE Corps. That's what it says. Energizing the organizational members so that to execute strategy in a competent manner, and they will perform at a high level also. Third role, keeping the firm responsive to changing condition. Major role of a leader. Whenever new opportunity comes into the market, immediately grab it. Change the company as per the environmental changes. The company should not be static towards the changes in the environment. That's the point says. Alert for new opportunities. Implement innovative ideas. Develop competencies and capabilities ahead of your rivals. That's about the third role. Keeping the company responsive to what? Changing conditions in the environment. It is the role of a leader. Next, it's very important to exercise ethical leadership. If leader himself is unethical, even though a successful companies will doom. It has been proven with so many scenarios that are there in front of us. Classic example. Because of the unethical practices of a leader, the companies have doomed. Company have doomed. One example. Classic example. Satyam, good. That is one of early IT companies in Indian market, which has taken the Indian IT into next level. What happened? The company, because of the unethical practices followed by a leader. Sahara One. When I used to watch cricket when I was a kid, the Indian jersey used to have Sahara One. I used to confuse that what is this Sahara One. Then I don't know it's a company which is endorsing the entire Indian cricket team. Very big company. You know the leader behind that company, Subhrata Roy. Have you heard this name, Subhrata Roy? Yeah. Unethical practices. One of a good airlines in India. Interested Airlines. So what happened? Because of unethical practices of a leader, It's gone. That's why leader's role is to follow ethical leadership. Now you might be, sir, some examples you have said. Does it mean that only these are unethical fellows, rest of the business people are so ethical that so there is a saying, dorikite donga, dorakapote. That is what happening here. As they have get caught, we are calling them as unethical. When rest of the people get caught, we will put them into that category. But here the point is, role of leader is to be ethical, to act as a model corporate citizen to others. And the last one, taking corrective actions to improve strategic execution and overall strategic performance. So these are 5 strategic roles. At least if you can't write it, the complete things, I have highlighted some few lines over there, they are needed. Let's sum up the 5 roles. First one, staying at the top, closely monitor the progress, identify problems, eliminate obstacles. Second one, promote a culture of speed decrops. Third one, keep the firm responsive to changing conditions. Fourth one, follow ethical leadership practices. Final role is take corrective actions whenever needed if something is happening wrong with the strategy. Roles. Not only roles, leader has to play some responsibilities. Again, these responsibilities also with respect to the effective strategic execution. Responsibilities are simple to understand. First one, leader has to take strategic decisions. He should formulate policies and action plan to implement those decisions. Leader first needs to ensure effective communication. Leader himself don't know what to do, then what he will communicate to the team members? First, he should have a third clarity. Whatever the goal that he has in his mind, he should clearly tell to their middle and lower level people. So communication is very important. Leader should ensure there should be proper communication. And leader's responsibility to manage human capital means employees. Choosing skilled people into the company is a skill. Some of the CEOs are very well known for this. So when they interview certain positions, they will take a lot of time. I have heard some of the top positions when they execute, they will interview for 3 to 4 hours. Because in the top position, you should have a skilled guy. Then the entire company will be, now it is the responsibility of a leader to bring that skilled guy into the company for crucial positions. Managing human capital talks about that's most critical of the strategic leaders' skills. Bringing the good talented human capital for the firm. And managing change in the organization, same thing we have discussed in the role also. In the role also we have discussed about this, managing change. And the leader should create strong. Now, what is corporate culture? The very next concept talks about it. Then you'll come to know what is culture is all about and how it is connected to leadership. And moreover, leaders should sustain high performance over time. Leader's responsibility is to improve the performance of a company over time so that it will be keep on growing. These are the responsibilities, roles and responsibilities. That too, with respect to what? Better strategic execution. That you have to understand. Now you look at the case study, what has been asked. If any case study comes, is it asking about roles and responsibilities? Accordingly, you provide the answer. And when you are answering the case studies, try to give a reference. Don't straight away jump to the answer. In the above case study, so and so is need to follow stability strategy. Then you write about stability strategy. Like at the end of the day, it's a case study. Without referring to the case study, you have started the heading stability strategy. Then the evaluator understand you have studied very well. But correlate to the case study. As per the above situation, so and so manager needs to follow stability strategy. Then go ahead with the answer. Connectivity is important while you are answering the case studies. Then there one more concept with respect to leadership. It's called as approaches to leadership styles, or you can remember it as a leadership styles. Now, leadership style doesn't mean what leader wear, how leader walk, style, not Rajinikanth style. It is nothing but how they do the work. Depending upon how a leader do the work, it has been divided into 2. Transformational leadership style and transactional leadership style. Transformational and transactional leadership style. These are leadership styles we can say, or approaches to leadership styles. Let's extract some key terms. Transformational leadership styles, key terms. They are called as charismatic leaders. Charisma. What does it mean? Those who have attended my sessions, they will be knowing. I'll be waiting for any of the student who will come up with this kind of thing, that they are done. So you might be knowing this, those who have attended. I just need an excuse for me. Then they are done. Right. But I hope you are enjoying that. No? Right. So transformational leadership style is nothing but the people who follow this leadership style, they are called as charismatic leaders. Now, charisma stands for an elegance. General scenario, charisma is glow, but we can't consider like that here. The leader who is having good glow on his face, who did facial and all these things. No, elegance in the personality. Like I can say, Abdul Kalam is a charismatic leader. Barack Obama is a charismatic leader. They have an elegance in their personality. So these leaders are highly motivated. The leader who follow transformational leadership style, charismatic leaders, highly motivated leaders, they set some strong goals to their followers. And moreover, this kind of leadership style is aptly needed if the company is in the beginning days or if the company is in the ending days. It's a new company, just now established. Have transformational leader in your company. Your company is in the beginning days, decline. You are in deep trouble. Even then also you need transformational leaders. This is about transformational leadership style. Look at the key terms. They use as charisma and enthusiasm to inspire the people. When this kind of leadership style is aptly suitable, beginning days of the industry or at the end of their life cycle, or the company is performing very poorly where they need a rapid change. They always offer excitement. They're very energetic people. They set some strong vision. And moreover, if you work with this kind of leaders, there will be a personal satisfaction. Intellectual stimulation, they always motivate you to think. These kind of leaders always pushes for innovative ideas. These are the basic requirements. Clear with the basic requirements? Charismatic leaders, highly motivated, set some strong goals, intellectual stimulation, personal satisfaction. Moreover, when this leadership style is suitable, beginning or ending days. And they always try to bring dramatic changes in the companies. Contrary to transformational leader, there is one other style called transactional leaders. Now I said they are charismatic leaders, highly motivated, lot of enthusiasm. These people are a bit of authoritative leaders. Transactional or authoritative leaders. They follow system. They follow rules and regulations. They will motivate only to the extent it is needed. They will motivate, not extensive motivation. If situation demands, they will motivate. If not, no. Moreover, these leaders will follow a strict criteria of carrot and stick approach. Nothing but, if you do work, you will get a carrot. If not, you will get a stick, punishment. Reward or punishment. If you are working, stay in the company, I will reward you. If not, I will punish you. The previous leadership style I have said, suitable under what conditions? This leadership style is suited in the settled environment, which is nothing but introduction, decline is over, growth and maturity. In that kind of situation, you need to have a transactional leadership style. Look at the point. They are more focused on designing systems and controlling organizations' activities. This is more needed in a settled environment, which is nothing but growing or matured industries. And they will use authority more. And they will offer such as pay and status. They will motivate, but their motivate is more formalized approach to motivation. Not extensive motivation like transformational leaders. Formalized motivation. They will set clear goals. And explicit rewards or penalties. Look at this. Explicit rewards or penalties for achievement and non-achievement. If you achieve goals, rewards. If not, penalty. Carrot and stick approach, we can call this as. That's about transactional leadership style. Roles of a leader for better strategic execution. Responsibilities of a leader for better strategic execution. Approaches to leadership styles. One more thing we have, like Entrepreneur and intrapreneur. In this also, here itself we'll discuss. It has given as a last concept, but it will be suggestible to understand along with leadership. Entrepreneurs and intrapreneurs. Who is an entrepreneur? Who is an entrepreneur? Who? Simple answer is right. The one who starts his own business. Elaborately, if I have to say, entrepreneur is the one who identifies opportunity in the environment, collect resources, and takes the risk of starting a business is called as entrepreneur. Generally, the one who starts the business. This is the technical meaning. Identifying opportunity, collecting the resources, taking the risk of starting a business. They are called as entrepreneurs. Those who establish startup companies, they are entrepreneurs. They are highly motivated, skilled, innovatively they will think. Intrapreneur. He haven't started the company. He is acting as an employee of a company, vested with so many responsibilities and reached to the top level of a company. They are also skilled people. They also have innovation. They'll also be highly motivated. Only difference is that they are employees of a company. In time being, they have reached to the top level. Who started Microsoft? Started. Bill Gates. He is entrepreneur. Who is running it now? Intrapreneur. He joined as an employee of a company and he has reached to the top level. Google founded by? Don't know? 24/7, everything is search in Google. You don't know who founded Google. Someone says there. Larry Page. He is entrepreneur. Who is running it now? Sundar Pichai. He is intrapreneur. Got the difference now? Like that. That's about entrepreneurship and intrapreneurship. The next concept that we have is corporate culture. Of course, a briefing I'll provide, and one of the two concepts we have to understand in corporate culture. First of all, what is culture? Sir, it is something which we don't have. Look at the definition. Culture stands for values, beliefs, traditions, principles, rituals is culture. What is corporate culture? Add corporate in front of all these things. That is what the meaning actually. You check with that. And corporate culture refers to companies, values, beliefs, business philosophy, principles, tradition, work climate, ways of operating an internal work environment. All these things put together is called as corporate culture. So this is a definition that you have to write about corporate culture. Every company will have their own values, beliefs, philosophies, principles, traditions they will have. Work climate, not summer, winter, monsoon. Internal organization, work climate, the relationship between superior and subordinate, how the work is happening, that is corporate culture refers to. This is a definition. And here it has not given, but I can say corporate culture is a one such element which will differentiate from a good company to a bad company. Because to call it as a good company, values you will check, beliefs you will check, work environment you will check. If all of them are running good, you can call it as a good company. Will all the companies have same kind of corporate culture? No. Every company will have their own way of doing things. That's what the last point says. An organization has its own embodied patterns of how to do things. They have their own beliefs and behavior, thought patterns and practices. All of them are called as corporate culture. For a company to call it as a good corporate culture, what elements will contribute? Where does the corporate culture come from? Some points have given. What values business practices? What values that the business speaks and practices? What kind of official policies that they follow? How company deals with stakeholders? The way how company deals with stakeholders, that also defines culture. You know about stakeholders. Next, traditions that the company follow. Supervisory practices. How your manager is supervising your work. Neither he should leave you by giving the work, nor he should harass you to do the work. Good amount of supervisory practices should be there. Employee attitude and behavior in the company, that also defines culture. Last point talks about 3 to 4 points. Peer pressure will talk about culture. Peer pressure. Peers means peers, colleagues who work along with you. And every company will have politics. The bigger the company, the greater the politics, they say. Organization politics also defines culture. Last point, chemistry and vibration that exist in the work environments. What have you understood with this point? Not the thing that you are thinking of. Culture talks about chemistry and vibration, which means that togetherness among the employees, work motivation among the employees. This will be more sophisticated words that we can use. Togetherness that exists among the employee, motivation of the work towards the employee towards the work. All these things will put together as corporate culture. That's the meaning of culture. Where does it come from? Next point is process of changing a problem culture. We'll understand this concept. Process of changing a problem culture. By this time you have to understand corporate culture will promote better strategic execution. For that there is a concept which I have skipped. LA or obstacle for better strategic execution. Right? If there is a perfect fit between strategy and culture, it is a LA. If there is a mismatch between strategy and culture, it is an obstacle. That you are aware of. Now the point is, in your organization, imagine there is a culture which is not promoting for better strategic execution. Now what you should do? Change the culture. That is called as, there the answer lies. If you carefully observe, you are changing. In your company you are changing. Changing a what? Problem culture. Now which one is problem culture? The culture which is not supporting for better strategic execution. Moreover, changing a culture is a difficult task. Because culture is something which is related to deep-seated values in our minds. You go to your so-called orthodox great-grandfather or grandmother. They're fully orthodox, imagine. So the grandparents, you go to them and tell them from tomorrow don't believe God. You look at how the consequences will be. You will have 2 stamps on your cheeks, both the sides. Is it possible for them to ask for this change? No ways. Because a value which is deep seated in their minds for such a long time, the culture that they are following. Now if you suddenly ask them to change the culture, they are not going to change. In the organization also, the culture that they are following, they are following for such a long time. Now if you suddenly ask them to change the culture, it might be difficult for them, but they have to change. Because the existing culture is not supporting for strategic execution. That's called as changing a problem culture. Let's understand 2 key terms. What is changing a problem culture stands for? To replace an unhealthy culture with a healthy culture. Now what is healthy and unhealthy culture? The culture which supports better strategic execution, which will not support. If it supports, it's a healthy culture. If it doesn't, now if it is not supporting, change it and introduce a new culture which is supportive. It's called as changing culture. And what else have to be done? Root out certain unwanted cultural obstacles and introduce new ones that are more strategy supportive. Remove some cultural obstacles. Whatever is stopping you to achieve your goal, remove it. In that place, come up with a new culture which is supporting for better strategic execution. When you do these 2 things, it's called as changing a problem culture. Once again, changing a problem culture stands for removing unhealthy cultures, replacing them with a healthy culture. Second point, root out unwanted cultural obstacles and introduce the new cultures which are more strategy supportive. It's not an overnight process to change the culture. Follow some steps. That's what it says. Steps in the process. In which process? Changing a problem culture. First, diagnose the areas. Diagnosing is nothing but identify. Identify the areas which are supportive and which are not supportive in your company. Once you have identified an area, you just talk to that respected people openly and forthrightly. You have diagnosed the entire organization. You have identified that in R&D department, the culture that has been followed, it is not supportive for better strategic execution. Now you need to change the culture in R&D. Once you have identified, you talk to them openly. You just say the R&D people that these are the changes that have to be brought. Talk to them openly and forthrightly. Like, once you said they are not going to change, because culture is something which is deep-seated value, we have said. Then the third step, what you have to do? Follow up. Check with them regularly. Are they changing or not? Are they modifying their cultures or not? And sometimes you have to revise policies and procedures also. In the definition of culture, I said policies also comes into culture. If culture is not good, which means that there is something wrong in the policy, then revise your policy so that cultural change you can witness. And make changes in incentive system so as to reward the desired cultural behavior. You said that all the employees of R&D department change to new culture, but some of them are not changing. Now what you did is that those who have changed, you are rewarding them. The employees who have quickly adopted the change, you are rewarding him. Then what will happen? Motivate the others. That is the next point actually says. Visibly praise and recognize people who display new cultural traits. 7th point, long story short, 7th point talks about any employee who is strongly associated with the old culture, remove, replace with the new employee who is ready to accept the new culture. When you study the entire point, that's what it says. And communicate the basic cultural change to all the employees. Tell the need of change. First, educate your employees so that they can know why the company is changing. Then they may accept to that. And finally, you can take the help of first line supervisors and union leaders. Sometimes employees may not listen to the management, but they will be listening to union leaders. Take the help of union leaders and try to bring the change that you want to bring. So, concept is changing a problem culture and steps for changing a problem culture. Clear with this concept? Definition of corporate culture, changing a problem culture. Of course, when you read, you will understand this. Like culture promotes better strategic execution, because when the culture is good, that will promote for better strategic execution. Just now I said LA or obstacles. It is neither an LA nor an obstacle. It depends on the conditions that we maintain. When there is a proper fit between strategy and culture, it is an LA. When there is a negligible fit between strategy and culture, it will be an obstacle. So we are done with this chapter. Entrepreneurship and intrapreneurship, I have already explained. So all these concepts are helping for what? Better strategic execution. That's why those concepts have embedded into this particular chapter. Organization structure, leadership and culture. So let's move to the last chapter that we have. What is the last chapter that we have? Implementation and control. This chapter will in this chapter, the concepts that we are going to discuss are differences between formation and implementation, change, control, BPR, benchmarking. 4. More attention we will pay on change, control, BPR, benchmarking. I will see what we can do with formation and implementation. The first concept actually talks about strategic formation and implementation. Here it talks about what is implementation is all about. Implementation is like you have done with the entire process. Visions you have set, strategies you have created. Now you are going for implementation of those strategies. So strategic implementation is a managerial exercise, it says. And these points you will understand when you read with the implementation. Activities in implementing the strategy. This also you can understand. Can we say there is a, yes, this one we will try to know. Strategic formation versus strategic implementation. With this matrix, I will take you to the differences. First, let's understand this. Strategic formation and strategic implementation. The concept talks about interrelationship between formation and implementation. To understand the interrelationship between formation and implementation, I will provide you 4 situations. These 4 situations will help us to understand the difference between formation and implementation. Situation 1. A particular company have created a good strategy, but implementation is not good. Okay, formation is good, implementation is not good. Now, under this condition, can they reach the goal? No. Then what has to be done now? Imagine you are in that situation where your company's formation is good, but implementation is not good. Here you can't reach your goal. Then what you are supposed to do? Implement it properly. Very good. It is saying like the kid is not going to school. What should I do? Send him to school. That's how your answer is. So the point is implementation is not good. Then what to be done? Implement it properly. Identify the reasons for ineffective implementation. Okay. First situation, formation is good and implementation is not good. Then identify the reasons for ineffective implementation. The reasons might be lack of support from top management, lack of availability of resources, lack of experience. These are some of the reasons why strategies cannot be implemented effectively. Check with one of the reason and address the reason, then your implementation will be good. Second scenario, opposite to the first one. Nothing but strategic formation is not good, implementation is good. Even the useless strategy employees are very effectively implementing. Now what to, will any result come? Any goals can be achieved if they do like this? Achieved. If it is yes, then you are saying that, sir, I will write a wrong answer with a neat handwriting. Will you pass? It is like that. It's a wrong answer, but very neatly. Of course, it happens. It might happen in your graduation, but not possible for your professional course. There it is possible. But now what has to be done? Formation is not good. Implementation is good. What to be done now? Reform the strategy. There is no problem with implementation. Third condition, both are good. Now this is the perfect condition where company will reach what they want to reach. Fourth condition, both are bad. This is the condition that the company should avoid. Now these 4 situations are helping us to know formation and implementation both are connected to one another. This is the concept talks about interrelationship between formation and implementation. The 4 situations that I have said now are these 4 squares. Let's talk about first square A. What is happening in square A? Strategic formation is sound, but whereas implementation is weak. That's what the situation. If company founds under this square, what they have to do? Identify the reasons for ineffective implementation. After square A, let's talk about formation is not good, but the implementation is good. Square D. Formation is flawed, implementation is excellent. So B is the ideal situation. Both are good. Company should avoid C. So these 4 situations are trying to explain us there is a relationship between formation and implementation. Anywhere if a case study come, draw this outline, write about the 4 squares. Okay, square B is the ideal situation. Square C will be company is not succeeding. It should avoid. This will help us to understand about the differences between formation and implementation. Formation deals with effectiveness. Implementation deals with efficiency. Do you have an idea of these 2 things, efficiency and effectiveness? Efficiency talks about doing the things right. Effectiveness talks about doing the right thing. I will take up quickly to the differences also. Formation is an intellectual process. Think. To form the strategies, we have to think. To implement, you don't need to think. He have already thought and created it. You just put into practice. That's why it is an operational process. For formation, you need good analytical skills. For implementation, you need leadership skills. Already the people who are at the top level have thought analytically and created a strategy. When it comes to implementation, good leader is needed so that the strategies can be implemented effectively. And formation requires coordination among top level because formation is done by the top level. For implementation, it requires coordination among middle and lower level. These are the differences for formation and implementation. From here, we have a concept called efficiency and effectiveness. Like here, efficiency is doing the things right, effectiveness is doing right thing. In the organization, efficiency deals with inputs and outputs, effectiveness deals with what is means and ends? End is goal, means is ways to reach the goal. When we prepare strategy, our strategy should be both efficiency and effective. This is related to short run because inputs and outputs, they are short run. If it is a goal, then it is a long run. And as it deals with inputs and outputs, within the firm, it will have impact. As it deals with goals, it talks about relationship with the external environment. Just now I said in formation and implementation, efficiency related to implementation, effectiveness related to formation. Same matrix come here. This is not a new matrix. Formation and implementation, same matrix. There formation and implementation. Here efficiency and effectiveness. 4 cells. Imagine if a company fall under cell 1. Their strategic formation is effective, implementation is efficient. Then they will thrive. They will achieve what they want to achieve. If the company falls under cell 3, their formation is effective, implementation is inefficient. Here at least they can survive. If they have to survive, they need to identify the reasons for ineffective implementation. Then they will survive. If the company is in cell 2, what is happening here? Formation is ineffective, implementation is a useless strategy. If you are following it for a longer period of time, you will die slowly. If both are not good, you will die quickly. Same thing I have said in formation and implementation. There we have discussed A, B, C, D cells. Here, thrive, die slowly, survive and die. Concept remains the same. That is formation and implementation. Here efficiency and effectiveness. This is the first concept. Well, let's understand the next concept of change. Strategic change is the concept. When do organization need to adopt the change? Whenever there is a change in the environment. You can't bring change as a surprise to the members of a company, isn't it? Moreover, if it is something related to culture, moreover, if it's something related to any of the values of the company, you can't change it quickly. And make sure the change should not be surprise. Practically also we have experienced this. Even though the change might be good, if it has been bought in a wrong way, the result was something different. We can consider that as an example. Demonetization. Change is good, might be, but the way that it has been bought is not good. So change cannot be as a surprise to the members of the organization. That's why change has to be bought in a systematic way. In the journey of bringing the change in a systematic way, 2 concepts. Steps to initiate strategic change, Kurt-Lewin change process. These 2 things we have to understand. So why are we studying about change? Don't bring change as a surprise. That's why it's a strategic change is a complex process, very difficult process. If you don't bring the change in a systematic way, resistance will come. Resistance means employees will reject your change. They won't accept it. Even though the change might be beneficial for them, they will not accept it. That's why change has to be brought in a systematic way. Let's understand steps to initiate strategic change. So there are 3 simple steps have been given which talks about the steps to initiate the strategic change. So let's understand the first step. Recognize the need for change. Before you bring the change, first you need to recognize the need. When you will understand that there is a need to bring the change in your company, when you will come to know? Whenever you study the environmental factors. A constant and regular monitoring of environmental factors will help you to diagnose the need for change. That's the point says. The first step is to diagnose the areas of present culture which are supportive and which are not. How to know which are supportive and which are not? This needs environmental scanning, internal and external. For your company, whether there is a need to go for change or not, that can be identified by studying the environmental factors. You can diagnose the areas which are supportive and which are not, and accordingly you can decide. First, need has been recognized. Once the need is recognized, immediately you should create shared vision to manage the change. Shared vision. Convince your employees. First, communicate your employees about change. Why you are adopting this change. What benefits that they get because of that change. So, you prepare your employees in a way that wholeheartedly they are accepting for the change. Now, what happens if you create shared vision? Then resistance won't come. In shared vision, what we are doing, psychologically we will impress the employee. Wholeheartedly he is trying to accept the change. Once he has wholeheartedly accepted the change, when you bring the change, resistance won't come. This can happen by means of convincing the employee. Look at that. Objectives of vision and objectives and vision of both individuals and organizations should coincide. Company's objective, employee's objective, both should be same. What senior manager should do? Consistently communicate the vision, not only to inform but also to overcome. Continuously tell your employees about change. Tell them the benefit of change. Why we are changing. When you convince them, then what will happen? Resistance won't come. That's about creating shared vision. Once you create the shared vision, the third step, institutionalize the change. This is nothing but an action stage. Whatever the change that you want to implement, now implement it. In this scenario, there is no scope that resistance will come. Why? Now resistance won't come. Why? In the previous step, already you have created a shared vision. Now there is no point of resistance. 3 simple steps. And moreover, when you are institutionalizing the change, one more thing that you have to do is that keep on observing to ensure that firm does not slip back into the old ways of thinking and doing things. Continuously monitor. Check whether company is again slipping back into the old ways or not. Overnight change will not come. Even after implementing all these things, it will take some time. That's why it says it takes time for the changed culture to prevail. These are the 3 steps in order to bring the change. What are the 3 steps? First one, how the need can be recognized by scanning the environment. Second step, among whom we are creating shared vision so that we can overcome resistance. Once shared vision is over, the third step is, this is nothing but an action stage. Keep on monitoring that company is not going to slip back into the old ways of doing things. These are the steps to initiate change. In strategic change, there is one more concept called Kurt-Lewin change process. Let's check with that. The concept is Kurt-Lewin change process. Even Kurt-Lewin also says the same thing, that strategic change is a complex process and change cannot be bring as a surprise to the members of the organization. For that, Kurt-Lewin have stated 3-step process. The 3 steps are unfreezing the situation, change to new situation, refreezing the situation. When the company follows these 3 steps, change will be a perfect one. Unfreezing. Anything new, if you have to start, fundamental criteria, existing thing have to be removed first. Considerably right. If a new thing has to come, first we need to remove the existing thing. Some people are understanding it very well. So, I think when we are discussing about this concept, we might have elaborately discussed. That's why you are understanding this. Unfreezing the situation talks about the same thing. If a company have to come up with a new change, remove the policy. Whatever the policies that you are following now, remove them. Remove your strategies. Remove your cultures, so that you can start from a clean slate. That's what unfreezing. So look at the key terms in this. Unfreezing stands for breaking down old attitudes, behaviors, customs and traditions. Whatever you are following now, remove them, so that you can start with a clean slate. Now removing everything that we are following at present is called as unfreezing. Look at the first point. As I was saying, change should not come as a surprise. So slowly first unfreeze. Tell them that we are removing whatever we are following now. Whatever the old cultures are there, we are removing the old cultures. That stands for unfreezing. Now how you can tell them? By making announcements, holding meetings and promoting the idea throughout the organization. You can tell all your employees that you are trying to break down all the existing things. Once unfreezing is over, second step is, now everything that we are following we have removed. Now I'm bringing slowly the new things that I want to bring. Change to new situation. When the company is changing to new situation, in Kurt-Lewin process, another guy, H.C. Kellman, have stated 3 methods. So don't get confused. Concept is Kurt-Lewin change process. In that, we are studying about the H.C. Kellman 3 steps. Now, why these 3 steps? That will help for changing to new situation. The 3 steps to change to new situation. First one is compliance. In order to make sure your employees are going to change to new situation, you can follow compliance. Compliance talks about strictly enforcing reward or punishment strategy. If the employee adopts to new, reward. If not, punish. Strict enforcement of reward or punishment. It's called as compliance. One more method. Identification. Psychologically impressing the employees. Identifying them with some given role models whose behavior they would like to adopt. Here manager is convincing employee by saying that if you work in this changed environment, you may become like your role model. So psychologically impressing the employee. Now employee might be thinking that yes, if I work in this changed environment, I may become like my role model. Psychologically impressing. This is called as identification. Psychologically impressing upon. Identifying themselves with some role models whose behavior they would like to adopt and wants to become like them. This is identification. Now, can we say identification is nothing but creating shared vision? Because psychologically impressing the employee. So definitely that is something like creating a shared vision. Next one is internalization. What has to be done here? Change the individual's thought process in order to adjust to new environment. Employee thought process we are changing. Previously, he might be having a good opinion about the previous cultures. Now we are telling that whatever previously you are believing is not true, whatever we are doing now will give us the more benefit. Like this, change the thought process. When you change the thought process of employee, he will quickly adopt to the change. Now, can we say even this also has shared vision? You're changing the thought process of employee. Previously he was not convinced. Now he is convinced. 3 steps. Now 3 methods for what? Changing to new situation. Stated by whom? Yes. Let's check it once. Compliance talks about strict enforcement of reward or punishment method. Identification talks about impressing the employees by giving them role models. Internalization talks about changing the thought process of the employee. Now slowly, once unfreezing is over, slowly you have changed to new situation. All the employees have adopted to the new change. Then finally go for refreezing. When you should do refreezing? When new becomes a normal way of life. where whatever the change that you want to bring, you have implemented in the company. Now you refreeze, which means bring new policies, new procedures, whatever you want to implement. 3 simple steps stated by Kurt Lewin to make change as an interesting thing. The 3 steps are unfreezing, change to new situation, refreezing. Change to new situation, HC Kelman, 3 things are compliance, identification and internalization. Steps to initiate the change, 3 things we have discussed. Identify the need of change, create a shared vision to manage change, institutionalize the change. We are done with strategic change. Next we have control. To understand the concept of control, just I'll give you a small outline here because everything is not needed to understand in this. The concept would be organizational control. There are 3 types of organizational controls. Okay. So they can be operational and then management and then strategic. So these 3 are organizational controls. We'll pay more attention on strategic controls. What is operational control is all about? Any kind of control that have to be assigned with respect to day-to-day operations. Production control, cost control, quality control, budgetary control, all these are operational controls, regularly happen. Production, cost, quality, budgetary, all these things happens on regular basis. Now that's why they are considered into operational control. Next we have management control. These controls are with respect to setting of goals. When the company is trying to set the goals, whatever the controls that they follow, it's called as management. So operational is day-to-day operations. Management is with respect to goal setting. The third one, this one we have to understand, which talks about strategic control. So now strategic control aims at 2 things. Now straight away I will take you to the strategic control. Strategic control deals with 2 things. First one, the strategy is being implemented as planned. You have created strategy in one way, but it is implemented in the other way. Will you get the result? No. Now strategic controls check that the strategy is implemented as I have planned, so that I can get the desired result. Second thing, results produced by the strategy are those of intended. Intended means expected. Am I getting my expected results or not? If you are not getting the expected results, can we say something wrong happened with the strategy? Strategic controls deals with 2 things. One, strategy is implemented as planned and we are getting the expected results or not. There are 4 types of strategic controls are there. This is important to know. They are premise control, strategic surveillance, special alert control and implementation control. Let's see under what condition these controls have been assigned. First one is premise control. Premises, assumptions. In most of the cases, in the organization, strategies have been prepared depending upon assumptions. Agree? Because we prepare strategy for future and we are not quite sure what is going to happen in the future. So we prepare strategies depending upon certain premises and assumptions. Now, will these assumptions will be same or over a period of time it will change? They will change. Now, what manager have to do? Validate the accuracy of the assumption. Whatever the assumptions that he has made, he should check whether they are properly happening or not. That is premise control. Look at the point. A strategy is formed based on certain assumptions and premises about environment, about future environmental changes. Depending on that, you have created a strategy. But over a period of time, these premises may change. What a strategic manager have to do? Continuously monitor the environment to verify the validity and accuracy of the premises on which the strategy has been built. Whatever the premises depending upon which you have built the strategy, check whether the premises will happen or not. Now checking that is called as a premise control. 2 points. Strategy is created depending upon premises. Second one, checking the accuracy of the premises by monitoring the environmental factors. That control is called as premise control. Next, strategic surveillance. Sometimes some strategies that we prepare will be unfocused. Why these strategies are unfocused? Because we have simply considered the general monitoring of various sources of information, which means that specifically I haven't did any research to get some information to prepare the strategy. Generally I have monitored the environment. Whatever the information that I have got from there, depending on that I have created a strategy. Now, is it really, will it give me good benefit? Because general monitoring of environment. Why I am saying unfocused? When I check with the last point, you will understand. Why we are calling this as unfocused? Because whatever the resources that I have depend upon is newspapers, magazines, meetings, conferences, discussions at clubs and parties, and all these things, from here I have got some information. Now, the information that I get from these resources is not focused and reliable. That's why it says that strategic surveillance is unfocused, because you did some general monitoring of various sources of information. Now, controlling the strategy which is created depending upon this information is called as strategic surveillance. Third one, special alert control. Sometimes unexpected events may trigger the organizations to control their strategies. Now, unexpected events, I will divide into certain categories. Natural disasters will come into unexpected events. And natural disasters is the one thing, and unexpected events will be the second thing. Natural disasters, nothing but floods, hurricanes, tornadoes, natural disasters. Unexpected events, terror attack, sudden announcement of a government policy, sudden merger of your competitors, unexpected. Those things won't happen expectedly. If any such kind of unexpected events happen, you should be ready with a strategy, or you should ready with a control. Now that control is called as a special alert control. Some examples I have given: terror attacks, mergers by your competitors, industrial disasters. This will allow you to re-trigger your strategy. Now, controlling the strategy under that situations is called as special alert control. 3 are over. Last one is implementation control. Nothing but while you're implementing the strategy, it says that managers implement the strategy by converting major plans into concrete actions. So from plan, when you're converting that into action, the control that have to be taken is called as implementation control. In implementation control, 2 forms are there: monitoring strategic thirst and milestone review. Not a new concept. Monitoring strategic thirst you already know, which I have said one of the point for strategic controls. Nothing but checking whether strategy is being implemented as planned. If you read, the same point will come. Helps the managers to determine whether the overall strategy is progressed as desired, or do you need to go for any readjustments. Milestone review is nothing but if you have to implement the strategy effectively, do you need resources? In milestone review, you have to check whether all the resource allocation has been done properly or not. These 2 things are going to be forms of implementation control. We are done with the concept of organizational control. Once again, organizational control, 3 types: operational, management, strategic. Operational controls are with respect to, management control is with respect to, strategic control deals with 2 questions. The strategy is being implemented as planned and it is producing the intended results or not. Four types of strategic controls are there. Premise control, strategic surveillance, special alert control, and implementation control. For unexpected events, special alert control. Unfocused one is surveillance. Depending upon the assumptions is premise control. Last two concepts to discuss. Strategy audit is with respect to control. It is also like control. The same thing says here. Look at strategy audit, what it says. Audit is an examination and evaluation of areas affected by operation of strategic management in the organization. When you are implementing the entire strategic management, check which areas have affected in the company. Now checking them is called as audit. Which areas have got affected with the implementation of the entire SM process. In audit, certain major questions have to be asked. How well the current strategy is working, and how well this will work for future. How well you can correlate this for present and future. Is there any immediate need to change? These are the major questions with respect to strategy audit. So meaning of audit talks about evaluation of areas that got affected by the SM process. When the management do strategy audit, these questions have to be addressed. Need for audit, you will understand, to achieve goals and objectives. Now, Richard Rumlett criteria for strategy audit. These people called Richard Rumlett have set a criteria. In the organization, if strategy audit has to be done, certain criteria has to be followed. Let me extract key terms. First one is consistency. Look, if I have to audit your performance, imagine I have to audit your performance. But the problem is that you don't have a standard goal to audit your performance. Every time you are changing your goal. Now, can I audit you now? Goal inconsistency will not help me to assess your performance. Got the point? In the same way, in the organization also, if strategy audit has to be done, there should not be goal inconsistency. That's the point says. A strategy should not present inconsistent goals and policies. So, Richard Rumlett criteria says have consistency with respect to goals. Then it will help for audit. Second criteria, consonance. When you prepare strategy, make sure your strategy is going to be adopted with respect to the environmental changes. That's the point says. Consonance refers to the need for strategies to examine sets of trends. Check with the trend in the market. And you are following the trend or not. If you follow the trends accordingly, audit will become easy. Trends are nothing but imagine a company which is following technology. If you quickly adopt the technology, audit will become easy. If not, I will follow old traditional method to do audit and to do the work, then audit will not be that successful. Richard Rumlett says consonance. Check whether your strategies are prepared depending upon the trends. Next, feasibility. You should check the availability of resources. If strategy audit have to be done effectively, then resource availability is very important. A strategy must neither overtax available resources nor create unsolvable sub-problems. Overtax available resources. You should not have excess resources. Neither your resources should create unsolvable sub-problems. That's why there should be a feasibility of resources. Apt resources will help us to do good audit. Finally, advantage. If your strategy is not helping you to create competitive advantage, then audit cannot be done effectively. So strategic advantage, competitive advantage can be gained by means of resources, skills and position. These three things will gain competitive advantage. Good resources, good skills, top position. Your strategy should witness these three. Otherwise audit can't be done. The four criteria considered as Richard Rumlett criteria. If you follow these four criteria in your strategy, then audit will become easy. Strategic audit becomes easy. Goal consistency. Strategy should adopt your trends. Availability of resources should be feasible. And finally, your strategy should help you to gain competitive advantage. This criteria is called as Richard Rumlett's criteria for strategy audit. Let's go for the last but one concept, business process re-engineering. plenty of concepts are there in BPR. Don't run towards reading everything. I'll tell you some of the things, only read them if you have a good time, or else even in that also you can curtail. First, to begin with, to know the meaning, let's start with the definition of business process re-engineering. Are you aware of this concept? What is business process re-engineering is all about? Whatever the process that has been followed by the company at present, they are replacing the process with a new process because the existing process have become outdated. The topic itself says business process has been re-engineered because the existing process that has been followed, it is not giving any result. It might have become outdated. Customer satisfaction is not provided with that. Then the suggestible thing is change your process. Like BPR and benchmarking are tools. When the company use these tools, that will help them to increase efficiency and effectiveness. BPR and benchmarking will help you to gain competitive advantage. So in that, BPR talks about major key term. BPR is all about radical redesign of workflows and processes. Radically redesigning workflows and processes. Look at the term. BPR refers to the analysis and redesign of workflows and processes within the company and between the companies. Whatever the process that you are following, redesign it. Why are you redesigning it? Existing process have become outdated. The existing process is not helping you to gain good customer satisfaction. That's why you have to re-engineer your existing process. One more key term. BPR talks about total deconstruction and rethinking of a business process in its entirely unconstrained by the existing structure and pattern. Two things. First, total deconstruct the existing process. Whatever the process that you are following now, remove it. Deconstruction. And the new process should be in completely unconstrained from the existing process. When you go for redesign, again, don't bring the same old process over there. Change it in a way that there should be no connection between the old process and new process. That's the point says. These are the 2 points which talks about meaning of BPR. Then next one, objectives not needed. Steps to implement BPR we'll discuss. Meaning of BPR understood? This, let's understand steps. This, when you read, you will understand objectives. What is the objective of BPR? When you re-engineer your process, you are saving time. Look, banks have re-engineered their process with respect to deposits and withdrawals, isn't it? Previously, physical format of withdrawal and deposit was there. They have re-engineered it. ATMs have come, internet banking have come, mobile banking have come. All these are re-engineering. With this, what happened? Time saved, cost saved, better output, quality has improved, and better responsiveness to the customer. These are the major objectives of BPR. So when you read, you will come to know non-value adding steps have to be removed, number of stages have to be reduced, workflow have to be improved by using IT, information technology. You can't imagine BPR without IT, isn't it? When a process has been re-engineered, who will play a crucial role? Information technology. These are the objectives. Check. Yes, steps. This is what. Steps in the implementation of business process re-engineering. After the definition, straight away you can understand the steps. Step 1. Determine objectives. Here, objectives are not targets. In this point, objectives are end results. Objectives are nothing but end results. What the company ultimately wants to achieve by implementing BPR. First, define that. Like whatever the new thing that you implement in your company, you might be having an end in your mind to achieve that you are doing this, right? So first define that objective. What the company wants to achieve by implementing BPR. Define that first. Once you define the objective, then study about customers and determine their needs. Ultimately, for whom you are re-engineering this process? To provide better customer services. Study the needs of a customer. When you re-engineer the process, how it is going to create value to your customers. So know the customers, know their utilities, understand their problems, understand buying tendencies, everything you should study about your customer. So first thing is that objectives have been determined. Then second step, you are studying about your customer. Then third step, study the existing process. If you have to re-engineer the process, first you should have full knowledge about the existing process. Then only you can plan what is working well and what is not working well. That's what the point says, that existing process should be analyzed carefully. Then you will come to know which processes are not working good. And accordingly, you can go for re-engineering of the process. After that, you have studied all your existing process. Then formulate a redesign process plan. This is the real crux of BPR. Redesign plan you are preparing. Like how to redesign, to what extent it should be redesigned. That's what it says. Formulation of a redesign plan is a real crux of BPR efforts, where you are preparing the entire redesign plan. Is it okay to prepare to get the result? Preparation is enough. After you prepare, what you should do? Any of the step in any of the SM process, the last step will talks about implementation and control. So here the last step says implement the redesign process. Whatever the process you have re-engineered, you should go for implementation. In this, one thing that you have to write is, it is the joint responsibility of the designers and management to implement the new process. Yours is the company. You have re-engineered a process. Now you will take the help of another company for re-engineering. That's what bank do. Visa, MasterCard, RuPay. Know about these companies? Now those companies have helped the banks to re-engineer a process called making the transactions with the help of a card, isn't it? The ATM withdrawal that we make, the transfer that we make with the cards, the payments that we make with the cards, all these are not processed by banks. These are processed by companies, Visa, MasterCard and RuPay. Now bank is working with these three companies, so these three types of firms, so that they can effectively re-engineer a process. That's the last point says. Joint responsibility of the designers and the management. 5 simple steps to implement BPR. First, objectives have set. Customers have been studied. Existing process have been studied. A redesign plan has prepared and implemented. While implementing, work along with the consultants. So collectively you can go for implementation of your BPR. Meaning of BPR, steps to implement BPR. There is one more concept, rational not needed. Role of IT in BPR. Yes, here we have role of IT in BPR. As just before I said, can you imagine the banking re-engineering without IT? Okay, whatever the re-engineering that we have witnessed now, simply let me talk about making a reservation for a movie ticket, booking a movie ticket. Look at the previous process. Early morning, open newspaper. In the district edition, there will be a column where the theaters, movies and the timings. Then go to theater. Stand in line if it is a new movie. You have to sit in a seat given by that guy. Requirements can be asked. Then people used to ask requirements. Lengthy process. So if it's a new movie, people used to go in the morning and standing in the line to buy the ticket. Now process re-engineered or not? Happily sitting in home. Easily you will know which theater is there. Without hesitation you can choose the seats. Whether this process re-engineering is possible without technology? Any process re-engineering you check, technology plays a crucial role. So that's what the point says, role of IT in BPR. Let's have a look how this is helping. This fourth point will be the key term for this. A re-engineered business process characterized by IT. You have re-engineered a business process with the help of IT that helps in speed, accuracy, adaptability, integration of data and service point, and moreover, meeting the customer needs and expectations quickly and adequately, thereby providing high level of customer satisfaction. All this will happen if you use IT in BPR. Even fifth point also you can add. With the help of tools of IT, organization can modify their processes to make them automatic, simpler, time saving. You are making the process automatic, you are making the process simple, and you are saving the time. Thus, it is providing value in three areas: efficiency, effectiveness, innovation. These three benefits companies will get when they re-engineer the process with the help of IT. Efficiency by means of productivity. Effectiveness is with respect to management. Innovation is with respect to products and services. Role of IT in BPR. 3 points, sir. Fourth, fifth, and sixth points you have to write. Rest of the points are supportive. Rest of the points are supportive. Like this kind of points you pay more attention. Information technology is playing a significant role in changing the business process. Now you will write this and you won't write fourth, fifth points. But the core concept remains in fourth and fifth points, which talks about the role of IT in BPR. Clear with this? Problems in BPR not needed. That's it. Even though plenty of concepts are there, at this point of time, I request you to focus on definition of BPR, steps to implement BPR, role of IT in BPR. Like we have rational also there. If time permits, then go with that, or else these three concepts, first you have to pay more attention on. One more concept is left. Thank you for proving again. I think in classes also I have said this. Our Indians have a good habit called premature evacuation. This we see in trains. At the platform has to come, this guy will stand at the door first because he want to get down first. I don't know what satisfaction they get. Even before the platform comes, he will be taking up all the luggage and standing. And the guy who is standing out there, he wants to come in first. Have you seen this? When I was traveling through trains, I have thought that this happens only in trains. Later on, I have realized it happens in flights also. Ultimately, an Indian is an Indian when he travels either flight or train. Later on, I have realized it. Flight also same. The moment the flight lands on the runway, still the seat belt identification haven't off. So far, the air hostess haven't made announcement to unfasten your seat belt. The moment it touches the land, there will be some category of people. They will take the belt and they will take the luggage and they will stand. Some people will stand in line. They want to get down first. And these are the people again who will be waiting at the luggage terminal. I felt like that when you are clapping. Still, one concept is there. Let's finish up with this. The concept is benchmarking. Now, what is this benchmarking? Very easily we can understand this concept. When I say cricket, God of cricket is? Thank God you did not said. Okay. When I say running, athletics, 100 and 200 meters, world champion, Usain Bolt. Now, when I say certain things, why those people names have come in your mind? Because they have set a standard. They have set a standard against which we are comparing ourselves with them. A new company have started, mobile manufacturing company in India. If they have to check their performance, they will always keep themselves as a standard of Apple. They have set a standard in mobile sector. They are known for innovation. Benchmarking. General dictionary meaning of benchmarking says setting a highest standard. Now for that, if you have to connect with the companies, for companies, what is benchmarking? Setting a highest standard in the best industry practices against which things can be compared and measured. We are comparing. Obviously, compare with the guy who has set a benchmark, not with the guy who haven't. That is benchmarking stands for. You as a company, you are comparing with the guy who has already set a benchmarking. But what do? We compare with the guy who is performing worse than us. This is what you do. When a result comes, you go to your father. You did not say that you have failed. You said that this attempt so many people have failed. This is how you start. You are comparing with the people, those who have already failed. No, that is not benchmark. Always set a standard which is high, against which things can be compared. Look at the key terms. Dictionary defines benchmarking as a standard or a point of reference against which things may be compared and which something can be measured and judged. You are measuring and you are judging your performance depending upon the one who has set a benchmark. Yes. And moreover, this is the process of identifying and learning from best industry practices. I forgot to ask you this. Will BPR help you to gain competitive advantage? Yes, because your process is so effectively re-engineered better than your competitor, then you will get competitive advantage. Will benchmarking help you to gain competitive advantage? You have set a standard like no other company have set in the market, helping you to gain competitive advantage or not? Look at the point it says. It is a process of continuous improvement in search of competitive advantage. Some major key terms have helped you out. Okay, a standard or a point of reference against which things can be measured and compared. It is learning from the best industry practices. This will help you to, it is nothing but a continuous improvement in search of competitive advantage. Benchmarking involves 3 simple steps. First, you compare your performance with the other, nothing but competitor. Now that competitor should already have to set a benchmark. When you compare your performance with the guy who have set a benchmark, do you identify the performance gap? Like he might be, Usain Bolt might have completed 100 meters in 8 seconds. Now you are comparing your performance with Usain Bolt. Now you did in 12 seconds. Performance gap is there. First step is comparing. Second step to identify the gap. Third step, take novel measures to fill the gap. In benchmarking process, these 3 steps are important. Look, first one is comparing. Then identify gaps. Then find out some unique methods. Why these unique methods are? To fill the gaps. 3 things with respect to benchmarking. Okay. So clear with the point? Even in the benchmarking can be implemented in different areas. In cost, you can set benchmark. Companies will set benchmark with respect to product development, innovation. Like Apple kind of companies have set benchmarking in innovation. Some companies will set benchmark in distribution. Even in distribution also, benchmarking can set. Next, you can set benchmarking with respect to consumer services, right? So, if it is in the neck, it will give you more elegance. If it is in the neck, it will give you more elegance from there. Someone's bell is ringing. కొంచెం లేట్గా అర్థమైతే నేను చెప్పే విషయాలు. Next. Right. Next one is plant utilization levels. You can set a benchmark with respect to plant utilization levels also. Next one, you can set benchmarking with respect to human resource also. In manpower also you can set benchmark. This has been done by Microsoft. They say that most talented workforce will work with Microsoft. If any company have to compare with the talented workforce, they will compare with Microsoft. They have set benchmark with respect to manpower. Different areas benchmarking can be set. Now there are some steps to set benchmark. The concept is steps in the process of benchmarking. The first step is identify the need for benchmarking. When you can identify the need, when you compare your performance with the others. And moreover, when you identify the need for benchmarking, you should check the realistic opportunities for improvement. You might have set your target with a good company which has set benchmarking. You check realistically, will it having opportunities for you to grow or not? That's the first step, identifying the need. Once you identify the need, second step, clearly understand existing business processes. How you can do this? Visit the plant, send some questionnaire to your employees. From there, you will get some information about your existing processes that you are following. That's what it says. Obtain information and data on the firm's actual performance. This can be done by using methods like interviews, site visits, and filling questionnaires. Then you will have information about your business process. Now, it is not suggestible that as a company, you will try to set benchmark in all the areas. Previously, I said some areas. No company will set benchmark in all the areas. Among the processes that you have, you should select one process where you can set benchmark. That's the point says. Identify best processes. You have studied all the processes in the previous steps. From them you are identifying a best process. It can be within the same organization or external to the firm. Once you identify a process, now this process you are comparing with whom? Competitor. Compare own processes and performance with that of others. Others means competitors. Whoever have already set a benchmarking. And whatever the comparisons that you are making, make such comparisons meaningful and credible. Today morning you have started running. You want to become fit. First day in your entire lifetime you haven't run. Today you have started running. After running you are cross-checking. How I am compared with Usain Bolt? Let me check. What kind of comparison is that? Wrong comparison. In benchmark, do comparisons which are more meaningful and credible. If you are already an athlete who have given some participated in activities, then you compare with Usain Bolt. Make the comparisons meaningful and credible. Then your benchmarking will be successful. And then once you have compared your performance with the others, you will identify performance gaps. Then prepare a report and implement the steps necessary to close the performance gap. So you have compared, identify the gap, now prepare a report to fill the gap. Once you have prepared a report to fill the gap, while you are implementing it, go for evaluation. What you do in evaluation? Evaluate the results of benchmarking. For what purpose you have implemented the benchmarking? Are you getting those improvements or not? Vice versa, is benchmarking is helping you to achieve objectives or not? Is benchmarking is a one-time process? For a company, once you have set a benchmark, that is done for the entire life of your company? No, that's the last point says. Review, evaluate, reset the benchmark periodically in the changing conditions. When you set a benchmark, other competitor may set another benchmark. Then again you have to reset your benchmarking. So the process of benchmarking is a continuous process. Done. So the running of marathon is over. So we have covered most of the concepts and hoping so that this session might have helped you to brush up your the fundamental concepts that you have forgot long back. Any quick doubts that I can address for? Yes? Any quick doubts if you have so? Yes? No doubts? Clear? Done. Yes, examination? Tips. Thank God you did not ask question paper. Throughout the exam, I was providing you tips only. Presentation tips I have provided. How to write the answer. And you check with your preparation. Like what amount of portion that you have covered, that have to be considered. Presentation is the first thing in theory. Focus on presentation and try to attempt the complete paper It doesn't mean that you are writing something else apart from the answer. Attempted for AS and SM, attempted for 100 marks. And make sure you are evaluating the time so properly between these two papers, AS and SM. One paper, you should study two subjects, two different subjects. Then systematically allocate time. That happens when you write more exams. For SM, scenario is case study. Pay more attention on case study based. EAS also nowadays, we are observing case study scenarios. So cover most of the things with respect to do case study scenarios. Conceptual clarity is must. Key terms I have said from the beginning. Make sure at least 60-40, 60% of key terms has to be there. 40% try to generalize. That's the best way to shine over there. So anything else that I can help you out? Thank you very much. So it was a wonderful day. Iste తీసుకుంటా. Thank you and wishing you the same. So I'm glad to see even at the end also all of you are very active even in the last session. So only because all of you are very active, we could be able to, without any disturbance, or I did not felt like that you are exhausted. That has made me to be more active throughout the session. So with this, I'll take leave. It's been a great day. It's been a great session. I wish you all the best for your examination. Don't waste your time. Thank you.